gold is precious, and it's a fundamental metal in any construction-led, and definitely we're going to see that. And I think the world is going to be short of copper. So I don't believe that Mr. Trump and any policy introduced will impact the copper equation in the medium to long term. We're going to have lots of interference in copper in that period of projected oversupply before that demand equation kicks in, and I think that will be funded by everyone waiting to see what the government in the United States will be. And we've still got China on the other side, producing lots of metal, putting it into the market, but on the back or on the basis of a
in direct terms of the rise in gold prices. Is it government gold buying? Is it central banks around the world? I mean, you said something to the extent of, it's a hedge against economic uncertainty globally. Who are your biggest actual buyers?
The biggest are the central banks de-dollarizing their reserves, so shifting some of their reserves into gold, and we've seen that going on for a while. What's been interesting up until 2 months ago is the absence of investment into the ETFs, and that's really the way the Western investors invest in gold. And then you've got the big owners of treasuries, China and Japan to a lesser extent, and we've seen all those holders of treasury bonds lighting up on US dollars, and a lot of that goes back into gold. And then you've got all the other drivers as far as overall risk. And one of the biggest risks that people haven't really focused on is the budget deficits we see across the Western economy. All right, so de-dollarization and big budget deficits. Maybe things are great to get some intel from you. Thanks so much for joining us, Mark Briscoe.
This is my life. I know Fido come from the desk.
And we continue to see equity futures gain in terms of a reaction, day two, to the Trump victory. More market coverage ahead. This is Bloomberg.
This is what is happening in good. I see what is happening in good.
Morning, this is Bloomberg Daybreak News on Mackenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Power. This is Bloomberg.
Quick check here on futures. We continue to see futures gain. S&P futures up 0.3%. NASDAQ futures up 0.5%. Shanali, after yesterday's massive gain in the Russ, 5.8%.
We want to make sure that we're that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo Pet Products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? We so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'd be thinking about General Mills as a food company where we treat all the members of the family like family.
Humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against pets, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
There is this real momentum from Wall Street.
We're basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Welcome back to Bloomberg Open Interest. We have just 20 seconds to go until the opening bell on basically day 2 of Trump 2.0. In terms of futures, we do see gains again after the big gains in the cash trade we saw yesterday. S&P futures up 0.3%. NASDAQ futures doing a little bit better. We have the Russell 2000 futures down, but yesterday in the cash trade, the Russell 2000 was up 8%, which is huge. As we have been talking about. All right, down the New York Stock Exchange, we see Liz Clayman there, as well as people who are building homes for heroes, I guess. I think VP of Lowe's, is on that board, and it's a charity organization. Down at the NASDAQ, Okta has a pretty cool contest where they pick the best software as a service, like startup. And so you've got a bunch of kids down there who are probably going to be super gazillionaires someday. In terms of the major averages, we have likely gains here. This is a cash trade behind me, no longer futures, and it looks similar, right? Up 1/3% on the S&P 500, NASDAQ 100 up 0.6%, and the Russell 2000 a little bit of a give back. There are some individual stocks that you're going to want to keep an eye on today, and I feel like chips really is the thread that we can pull out of the group. Because Qualcomm gave a positive outlook yesterday, the phone business seems to be going well. You still need chips for phones, right? And Qualcomm stock is up 3.6%. ARM Holdings, on the other hand, bummed people out, warning that AI potential could be overshadowed by its close ties to the smartphone market. ARM Holdings, the chip designer, they're down 2.2%. Charlie, what are you watching?
Interesting to see things go two ways. I am looking here at Lyft, just soaring here, reporting a record number of trips for the most recent quarter. The company is signaling its plan to attract more commuters, and the plan is working. We're going to speak with the CEO at 10:30 a.m. Eastern. Lyft now up almost 23%. Also taking a look here at DJT, taking a turn lower after surging yesterday on Trump's victory. Remember, though, the stock has risen 105% this year as of yesterday's close. Now you're down almost 13%. You are off the highs of this year. We will keep an eye on that. We're going to take a closer look at election-related movers with Bloomberg's Abigail Doolittle.
Yeah, well, absolutely, Shonali. This is really pretty incredible. I don't have to tell anybody about yesterday's risk rally. It was stunning to see the gains that we saw for stocks right across the board. In fact, yesterday's gains were better for many of the markets that we watched than when President-elect Trump won in 2016. For instance, the S&P 500 well above the 1.1% gain back in 2016. The Russell 2000, Bitcoin up 10%. And I don't think that Bitcoin was a part of the narrative at that time for President-elect Trump and his administration. But the dollar, it's really interesting, I'm sorry, what's that?
He was against it back then.
Well, he's had a major turnaround, yes. And his now support really seems to be helping out Bitcoin, being up 10%. And that dollar about an even gain yesterday, the best day since 2020, and then the next high had been that 2016. And then the 30-year yield, I think that yield bonds really telling us that a Trump administration spending, well, it could cause those yields to go higher. Let's put yesterday's gain into perspective of not just the prior time when he won in 2016, but all presidential elections. And we're going to see it's the biggest gain ever, up 2.58% for that S&P 500. The next best up 2.2% when President Biden won back in 2020. And then you can see actually lots of election day losses the day after. But the point is, yesterday, that is the best post-election day gain ever. And then finally, Shonali, you were just looking at DJT. Let's take a look at the Trump trade after the massive move higher yesterday. Yes, DJT giving some of it back off of the low, still up more than 200%. Coinbase giving some of those gains back down 2.3%. Bitcoin. And then yesterday's big winner, and Shonali, this is probably one that you had your eye on, that KBW Bank Index up yesterday, 10.7%. The expectation of less regulation, the best day since 2020. Well, now some of those gains are being given back.
Yeah, I think some of this is fascinating. Shonali, we were talking about when there's a huge move up, you can expect to move down, or vice versa. DJT, which is already kind of meme stockish in its own way. At one point yesterday, it was up 35%. Then it closed only up 6% and has now erased all of those gains and more today.
Well, I think some of these trades, think banks, for example, you look at the rise in longer-term rates and you hear about whether that will really help the regional banks in particular or not. Cross currents that investors are playing with here.
Yeah, or if it's going to help the small caps that rallied so hard. In fact, I'm going to start our interview with Abby Joseph Cohen on that question. Shonali, let's bring in Columbia Business School professor and retired Goldman Sachs partner, Abby Joseph Cohen. We're pleased to have you on the program. Thanks so much for joining us. Yesterday was fascinating in so many ways, but one of the, I think, main threads I pulled out, at least of the market reaction, was that we had this huge rally in stock. As our Abigail just pointed out, it was the biggest post-election rally that we've ever seen. But small caps especially outperformed. At the same time, we had a giant sell-off in bonds, pushing yields on the 10-year to almost 450. The 30-year sold off more than it has since 2016. Now, those two things can't hold, right? We can't have this gain in small cap stocks and higher rates, because those are the companies that need financing the most.
Well, Matt and Shonali, first of all, thank you for giving me the opportunity to be here with you today. Yesterday was truly an extraordinary day, and Matt, I think you've laid out some of what has been referred to as those cross currents. Let's remember that one day does not a market make. Obviously, it was very exciting for traders. It was a very interesting day in that regard. But let's think a little bit more long term. Maybe another week or two, for example. But your specific question on small cap and mid cap is really quite interesting. Yes, all of the things being equal, higher interest rates, which is clearly what the bond market was telling us yesterday about the direction of rates, higher interest rates, higher cost of capital, a problem for small and mid-sized companies that tend to be reliant on debt. On the other hand, these stocks offer very good relative value vis-a-vis the large cap names, especially the mega cap names. Now, the mega cap names and some of the others are very cash rich, and they don't need to go to the capital markets to finance themselves. The small and mid-sized companies do, but I think what investors are looking at is the relative opportunity where PE ratios, for example, price to sales ratios, are dramatically lower for these smaller companies than for the larger companies.
You know, to that end, you look at the move in longer term interest rates, it's significant. And at what point does that start to catch up? The expectation here is that next year you might see what you saw in the first year of the Trump term, you know, the last Trump term rather, where you had kind of muted volatility, but then volatility started to pick up. Will the bond market start to eat into the stock market's calm?
Yeah, well, let's back up a little bit and recognize that the movement up in mid-range and long-term interest rates began a few weeks ago. And part of that, I believe, was a belated recognition that interest rates had moved too low. Not because inflation is out of control at this point, but rather because the economy is continuing to grow. And we're looking at a yield curve that was incredibly flat. One of the things to keep in mind is that as the Fed thinks about its decision today, it will be impacting only the Fed funds rate, right? Only the very shortest end of the yield curve. Those intermediate long yields have been moving higher. And as you point out, as they do, that creates, all of the things being equal, an obstacle for valuation. However, the U.S. economy shows no sign of recession at this point. The economy is growing well enough that corporate profits look quite good. The guidance that companies have been giving for 2025 is positive. So the valuation responds to several different things. And I believe right now investors are looking at the prospect for a long, sustained period of economic growth and corporate profits continuing to increase.
You know, I referenced earlier Torsten's Slack note. Out of Apollo, Torsten sends amazing tidbits every day that are super interesting. A couple days ago, he pointed out that the top 10 stocks in the S&P 500 have an average valuation of 50, a PE of 50, which is aggressive, to say the least. You talked last time you were on with us about concentration risk, and I think it's only gotten worse since we spoke. How concerned are you going forward? Or have you maybe changed your take on these big companies with deep moats and massive capex?
You know, so much has already been said about concentration risk. I'll be brief, which basically is the following, and that is I'm pleased to see that market breadth has been broadening. That's something that's good news for investors. It's good news for the underlying companies. And I think it's also good for the ultimate stability of the equity market. But let's go back to the point about inflation. Will it become dramatically more problematic? And therefore, will interest rates rise far more than investors are now expecting? I always like to think about risks, both positive risks and negative risks. And one of those negative risks for me right now would be much higher inflation and rates than people are now thinking about. Now, there's a very big difference between what is said during a campaign and what actually becomes policy. But we all know that there are a number of things that could be problematic with regard to the inflation outlook. Tariffs, of course, would be one of those things that could directly harm a consumer's pocketbook. We also know that a fiscal policy that focuses in on increasing demand but does nothing about enhancing supply could be inflationary. Changes, for example, to the Affordable Care Act could lead to higher healthcare expenditures, as would the elimination of some aspects of the IRA, which has been keeping pharmaceutical prices down. On a long-term basis, one of the inflation concerns I have is not addressing climate change properly. Just take a look at the damage today from California wildfires. It's going to be very expensive to contain those fires, to rebuild, and of course, insurance expenditures. Those premiums are going to go up in those areas, as they already have in areas that have been devastated by floods, such as Florida and other southern states. And so I think we need to be thinking not just short term about inflation, which, by the way, is under good control, but it's the intermediate and long-term view as well. Fortunately, the new administration is starting with a pretty good slate, pretty good starting plan. The economy is doing well. Core inflation is under 2%. The one area of concern for inflation is housing costs.
Abby, I really want to hone in just on one thing. We have about a minute left here and really want to get your view on the tariff policy in particular. I know there's a lot of uncertainty, but how should investors prepare for it?
The tariff policy, to me, could be critical. Now, there are some sensible applications of tariffs even in the 21st century. So, for example, if another country is actively dumping goods, then that is an appropriate use situation where a tariff could be used. But an across-the-board tariff is inflationary. It also holds down demand, and the impact is felt not just in the United States, but also among our trade partners. I'd be particularly concerned about our friendly trade partners in Europe, who may see not so much inflation, but a diminution of economic growth. And so many of those countries are already on the verge of recession. We also need to think about the impact here in North America. Our biggest trade partners are Mexico and Canada. And a lot of the trade that we see is actually U.S. companies going back and forth over the border, handling different parts of the production process where they think it makes the most sense. And so an across-the-board tariff could, in fact, be very problematic.
Abby, we thank you so very much for joining us today. Of course, a lot to digest in these markets as the country changes. Abby Joseph Cohen, we thank you so much for your time, formerly of Goldman Sachs, now at Columbia University. Now, coming up, we're going to switch gears. We're going to talk about chip stocks as the slow recovery in the smartphone market mints winners and losers. The stock's up more than 1.6%. We'll talk more about it next. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community. When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are thriving. Wall Street, Main Street, the C-suite, and beyond.
Companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge.
Get the inside track on what's buzzing in markets
with the players who are shaping the.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
As we spend some time here on the broader presidential race,
Let's focus in on European politics.
Makes you wonder how politics might play out.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We're seeing moves in chip stocks on the heels of earnings. We're looking at Qualcomm giving a bullish sales forecast driven by signs of a rebound in the smartphone market. But on the other hand, ARM gave a disappointing sales outlook, also citing recovery in the smartphone market, but perhaps find not enough. We're going to look more at what's under the hood with Bloomberg Technology co-host Ed Ludlow. Parse through the noise for us.
Sure. Yeah, I mean, it was a mixed bag, a mixed signal. You know, ARM has really turned a corner. The stock's now up 2%, right, as we just showed. It had been lower both in post-market last night and pre-market this morning. And they both occupy the smartphone space, right? Qualcomm is the biggest seller of the processors themselves, and ARM provides the blueprints and standards that those processors are based on. Qualcomm's outlook signaled a much bigger recovery in the smartphone market, though overall shipment growth of 5%. ARM was a more modest forecast. But what they both agree on is that buyers, particularly in markets like China, are going to the high end of the smartphone market. And so even if you're selling fewer units or the growth in units is more modest, the revenue is higher because of the value of those handsets that are being bought.
So ARM down, though, and Qualcomm up, sort of around the same theme, Ed. How do you sort those two out?
Yeah, I mean, ARM has done astonishingly well as a stock since its IPO. That's, of course, a factor. Qualcomm, to its credit, is a much more diversified business. You know, Qualcomm was a one-trick pony for quite a long time. And under Cristiano Amon, a longtime engineer, someone at the company with a history there, has tried to make it more. You know, I think you will note the automotive success and automotive revenues that Qualcomm has. You know, ARM, there are big questions about how it diversifies its own business away from a reliance on the smartphone market. It does designs and standards for other chips. But yeah, it's a funny reaction. I mean, ARM's now higher. Maybe investors just needed to sleep on it.
You know, really quickly here, Ed, as well,
Sure.
If you look at the Philadelphia Semiconductor Index today on the heels of all of these results, you have most stocks in the green. But what's interesting to me is the texture you're seeing here. You're actually seeing the biggest moves in Macomb Technology, Taiwan Semiconductor. What are the ripple effects here that you should look across the chip industry, semi-industry after these results?
Yeah, well, Taiwan's ADRs were under pressure yesterday on the logic that, you know, Trump may be even more aggressive than the Biden administration on onshoring or making more competitive the domestic manufacturing business for chips. But, you know, as you guys know, we talked about it, right? There's been a real frustration from the industry that the CHIPS Act money is nowhere to be seen. It's so hard to get hold of. And whatever, you know, you think of President-elect Trump, you know, his sort of deregulation strategy might just free everything up and allow those companies to execute on the existing plans they have, supporting the sector. And then there's probably a boost to end market demand as well in some senses.
All right, Ed, thanks very much for joining us. We are excited that Bloomberg Tech is back on today after a one-day hiatus for the election. Ed is going to interview the CEO of ARM Holdings. Renee Haas joins Bloomberg Technology at 11 a.m. Eastern. And as Ed pointed out, I think it's pretty fascinating to see that ARM has turned higher. It was down in the pre-market and jumped at the open now up 2%. By the way, at 10:30 a.m., as you can see from this full screen, Ed has an interview with the CEO of Lyft as well, David Risher. So he's going to join us before Bloomberg Tech and bring with him that special guest. Coming up on this program, Donald Trump may give Wall Street the M&A boost it's been waiting for. More in the Wall Street Beat next. This is Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Ordern only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
A pretty big pent-up demand for is mergers and acquisitions. Many companies over the last 3 to 6 months have been, thinking hard. One could say dusting off their dream deals.
And that was Evercore Chairman Emeritus Ralph Schlosstein speaking to us yesterday on Bloomberg Open Interest. And from investment bankers to hedge funds, Wall Street is gearing up for a big return of M&A deals. Hedge fund manager Dan Loeb, just after the Trump victory, said it's morning in America for event-driven investing. Here with more on the M&A front is Bloomberg senior reporter Michelle Davis. Your team is watching a lot of live situations and a lot that may come. There are expectations that the deals could get bigger. They could involve many, many industries. We've heard energy, financials, healthcare, which you've covered very closely for a long time. What are some that are in the pipeline? I'm really interested in Qualcomm in particular, because that is one that you guys have reported will be something that could be considering Intel's situation after an election.
Yeah, so this is the outcome that it seems like all the M&A practitioners were waiting for, because the biggest takeaway is that with Trump in office, the likelihood is that antitrust oversight is going to get easier. So some of those really big deals that folks have had on their wish list for 4 years, that they have been nervous to bring to market, are a go now. One of those is Intel Qualcomm. At this point, it's still unclear whether Qualcomm will proceed with that deal. U.S.-China relations are obviously a big factor in how that deal goes through, because China will have to approve that deal, and Trump has shown some protectionist tendencies. So that's one of the wild cards when it comes to all of this M&A.
You know what? Now I'm smiling.
This morning.
I don't think
Donald Trump lets a Japanese company buy
US
U.S. steel.
So that's the other wild card. And he has said multiple times that he would block that deal. And so that's the one area where, the bankers and lawyers that we talked to yesterday, they said it looks pretty good for all the M&A, except for when you talk about cross-border. There are certain jurisdictions where maybe, it might not be as easy to do a deal. And there's also the unpredictability factor of Trump. You don't know if there's a company he doesn't like, he could go off and say, I don't want that to go through.
And really quickly here, it's interesting, even Discover and Capital One, which is one of the ones that are expected to go through. The stocks were surging yesterday. A little bit of a give back today, Matt.
Yeah, but they rallied so hard yesterday, right?
It'll probably, it's expected to go through, plus more deals in the sector expected to go through, plus less regulation for these firms anyway.
Bottom line is we're going to be asking you, Michelle, to come on the show a lot more often. Michelle Davis from our deals team on the other side of the newsroom. Coming up in the next hour, Julia Coronado from Macro Policy Perspectives on the Fed decision. Remember, there's a Fed decision today and the economic outlook under the new administration. This is Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insights with Haslinda Anand, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. A day after Donald Trump scored a sweeping victory in the race for the White House, President Biden is getting ready to address the nation from the Rose Garden. Correspondent Matt Piper.
It will be the president's first appearance on camera in the aftermath of Donald Trump's victory over his vice president, Kamala Harris. In a statement, Biden said of Harris, in part, under extraordinary circumstances, she stepped up and led a historic campaign.
Mr. Trump will have decisions to make on pardons for January 6th rioters.
President-elect Trump promised to pardon some of the rioters charged with crimes in connection to the attack on the Capitol. But some of the rioters, like Christopher Carnell, are already trying for the pardon. Just hours after Trump was declared the winner, he asked a judge to delay his hearing so lawyers could contact the presidential transition team. His request was denied, but it's expected more rioters will try now that Trump has won a second term. Stacey Lynn, CBS News, Washington.
Ukraine's President Volodymyr Zelensky says he's congratulated the president-elect. CBS's MTS Tyab from Korets, Ukraine.
After speaking over the phone, Zelensky tweeted they had agreed to advance cooperation. Now, on the campaign trail, Mr. Trump repeatedly vowed to end Russia's nearly 3-year war on Ukraine within, quote, 24 hours, but hasn't said how.
Firefighters north of Los Angeles have been struggling to contain the fast-moving flames of a wildfire that's destroyed dozens of homes in Ventura County. CBS meteorologist David Parkinson says the weather won't provide much help today.
Most of the wind gusts you'll be seeing, particularly in Southern California, is in the 60 to 70 miles an hour range, but that's the kind of wind that can fuel extreme fire behavior.
The National Weather Service has issued a red flag alert through Friday. School kids in Philadelphia may have a difficult time getting to classes tomorrow. 5,300 SEPTA workers who operate bus, metro, and trolley services are threatening to strike.
I take the to and from school every day, multiple trains, buses, trolleys. I don't think I'm going to be able to go to school if it does happen.
Transport workers say they'll walk out if they don't have a contract they like by midnight. A dry town in New Jersey is ready to pop champagne for the first time in 120 years. Lawmakers in Haddon Heights have voted to repeal their more than century-old alcohol ban. Mayor Zachary Houck says it'll be a boost for business.
There's an opportunity to bring a whole new customer base to our downtown. The little shops, they're going to stand to benefit because you create an influx of foot traffic to our downtown community.
He and the city council still need to draft and pass legislation. Dow up 47 ahead of the Fed's announcement on interest rates. This is CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well, so go over there and check us out. Bloomberg Podcast is where you can search. Coming up, we're going to check in with Gina Martin Adams, Bloomberg Intelligence Chief Equity Strategist, what the Trump tax and tariff policies mean for stocks going forward. Dennis Lockhart, former Atlanta Fed president, to discuss Thursday's Fed decision. That's coming up at 2 p.m. Wall Street time, of course. Bloomberg full coverage beginning at 1:30 Wall Street time. Dan Ives, Wedbush Securities, in studio. What does the Trump presidency mean for big tech? We're going to have all that coming up in this hour. Right now, let's kick things off with Mr. or Mrs. Lisa Mateo.
Yeah, but John Tucker right next to me. There you go.
It's so confusing. so very confusing.
We got this. Market Drivers brought to you by IBKR with Interactive Brokers Forecast Trader. You can trade your views on key economic and climate indicators. Visit ibkr.com/forecast. Get started today. All right, we've got stocks just trying to extend that post-election day advance. Traders looking out to the Fed's decision on interest rates later this afternoon, 2 p.m. Wall Street time. Before that, some more economic data to kind of take in. Applications for U.S. unemployment benefits ticked up last week, increasing by 3,000 to 221,000 last week. And U.S. labor costs, well, they rose more than expected in the third quarter, up almost 2% on cooler productivity. Now, let's get to the NASDAQ, up more than 1%, 210 points, 19,194. We have the Dow, little change, up 4 points at 43,736. The S&P 500, up about 0.5%, 30 points at 5,959. We have the two-year yield, 4.21%. That's down 4 basis points. The yield on the 10-year, 4.37%, and that's down 6 basis points. Yesterday at this time, shares of Trump Media Technology, they were soaring. Tesla was also higher. Just a quick check-in right now. We have DJT down 16%, Tesla down up 1%. And now shares of Qualcomm, that's the world's biggest seller smartphone processors. They are up this morning about 2%. This is on its bullish sales forecast. Meanwhile, you have ARM Holdings. Those shares right now, they were lower in pre-market. Right now, ARM Holdings up 4%, and they give a little bit more of a tentative outlook. Then finally, Moderna. After better than expected COVID vaccine sales, its shares up more than 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and John.
All right, Lisa Mateo, thank you so much. We appreciate that. John Tucker sitting in for Alex Steele. How did you get the short straw today?
Why do I always feel like I have to apologize when he introduces me? Anyway,
Alex will be back in a number of days, and no need to worry. John Tucker sitting in first. We appreciate that, John, for the first hour. Then there's a reporting that Matt Miller will be co-hosting the 11 o'clock hour.
What's the over and under on that?
I'm taking the under on that big time, but we'll see on the 11 o'clock hour. All right, we're here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Speaking of YouTube, what would you like to hear on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg Audience Survey. Visit youtube.com/Bloomberg Podcast and click the link in our profile or community section to take the survey, which is hosted by our partners over there at Material. Fill it out now at youtube.com/Bloomberg Podcast. Billy Lipschultz joins us here in our studio. He's an equities reporter for Bloomberg News. Looking at these equity markets, a little bit of green on the screen here today, Bailey, after that big rally yesterday. What's moving today in these markets?
A lot going on, Paul. A lot of earnings continuing to roll in, even though we have all eyes on the Fed decision later today. I want to start with Under Armour. Their Class A shares under the ticker UAA right now up 28%, biggest intraday jump since 2018, trading at the highest level since February 2023. A lot of size and scope really after the company beat expectations. That turnaround gaining momentum after founder Kevin Plank returned to the helm and is leading the company. The big focus is selling less products, but charging more. So we saw a large jump in terms of expansion of gross margin and really trying to revive a company that when you look at it in terms of the business and kind of the stock price since he left, really struggling. Which
is a 52-week high today, but I'm just went back and look at the chart. Back in 2014, 2015, got up to over $50 a share. So just a fraction of where it was at its peak, but making a 52-week.
Yeah, 52. Everything's about, your scope. And that's one of the things that stands out when you look at a company like Lyft. And you're saying, okay, if stock's up 29%, we're having the one of the best days this year after beating expectations. And then you zoom out quite a bit and look at the fact that right now it's trading around $18.50. Back in 2021, it was north of $67. So beating expectations, seeing a rally right now, but nothing compared to what it was at a COVID peak.
Have you ever taken a ride share, John?
I have never
See,
taken.
no way.
Wait a second. Let me explain. I'm a big supporter of in New York City. I don't travel that much because I have my own car. But when I do, I go for the yellow cab because those guys are hurting and they need help.
Man,
Very good. Very good. Okay. See, I prefaced that whole thing. I was gonna say, hey John, do you arbitrage between Lyft and Uber?
Yeah.
But I had to preface it because there's a fairly good chance that he does
You
not
have no
use Uber.
loyalty. It's just
No, I'm
whoever's
not.
cheapest.
Whoever's cheapest.
Well, that's
Okay.
my favorite though. Matt Miller's like, I only use Uber, and I'm like, why? He's like, well, American Express points. I'm like,
Yeah.
that feels like whatever you're getting is probably not
Yeah. So
solid.
all right. So there you go. All right. What else we got?
Ending with Qualcomm, as Lisa mentioned, up right now, call it 2%, beating expectations, really touting strong sales as it relates to auto, Internet of Things, as well as handsets and licensing. Analysts really kind of pounding the table that the potential expansion into AI and in terms of their chips being implemented in devices, whether that's headsets or other industries, is kind of the bull case. But again, this is another company right now up 2% at $175. Even back in June was at 227. So still really being left in the dust by the likes of NVIDIA.
Do any of you stock guys track who sells stuff overseas that's based in the U.S.? I'm trying to gauge maybe this is better for Gina Martin Adams, but the stronger dollar and the impact on earnings.
Well, you have the stronger dollar, but then you also have what we're preparing for potential tariffs and what that could mean overseas. So when you're seeing a company like Qualcomm, you pull up PGO, 96% of their revenue, according to the terminal, is derived by international sales versus just 3.5% in the US. But that could just be a product of Apple as one of their big customers. Maybe Apple is buying the chips overseas for some of their factories. That's above my pay grade.
Qualcomm, QCOM, stock up to 1.8% today, up 21% year to date. Billy Lipschultz, thank you so much for joining us. And John, go back to your comment on the New York City cabs. Having grown up riding New York City cabs, the reason I do use Uber and Lyft is because the cab service in New York City has always been a terrible service, in my opinion, as opposed to London, which is a great service. So in London, I do your strategy, which is I go taxis first. If there's no taxi, then I go rideshare.
But I will say this, it is a regulated industry in the city. If you lose something in a cab, you can find it, believe it or not. And also, if God forbid, there's an accident or anything, there is also protection for you as the passenger.
All right. News you can use, folks, from John Tucker. Gina Martin Adams joins us. She's Chief Equity Strategist for Bloomberg Intelligence. Gina, boy, the world's changed in the last 24, 36 hours. Has your view of equity markets changed?
Oh, not materially. I mean, we had a lot of supports for equity markets prior to the election, and we're experiencing what is an above average post-election bounce. But nonetheless, this time of year, you typically get a seasonal lift in stocks, and that was well within our expected range, no matter who won the election. I think there are a couple of interesting differences potentially signaled by the market. Now, it's one day, so I don't tend to read a ton into one day's trading. But one thing that really stood out to us yesterday was very like 2016, financials led the games. So really consistent with Trump's win in 2016. Investors are anticipating higher rates, higher long-term yields, also potentially greater deregulation of the financial sector, and that's benefiting financials. One thing that definitely stood out as a difference, though, is healthcare did not perform well yesterday. And this, I think, is something we need to start talking about, is what's going to happen with the state of healthcare under a Trump administration. Does he go back and try to reverse Obamacare? Does that create a lot of ripple effects through the healthcare system? What is the future state of healthcare? Because healthcare was one of the best performers following the 2016 election. It was one of the worst performers yesterday. So this is something we're watching pretty carefully. Everything else was pretty on par with what we saw in 2016, which was the very risk-on, very high beta trade, as markets experience some sigh of relief that they likely will get some form of tax reform over the course of 2025 to prevent that rollback of the corporate tax rate.
Is tax reform baked into anybody's estimates at this point, or is that just
in
the future?
This is a very astute question, John. I think that oftentimes what analysts do is just ignore taxes until it's evident. And so we don't see a lot of evidence that tax reform is baked into anyone's estimates. As a matter of fact, companies have been paying persistently greater and greater tax over the last several years as the Tax Act of 2017 has rolled off. So there was a lot of nervousness on the part of the investor base, but are they really baking it into expectations? It doesn't seem to be the case until yesterday, when we did start to see some of the higher tax entities perform relatively well compared to the lower tax entities in the S&P 500. again, it's early yet, and maybe the market starts to price that. It's difficult for analysts to put it into their estimates because, frankly, the statutory rate is almost never what the company pays effectively. But nonetheless, I do think it creates a little bit of a tailwind fundamentally for equities.
How much of a company's earnings actually go to pay taxes, though?
Yeah, great question. So prior to the tax reform of 2017, it was 19% of EBIT was paid in tax expense by S&P 500 companies. After tax reform, we went down to all the way down to just under 14% of EBIT. So you get 5 percentage points of boost as a share of EBIT to S&P 500 companies as a result of that reform. As the tax package has slowly rolled off over the last several years, companies are back to paying about 17.5% of EBIT in tax expense. It varies dramatically by sector. It varies dramatically by multinational versus domestic companies. The more multinational, the less taxes they tend to pay, which is why there are all these initiatives in Washington to try to get multinational revenues taxed at a higher rate. But nonetheless, we stand about 150 basis points lower tax expense relative to EBIT than we were prior to the tax reforms of the first Trump administration right now.
Gina, any thoughts on trade and how trade policies could impact stocks?
Yeah, so this is going to be really interesting because I think this is more about timeline than anything. If you recall, in the first Trump administration, we got a really big lift to stocks in 20. But then we had a little bit give back in the markets come 2018 when tariffs were enacted. In this administration, I would anticipate that timeline between tax reform and tariff implementation, or at least tariff threats, is a lot shorter. I don't think we're going to have that nice 2-year window this time around. It seems like this president is very keen to utilize tariffs and utilize them quickly and robustly as a negotiating strategy. So something we're probably going to have to contend with in 2025 is a lot of give and take, where companies probably do get a little bit of domestically oriented companies in particular, get a little bit of tax reform to look forward to. But any companies that are importing from anywhere outside of the United States and or selling outside of the United States and have the back and forth across the border are going to experience some degree of volatility in an environment where we have much more restrictive trade policy as a general rule. I think it's going to be a bit of a rocky ride. We can't paint all the entire index with one big brush. It's going to be industry by industry, company by company, but it is something that we probably need to be on guard for.
All right, Gina, thank you so much for joining us. Gina Martin Adams, she's Chief Equity Strategist at Bloomberg Intelligence. Looking at the big mover today is NASDAQ up about 1% here, driven by big gains in NVIDIA, Amazon, and Apple kind of leading the way there on the NASDAQ. The S&P's up about 0.5%, continuing the strong move we saw in equity prices and risk assets yesterday. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got the NASDAQ leading the charge this morning, up more than 1%, 208 points at 19,193. The Dow, little change, up 19 points, 43,748. The S&P 500 up 0.5%, 30 points at 5,959. Now, where the biggest boost? Where is it coming from? We'll check the IMAP feature of your terminal of the 11 major industry groups. Well, we checked through and we see consumer discretionary, and then we move back. See, I'm trying to do this live, and I just messed it up. There we go. Automobiles and components. We go to automobiles and components again, automobile parts. And at the top right now, we do see that would be APTIV, that is the ticker there. Right now, it's up about 3%. We move on now to shares of Lyft. They are soaring this morning. They are up about 29%, reported strong guidance, record trips. Then we move to shares of Tapestry. They're up about 3%. That's the company behind Coach, Kate Spade. And this is after it raised its guidance for the year. It comes after that failed deal to buy Capri last month. And then Ralph Lauren, I've gotten comments for saying Ralph Lauren. I have, yes, Ralph Lauren, up about 4% right now, raised its outlook for the year, pointing to strong sales in Europe and Asia. Also expects solid holiday shopping season. Got to get to the 2-year yield, 4.20%. That's down 5 basis points, and over to the 10-year yield, 4.36%, and that's down 6 basis points. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and John.
All right, Lisa.
I don't think they should address it at all today. The formulation of monetary policy is not a political or politically influenced policy setting process, and it's not as if you can ignore a question from the audience that brings it up. But I think what you'll find is Powell will stay very removed from anything that suggests a reaction to political events.
Does the Fed owe the markets any guidance?
The Fed, does the Fed owe the markets guidance? I think the Fed has been giving guidance that the direction of travel is in the direction of lower policy rate settings. They have to be indeterminate as to where that will end. They just don't know. That depends a good deal on how the economy evolves over the coming months and next year or so. So I think guidance has been given. I doubt that you'll hear much in the way of amplification of that or elaboration on that in this meeting. The direction is to a lower overall rate setting.
Dennis, again, the Fed cut rates by 50 basis points, and as you just mentioned, there's the bias towards more rate cuts, yet yields have moved sharply higher. Is that, what's going on there for the average investor?
I think there are a number of factors at work, but probably the one that deserves the most attention is the markets increasing their discount or pricing in some concern about the fiscal outlook. Both candidates basically were likely to be sustaining or even increasing deficits. And the proposals that are out there from Trump's campaign appear to be net inflationary and conceivably net fiscally unchanged in many respects, if not worse. So I think what the markets are seeing is that the fiscal outlook, coming to grips with the reality of deficits and rising debt, as of now at least, don't appear to be a priority, and they're pricing that into the longer term rates.
May I ask you what you think the relationship should be between the President of the United States and the head of the Federal Reserve?
The President of the United States should stay out of trying to influence the Fed in the direction of monetary policy. The Fed should operate independently. I happen to have pretty strong feelings about this. I think it's globally a fundamental of good governance to allow your central bank to make its decisions independently. And the influence is simply in the nominations that the president makes for the board of governors and the chair, and after that, I think the setting of policy should be done independently with no interaction with the president.
Dennis, do you think what's the risk here if you're the Federal Reserve? Is it inflation coming back? Is it the economy tilting into a recession? Where do you think the Fed is kind of focused here on that balance?
Well, I think they're focused on two things. Of course, as everyone knows, there's a dual mandate, so they have to pay attention to both employment and inflation. A stickiness of inflation at current levels, possibly a resurgence, which could be based on some policy decisions that are made in the Trump administration. So that is a concern, and a cracking of the good situation we have in employment markets today. I pay attention to initial claims. If you saw initial claims shoot up, it would suggest that people are being laid off and something is changing. So I think they'll keep their eye on both and try to preserve a rather good economy we have at the moment, and particularly a good employment situation.
Can I ask you, being there in Atlanta, what was the message that you interpreted was sent by voters in Georgia and Atlanta in particular, And how should that be interpreted in the formulation of policy, whether it be monetary or fiscal?
Well, it's maybe a little early to opine on what the message was from the electorate in Georgia. And Georgia, of course, was like many other states around the country where Trump carried the state and got the electoral votes from the state. I think one message is that higher prices as a result of inflation, even with the argument that inflation is declining, higher prices really do affect the thinking of the voter. And I think that was one of several factors that was not favorable to the Harris campaign. Prices rose during the hyperinflationary period we saw right after the pandemic. Inflation has been coming down, but the prices themselves have not been coming down. And that is a real constraint on consumption in many households. And I think there was, to some degree, a vote against that reality.
Dennis Lockhart, thank you so much for joining us. Dennis Lockhart, former Atlanta Fed president, joining us from Atlanta via Zoom thing. And when I think about Atlanta, phenomenal city. I've got to, just over my career, seen it, experienced the growth of Atlanta, having gone there for so many times and had a lot of investment banking clients there. Every single street is named Peachtree Street.
I believe Dennis's firm is on Peach Street, right?
Yeah, and something like 36 streets have the word Peachtree in them, so it's very easy to get confused. And then there are a lot of other institutions that use the word Peachtree, so it's certainly a Peachtree crazy city, to say the least.
Dennis, thanks so much for joining us, former Fed president for Atlanta, Dennis Lockhart. Yeah, it's amazing. It's a huge city, cosmopolitan, global city. But you ask somebody, it's Peachtree, but it's Peachtree north, west, southeast, and it's street, it's avenue, it's this. And so before you had like GPS, you'd say, you give an address to a cab driver, 9 times out of 10, you take it to the wrong place because he said, "Oh, it's Peachtree Southeast you wanted." I was like,
and of course, home to Coca-Cola.
Coca-Cola, yeah, it's an awesome town. But, great stuff, and it's just been, I tell you, it's just been one of those. You talk about the growth of the Sun Belt, and Atlanta was the first. And just the dynamic growth just over the last 30, 40 years has been extraordinary. It's now, I think, like the 4th biggest market in the U.S. It's something huge like that.
It's on my bucket list. I haven't been yet.
Oh, dude.
I mean, I think I've been through the airport, but that was it.
Yeah, but the traffic is just brutal down there. It's one of those, again, the growth of the Southeast, these towns grow so quickly, the traffic, the infrastructure can't keep up. But anyway, getting the latest from Dennis Lockhart down there. S&P 500 up 30 points, Dow up 34 points, NASDAQ up 190 points, that's 1%. A lot of the big tech names like NVIDIA kind of driving the performance of big tech today. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Wells Fargo Advisors. Consider Wells Fargo Advisors Financial Network, where you can run your business with true independence, supported by unrivaled resources. Learn more at wfa.com/resources. All right, we've got stocks advancing. Traders turning their attention to the Fed. They're anticipating that the central bank will lower rates by a quarter point later this afternoon. We have the S&P 500 up about 0.5%, and that's after the index knocked a record high in the previous session. We'll head over to the Dow now. A little changed, up 38 points at 43,769, with the Nasdaq up more than 1%, 205 points at 19,190. Treasury yields dropping after yesterday's historic sell-off. Right now, the 2-year yield 4.21%, down 4 basis points. The yield on the 10-year 4.36%. That's down 7 basis points. To currencies, the dollar were traded following its best day since 2022, with the dollar weaker. Japanese yen up more than 1% at 152.92 against the dollar, with the euro, British pound stronger. And Bitcoin, wow, it rallied almost 10% yesterday. This morning, down 0.2%, still around 75,000. Few stocks on the move. Mobile gaming software company AppLovin, right now it is up 47%. Third quarter results beat estimates there. Then a lot of dating apps, well, not doing so well. We have Match Group down 17% this morning. This is after fourth quarter revenue forecast and missed estimates. On the flip side, you have Bumble. They were lower, right now up about 1%. It posted in-line results. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Cool and John.
All right, Lisa Mateo, thank you so much. We appreciate that. John Tucker sitting in for Alex Steele. I'm Paul Sweeney. We are live here on our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. What does Donald Trump and the White House mean for big tech? Dan Ives joins us. He's managing director and senior equity analyst for Wedbush Securities. Dan, I mean, a lot of the questions for investors as it relates to big tech and the Trump administration is, I mean, what does it mean for big tech writ large? But I want to start with Tesla, because that's an industry that depends upon cooperation with the government. What do you think about Tesla?
I mean, from Musk betting on Trump, it might be the best poker move he ever made.
That's right.
And when you think about now, this is going to really catalyze autonomous, full self-driving. A lot of the regulatory issues that Tesla's been dealing with, I think essentially most of them go out the window here. Tariffs get pulled, which is negative for the EV industry, bullish for Tesla. Look, if you're a Tesla shareholder, for Trump getting in is basically a champagne moment. And I believe starts to unlock, we've talked about on the show, the trillion now is starting to get unlocked with Trump in the
stock yesterday. Elon Musk added 26.5 billion. So I guess it was a good trade. Can we talk regulation? What's the regulatory landscape going to look like? What does that mean for tech? How do you game that right now?
Well, I think the biggest thing, like the take any horror movie you want, that's really in what Khan's been to tech companies.
Khan at the FTC.
So when you look at Khan at the FTC, has really been that nightmare for big tech in terms of M&A, deals, anything they do. And that's been an issue. That's been overhanging a lot of these stocks. Not Google, Apple, and some others. I think the view is heavy view that she's gone at the FTC, and that ultimately will let a much more friendly deal environment for tech.
But that doesn't pertain to Europe, though, or does it?
Sure. Now, in Europe, big tech, I mean, they're used to fines or almost like cups of coffee there. So they're always going to get that from Brussels. But the big issue's been, Lina Khan from FTC has really been the big issue. With her looking to be out, that's another part of this rally here, because I think what it's going to do is going to be a tidal wave of M&A. You're going to see big tech. You still have DOJ and some other issues, but you see them more aggressive from an AI perspective. And this is really what tech investors want to see. Less regulatory, and then we got to see a red sweep combo that. That's something that's a backdrop that's very, very bullish for tech investors.
Comments from Trump and
Okay, fine. Yes, this one.
That does not mean just towards social media and tech in general. How do you take that into account?
Yeah, I mean, look, they're not fans of Google, Meta. The irony is, you look at TikTok. Trump getting in basically means TikTok. They're not going to get banned, and I don't think anything changed from an ownership perspective.
So President-elect Trump in the White House, what does that mean for TikTok?
So from a twilight zone, even though he started to get the actual looking to get TikTok banned, here we are, 180. It's the opposite. Actually, not supporting a TikTok ban. So now TikTok doesn't get banned. Now part of that is because Trump is very negative toward Google, Meta. So when you think about it from a tech perspective, and you started a little in the stocks yesterday, I'd expect them a little 12-round battle that they'll be going through with Trump in terms of some of the issues around, what we said on social media, Section 230, which has obviously been the shield.
What is Section 230?
So Section 230 is really what shields social media companies legally. And that's been a big contentious issue. The view is if Trump comes in, what happens to Section 230? I don't think anything happens per se, but when you look at some of the risk, quote unquote, in terms of big tech, definitely on social media, and then clearly on the China issue in terms of he'll be a lot harsher on tariffs, but now the difference is who's to his right as the whisper? It's Musk. So Musk is going to be able, I think, and the view is on the street, navigate these issues when it comes to China, tariffs, AI, with now being the sort of whisper.
Well, if you're an investor in NVIDIA, for instance, how do you view this?
The way you view this is that even though initially you'd say maybe negative on China tariffs and what that could do for Godfather of AI, Jensen, NVIDIA, the reality is that with Musk in there, cooler head will ultimately prevail. I don't really see any major risk from an NVIDIA perspective. To some extent, maybe more of those chips going toward U.S. instead of China, which is ultimately just bullish for big tech. That's why any which way you kind of take this, it's bullish U.S. tech, bearish China tech. But the Musk and just him being integral in 1600 Pennsylvania Avenue is very important in terms of the view in the tech trade. It's not some 202 bureaucrat that's ultimately grandstanding trying to get through some tariffs. Now you got Musk that has, I think, best pulse in terms of what's going on in broader tech and AI.
So you seem to think that Elon Musk is going to play a active role in this Trump administration?
He is going to play a significant role. Now, unofficial. Now, is he going to be a cabinet? No, because then that's very complicated in terms of his ownership and what he'd have to do for his stock. But he's essentially going to be, call it AI ambassador, call it unofficial cabinet whisperer. Musk will have a very important role in this White House, specifically around driving AI. And that's also why, autonomous is going to be front and center, because he is very focused on autonomous in terms of potentially Trump accelerating some of those autonomous FSD issues. And that is key to the stock, because we believe that's worth $1 trillion alone in terms of the AI autonomous story.
Just a broader question for you. Can tech satisfy the market expectations?
I think, and we've talked about it on the show, demand to supply is still 15-1. So a lot of the bears in their spreadsheets, 10th floor New York City office building, they can't see AI in those spreadsheets. I think numbers go up across the board, 10, 15% going into next year. And our view is it's Goldilocks. Fed's going to cut 100, 150 bips. You still have $6 trillion on sidelines. And we are talking about an AI revolution. It is still, call it 9:30 p.m. in the AI party that goes to 4 a.m.
Best pick right here, Dan, 30 seconds.
The Messi of AI, Palantir.
Boy, they crushed it on the earnings.
And again, when you look use cases, Palantir's, they're in that Mount Rushmore, of course, with Jensen, with Microsoft, with what we names like ServiceNow as well. Palantir driving it from a use case perspective, and still many institutions, very negative on Palantir. I love the setup of the story over the coming years.
Did Jimmy Buffett will that shirt to you, by the way?
Again, he did, and the thing is, this was a shirt I was actually going to give to Keen, but he said it was a little too subtle.
John, I don't think you can't go out like this after Labor Day. But Dan Ives can pull it off. He can pull it off. Dan Ives, Managing Director, Senior Equity Analyst of Wedbush Securities, joining us here in our Bloomberg Interactive broker studio. We have green on the screen here today, led by NASDAQ, up 1.3%. The S&P 500 is up 0.6%, and a little bit of green there on the Dow Jones Industrials. We'll have more coming up. This is Bloomberg.
Can't like our own personal because our own they do take.
some of the specific issues for the banks as a whole and one or two banks, but it is just, the feeling that the pendulum can swing the other way, right? So that there won't be new regulations and that some of the things that are sort of in the pipeline could be watered down or pushed out. So you were just speaking about Basel III. So that Basel III endgame has been the big one for the largest banks. And, Basel dictates that all jurisdictions around the world have to do some form of implementation. But the US proposal that came out in 2023 was really much stricter than we saw in other regions. We had already had some expectations that would be watered down from comments that Powell had made, and also comments from Barr in September. So some of that was sort of in the stocks, but I think the feeling is, from our regulatory group, that the things could either get pushed further out, or they could be watered down even further. And so that's good for the banks because their excess capital is something like 5 to 15% of their market caps. So definitely that was something aiding Citigroup and Wells Fargo, as well as someone like Morgan Stanley and Goldman, where even with the sort of lighter touch in September, they were still going to have a deficit in their capital. So some positive news on that front. Wells Fargo has had this asset capital long
This
time.
guy is good.
When they reported their results.
Chill out.
So just a particular easing, I think, also benefited those couple of banks. And then there are some other things related to card and consumer finance as well. On the interest rate front, all these banks are positioned for higher rates. So we know that, we'll be watching the Fed in terms of short-term rates. But I think in general that also got a lift. And then finally, from our viewpoint, the big thing is that we see momentum in fees, and that's been a huge boost to the earnings for these banks.
Just back to the Basel III endgame rules. The idea is, give me the dummies version. You had to set aside more capital, basically, in case things went south. So the financial institutions wouldn't ruin the economy, right? So that's
Right,
freed
so-
up. Does that now go back to shareholders? Is that the idea?
That is the idea. And so Basel III endgame rules. So as you know, Basel III is something that sort of came after the financial crisis, and there's been many iterations. Thus the reference to this last set of rules as endgame. And basically what that dictated was that as they measure their risk-weighted assets, there would be big increases in that, and thus they'd be having to hold more capital against that. And so based on third quarter earnings and fourth quarter requirements, their excess capital was 5 to 15% of their market cap. Under the Basel III rules, that would turn to deficits across the bank. So they would have to find a way to increase their capital. There is a timeline, so they probably would have done that through internal capital generation. But to your point, that would have been capital that they could not return to shareholders.
Oh, can I just ask you, who has the most capital to be returned to shareholders?
Well, based on the requirements today, Citigroup, their excess capital is something like 15% of their market cap.
Okay, all right. And
I would point out also that these banks have and so by the way, like the banks do sort of target holding a buffer to the requirements, so there's a little bit of that. But I think in general, it is the fact that buybacks will likely go up. These banks already have buyback programs in place, so they can execute on them. But it's also the math. If you have higher equity, your return on equity is going to be lower, and that's how investors value stocks. So there is definitely the higher buybacks, but also I think it is the sentiment that is helping bank multiples, this specific regulation, but also less regulation in general. One other area I didn't talk about with regard to regulation is less antitrust. So that's good for M&A, and that's really why you saw Goldman and Morgan Stanley the stocks reacting to that.
Allison, thanks so much for joining us. Allison Williams, senior analyst covering the global banks around the world for Bloomberg Intelligence. She's based down in our Princeton office. Again, the banks had a big move higher yesterday that really got people's attention, thinking that there will be a better
trimmed all of that.
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Boy, coming up in this hour, big change at the top here. We got Matt Miller in the studio. I'm excited. Hour. How good is that? So we will talk to Matt here for the next hour, and he's going to help us get through what's going on. Let's give you a sense of what's happening. President Biden is scheduled to deliver an address to the nation from the Rose Garden, scheduled at 11 a.m. So noon. Right now. So maybe like noon. So we'll see. Whenever he is ready for those remarks, we will bring them to you. In the meantime, we're going to check in with Billy House, Bloomberg congressional reporter. I talked to him about what's happening with the House race. Looks like that's getting tighter. That may go Republican as well. So we're going to get the latest on the markets, latest on earnings, latest on what's happening in Washington, D.C. Right now, let's kick it off with none other than John Tucker.
All right, let me just catch my breath here. Stocks extending their gains today. Dow Jones Industrial Average just 35 points higher at the yesterday's record. The S&P 500 after the surge yesterday after the election, 38 points higher right now. That is up 0.7%, 59.67 on the index. And the NASDAQ Composite Index is up 249 points. That's a rise of 1.3%. In the S&P 500, you have 7 of the 11 major industry groups higher right now. Consumer discretionary, that is in the lead, followed by traded stock right now as we 0.6%. And Palantir Technology right now, it is down 1.8%. The volatility index, the Wall Street Spear Gauge, that continues to slide right now, 1527. Also a signal from the bond market, 2-year yields 5 basis points lower. This ahead of the Fed meeting, of course. We'll know the results this afternoon. Right now, the policy rate, the 2-year 4.2%. The 10-year, that continues lower in yields, down 8 basis points right now at 349. And we check the markets all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
Wait, did you say 349? Because that would be a huge drop in yields on the 10-year.
434.
Okay.
I've transposed a few numbers, but that's why we have Matt Miller here.
That's why we have.
It harkens to the past when he would correct English
and correct your grammar. Right.
It's
so good to be back, gentlemen.
It's so good to have you back.
It's a short straw to come back to Bloomberg Radio. You're a TV show.
I jumped at the chance. Bob Bragg said, "Would you fill in for an hour tomorrow on radio in this new era, Trump 2.0?"
Yes.
And I said, hell yes.
Exactly right. All right, John Tucker, thank you so much. We got Matt Miller sitting in for Alex Steele this hour. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. What would you like to hear on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg audience survey. Visit youtube.com/Bloomberg Podcast and click the link in our profile or community section to take the survey, which is hosted by our partners over there at Material. Fill it out now at youtube.com/Bloomberg Podcast. I want more Matt Miller on Bloomberg Radio.
I want more me on Bloomberg Radios. I'm always volunteering. I go to management and I'm like, guys, get me on
radio. We're YouTube now. We're everywhere. Bailey Lipschultz joins us here, breaking down what's happening in the stock market here. We got a little bit of green out there, Bailey. It looks like the tech stocks are winning. What are you looking at?
Yeah, tech stocks rallying. Going to start with Warner Brothers Discovery, parent company of Max Streaming, beating expectations, more subscribers than expected in the third quarter, talking up plans to expand Max in more countries, coming to other European markets, Australia, going to focus on boosting revenue by, guys, price hikes and reducing password sharing, the two things that I personally dislike the most as a consumer. Stock trades under the ticker WBD. Biggest pop when it was up 17% since it debuted as its current iteration back in 2022. They're only trading at the highest level since February. Right now, about 950 had peaked out in early 2023, right around $16.
Still down pretty substantially just on a year-to-date basis. I think we're down 16% year-to-date. So they got some work to do. But good news, at least in your term.
Yeah, another company that we spoke about an hour ago that is still down from its peaks is Under Armour, right now up 29%. Those Class C shares having their best day ever. When you look over at their Class A shares, we got trade under the ticker UAA, up 34%, best day since 2005, according to the Bloomberg data. This coming after they boosted their EPS view, earnings beat expectations. The big focus with Kevin Plank back at the helm is how they can tighten losses, how they can kind of rethink the maker of sneakers and athletic shirts. The big focus is on higher price goods, not selling more goods at a discount, but trying to expand margins and sell more expensive shoes to try to compete with the Nikes of old, though we have the Ons, the Hokas, and other shoe brands that have really taken over, and Nike is its own issue.
Why did he ever leave, Kevin Plank? He did so well for the company.
Other operations, man. You move on, get rich doing something else, and then have to come back. I mean, how many times is Bob Iger and I think of Howard Schultz, like guys leave and then end up coming with a revolving door to come back.
What's the Hoka story? It's a brand I'm not familiar with, but I know the kids are wearing it.
Hoka's one that is very popular. Apparently, I'm a Nike diehard, so my running shoes are all Nike, but apparently they're really good in support. So it's On is the Roger Federer Tide company. Hoka is another one that's really trendy.
Katie Greifeld, who is long distance runner and co-anchor of Bloomberg Open Interest on Bloomberg Television every weekday 9 to 11 a.m. She is a Hoka diehard. Yeah, and but otherwise, I feel like it's just grandparents that wear these like sneakers outside, right?
I do my channel checks on the subway every morning. I'm like a big Vans person. No one ever is wearing Vans in New York. Yeah, it shows through on like the weekends. I'm the only person in Vans, but God, the amount of older people wearing Hokas to support their feet. JC, what do you rock?
What are you looking at me?
I don't know. Are you doesn't wear sneakers?
I have a pair of
Docksiders circa 1978.
Yeah, whatever. I had them in high school.
I like the Vans. Do you wear the Jeff Spicoli specials, those slip-ons with the checkered flag?
I wore those back in middle school. I stopped wearing slip-ons when I think I was able to drive a car. I realized, not really
Dangerous.
Yeah,
All right, very good. The Hoka update there, Billy Lipschultz. Thanks so much, Billy Lipschultz covers the equity markets for Bloomberg. S&P 500 up 0.5% here today. Let's get the latest reporting on the House races. Still, we have got a number of races that have not yet been called. But it appears that the Republicans may eke out a little bit of a majority there. Let's check in with Billy House, Bloomberg congressional reporter. Billy, thanks for joining us here. Where are we right now with counting some of these ballots for some of these House seats?
Right, we're roughly at Republicans with a 206 to 192 seat edge called so far, but a lot of the remaining 20 or so seats are too close to call, and a lot of those are in California where the counting is going very slow. As we speak right now, House Republicans are on a Zoom call, a members only call to discuss where things are standing. And in about noon, Democrats led by Hakeem Jeffries will be having their own Zoom call. So we'll know a little bit more then. But right now, it looks favorable, obviously, for Republicans to maintain their lead, but they could lose even their already narrow majority by 2 seats or so.
Yeah, I mean, when you say California, Billy, I think Democrat. I know that they've gone red in some parts of the Central Valley and maybe a little bit in the South, closer to the border, but aren't those seats likely to be blue?
Well, they were carried by Biden, those districts, and many of them were carried by the Republicans in the off-presidential year. The problem there with those numbers right now is the returns in California, some of them are still below 50%. So while, yes, a John Duarte, a freshman Republican, may be leading, we have no idea really what votes are counted, where others are going to come in from, and how that's going to resolve. It just doesn't seem like, though, there's going to be quite enough of those type races that could turn around that would give Democrats the majority. But we'll wait and see.
Hey, Billy, let's assume that the status quo holds here in the House and the Republicans maintain a slight majority. Across Congress in general now, given what we know, how strong of a majority do they have? How much strength does Trump have with Congress, President Trump have with Congress if this were to hold right now?
That's a great question, because the knee-jerk or common perception might be that they control both chambers and the White House. So, hey, Trump's agenda, Republican agenda on tariffs, tax cuts, everything will flow through. The truth is, if you look more closely, the House Republican majority is going to be smaller than the dysfunctional one we have now. and not everyone is on board with all of the Trump proposals. For instance, Speaker Johnson on his website right now speaks about free trade and indicates an opposition to tariffs. Now we'll see if that sticks around, but right now that's on his website. Over in the Senate, the same thing. We'll still have the filibuster, and the margins there are so narrow that the notion that this dominated Republican government is really dominated by Republicans. You got to look at the numbers. It's by very small margins.
Yeah, I read that Lindsey Graham yesterday, or maybe late Tuesday night, tweeted something to the effect of budget reconciliation, here we come, which means they could overcome the filibuster. What needs to happen, Billy, for that to work? What are the parliamentary mechanics that could allow them to pass legislation with just 51 votes?
Well, that's absolutely true, but and that could happen on spending issues. I mean, there's a whole raft of other things, obviously.
Or tax issues, for example. I mean, could they take the 2017 package and just push it through again rather than letting it sunset in 2025, extracting, of course, the cap on state and local tax deductions?
Well, you raised a good point. I was going to say, yes, they could, but there are wrinkles within that, like the SALT cap, that there's no agreement within the Republican Party on that. So those sort of issues.
He promised. President Trump promised.
He promised, but I'm not necessarily think that anybody who doesn't live on the left and right coasts are necessarily promising to do that.
So, Billy, what is the to-do list for Congress here, kind of post inauguration here? What do you think they really need to get done?
Well, right away, they're probably going to have to deal with keeping government open again, unless in late December they pass a really long-term extender. But most Republicans don't want that. So they will deal with some spending issues and kind of, instead of cleaning out the barn before Trump takes office, we'll probably have to wrestle with some of those issues. We don't know yet, but that's probably what's going to happen. And then the debt ceiling it becomes another issue real early on in the Trump administration. And that, as we saw last time around, even with Republicans holding both chambers, is going to be a real wrestling match.
Billy, what do you think we got wrong covering this? You know, the polls said it was going to be neck and neck, that it was going to be a toss-up, a jump ball, and it turned out to be an absolute clobbering. I mean, really a landslide in terms of winning all of the swing states, winning the popular vote, first for Republican in 2 decades. You know, getting more Republicans votes in New York as a percentage than we've seen since 1996. I mean, it really seems like the country has spoken with a loud voice, and we certainly in New York City, we're not hearing it. We were not hearing it here.
Well, I think you're absolutely right. And it wasn't just New York, it was throughout the country. I was in Omaha on election day, but one good thing about being in Omaha is that you can go to Iowa. And so I raced over there when a poll showed that Harris had actually jumped into a lead there. Well, that turned out to be vastly inaccurate as the results came in. And you get a sense that whatever systems we have now in polling, and this was the case for me in Iowa, just asking people, even dressed in MAGA and Trump gear, who they're voting for, they refuse to talk. But there's some, I don't want to go out on a limb here, saying there's some suspicion of pollsters and media. People just aren't really telling analysts. In New York, there were some very interesting local races showed that local concerns, like in Iowa, the abortion ban there might have played a big role, often in the Republicans' favor.
Billy, 2 days after the election, and you said in some California precincts, less than 50% of the votes have been counted. Can we all agree, and why is it not a story that this system we have for House votes is broken? Can't we have some kid in a garage in Palo Alto come up with some solution here? Why are we here counting ballots?
It's insane that it takes this long.
What's the feeling in D.C., Billy?
I've always wondered that myself. I mean, I'm not suggesting we put chips in everybody's brain and do it that way, but the truth is, on the other hand, though, everybody's afraid of a quick call now, and then find challenges, legal challenges that will last, perhaps half a year or longer. So caution seems to be the rule of the day. But I'm with you. Yeah, there are rural areas in a lot of districts, obviously, including California. But I mean, we can order peanuts and cashews faster when we get these posts in.
Interesting. All right, Billy, thanks so much for joining us there. Billy House covering all the. He's our congressional reporter down there in D.C. And again, waiting on the House map. But I would argue, your question. I think maybe a silver lining for the Democrats is. It was effectively 50-50 or 49. I mean, it's still relatively close, but just on the margin in the swing states, it went Republican.
All of the swing states.
Right. But I mean, by very slim margins, though. You can look at it that way and say, if you're a Democrat and you're looking for a silver lining, you're like,
here's the thing, though. This is what I think. Here's a presidential candidate who had more against him than any presidential candidate in my memory. This is a guy who lost the last election, was under 4 indictments, twice he was attempted to be killed, right? The opposition had way more money than him, and yet, against all of these incredible odds, he wins the popular vote for the first time that a Republican's done that in 20 years. I mean, how did we not see that coming?
Yeah, it goes to what we've seen all along. His loyalty from his core is unlike anything I've seen, at least in politics.
But his core isn't more than half of American voters, right? And that's how he got elected.
I've always thought coming up into this election, I still kind of think about it today, it's literally half the country. 50.00%. And the other half is the other half. But it skewed a little bit higher this time in some of those key states, and boom, there we are with the electoral vote.
I was, I dropped deep into the New York Times reporting last night. I think they've done a pretty good autopsy, and they just show that we didn't realize immigration was as big as we should have realized. We didn't realize inflation was as big as we should have realized. All of these issues were right there facing us. We just sort of glossed over them.
We'll have to see. The Democratic Party's got a lot of work ahead of it. It's about 2 years from now and then 4 years from now. We're waiting for President Biden to make remarks from the Rose Garden. Come down. This
This is the latest smart health watch developed by Huawei, combining core technologies from both Samsung and Huawei.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. S&P 500, you have 8 of the 11 major industry groups there. They are higher right now. Consumer discretionary, that's in the lead, and that is where you're going to find shares of Tesla. Financial is actually the worst performing group right now. S&P 500, 34 points higher. That's up 0.6%, 59.63 on the index. Dow Jones Industrial Average, after that record-setting day yesterday, 33 points lower right now. The NASDAQ 100, 248 points higher. That is up 1.2%. Among some of the other individual shares on the move, you have Bumble shares gaining. The dating app company reporting third quarter adjusted EBITDA that exceeded estimates. Halliburton shares, they're tumbling. The oil field services provider third quarter earnings per share missed expectations. And then you have Tapestry shares, they're jumping. Strong performance in its coach segment and what the company calls remarkable gross margin performance, driving first quarter results above expectations. Did get some data today, fresh data on America's labor market, weekly jobless claims remaining near historic lows. And Bloomberg Economics writing that barring a major surprise, the FOMC is going to continue its rate cut cycle with a 25 basis point cut this afternoon. What investors really want to know is how the president-elect's proposed fiscal and tariff policies will affect the Fed's policy going forward. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate it. Matt Miller sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokerage Studio. We're streaming live on YouTube as well. We are awaiting comments from President Biden that he will make probably a couple of minutes time here from the Rose Garden. So, Matt, it'll be interesting to see kind of what tone President Biden sets here when he makes these remarks, again, from the Rose Garden to the nation.
I imagine it'll be pretty similar to what we heard from Kamala Harris yesterday at Howard University. And she basically emphasized peaceful transfer of power. I can see the president walking out now, taking off the aviators, getting up to the podium. Let's listen to President Biden after Trump's historic victory.
Thank you. Good to see this cabinet and the staff together here. Thank you. Thank you, thank you, thank you. Please. Thank you, thank you, thank you. It's good to see you all. Particularly good to see my granddaughter sitting in the front row here. Hi, Finn. How are you, honey? For over 200 years, America has carried on the greatest experiment in self-government in the history of the world. That's not hyperbole. That's a fact. For the people vote and choose their own leaders, and they do it peacefully. And we're in a democracy. The will of the people always prevails. Yesterday, I spoke with President-elect Trump to congratulate him on his victory. And I assured him that I'd direct my entire administration to work with his team to ensure a peaceful and orderly transition. That's what the American people deserve. Yesterday, I also spoke with Vice President Harris. She's been a partner and a public servant. She ran an inspiring campaign, and everyone got to see something that I learned early on to respect so much, her character. She has a backbone like a ramrod. She has great character, true character. She gave her whole heart and effort, and she and her entire team should be proud of the campaign they ran. You know, the struggle for the soul of America since our very founding has always been an ongoing debate and still vital today. I know for some people, it's a time for victory, to state the obvious. For others, it's a time of loss. Campaigns are contests of competing visions. The country chooses one or the other. We accept the choice the country made. I've said many times, you can't love your country only when you win. You can't love your neighbor only when you agree. Something I hope we can do, no matter who you voted for, is see each other not as adversaries, but as fellow Americans. Bring down the temperature. I also hope we can lay to rest the question about the integrity of the American electoral system. It is honest, it is fair, and it is transparent. And it can be trusted, win or lose. I also hope we can restore the respect for all our election workers who busted their necks and took risks at the outset. We should thank them. Thank them for staffing voting sites, counting the votes, protecting the very integrity of the election. Many of them are volunteers who do it simply out of love for their country. And as they did their duty as citizens, I will do my duty as president. I'll fulfill my oath and I will honor the Constitution. On January 20th, we'll have a peaceful transfer of power here in America. To all our incredible staff, supporters, cabinet members, all the people who've been hanging out with me for the last 40 years, God love you, as my mother would say. Thank you so much. You put so much into the past 4 years. I know it's a difficult time. You're hurting. I hear you and I see you. But don't forget all that we accomplished. It's been a historic presidency. Not because I'm president, because what we've done, what you've done. A presidency for all Americans. Much of the work we've done is already being felt by the American people, but the vast majority of it will not be felt over the next 10 years. We have legislation we passed that's just only now just really kicking in. We're going to see over $1 trillion worth of infrastructure work done, changing people's lives in rural communities and communities that are in real difficulty because it takes time to get it done. And so much more it's going to take time, but it's there. The road ahead is clear, assuming we sustain it. There's so much we can get done and will get done based on the way the legislation was passed. And it's truly historic. You know, we're leaving behind the strongest economy in the world. I know people are still hurting, but things are changing rapidly. Together, we've changed America for the better. Now we have 74 days to finish the term, our term. Let's make every day count. That's the responsibility we have to the American people. Look, folks, you all know it in your lives. Setbacks are unavoidable, but giving up is unforgivable. Setbacks are unavoidable, but giving up is unforgivable. We all get knocked down. But the measure of our character, as my dad would say, is how quickly we get back up. Remember, a defeat does not mean we are defeated. We lost this battle. The America of your dreams is calling for you to get back up. That's the story of America for over 240 years and counting. It's a story for all of us, not just some of us. The American experiment endures. We're going to be okay, but we need to stay engaged. We need to keep going. And above all, we need to keep the faith. So proud to have worked with all of you. I really mean it. I sincerely mean it. God bless you all. God bless America. And may God protect our troops. Thank you, thank you, thank you.
All right, that was President Biden in the Rose Garden making some remarks to assembled staff and to press. We're going to hear from President-elect Trump later today, and I think Vice President Harris later on today. So this is starting to sink in, Matt. This is for on both sides. The Republicans need to get their work, and the Democrats probably need to reassess here. Yes, no, the Democrats definitely need to reassess, and I'm not sure it's very valuable to us to ask what went wrong, because I think it's pretty obvious, but it should be said out loud that I think President Biden, a lot of people are saying, and I'm reading, I shouldn't say I think this, because is maybe most at fault here. I mean, he
should have been the bridge to a younger generation that he promised he wanted to be. And it wasn't fantastic to hide his cognitive difficulties until they were apparent for all of us to see in a debate.
Too late. Guess who darkens the door here today? Joe Matthew, the co-host of Balance of Power. We brought him in to start his day a little bit early. Joe, what'd you take from, let me put it another way. What are you hearing from your sources in Washington, D.C., around the country, as there's kind of both from both sides, the Republican side and the Democratic side, as we kind of really kind of sift through what happened on Tuesday?
Boy, that's a big question, and I think it's going to take us some time to unpack it, combined with several years of therapy after the campaign that we just endured, the longest in American history, the most expensive, the twists and turns that we saw. Look, the fact of the matter is, Kamala Harris actually performed pretty well when you look at the overall vote, but Donald Trump performed a lot better. And this sweep of the swing states in particular had a lot to do with Latinos breaking for Trump. Yes, she won young black men, but many still broke for Trump. So she was below Joe Biden on a lot of really critical constituencies. And in states where we saw abortion measures that they thought would activate progressives, even in red states, it didn't materialize that way. We even saw the abortion measure in Florida, for instance, fail.
So did the weed one in Florida.
So did the cannabis one, even though Donald Trump backed that. So there are actually a lot of questions, Mr. Miller, about what a Trump 2.0 will mean for cannabis legalization, for safe banking, which has passed the House, I think, 12 times. He says he supports that. Maybe there'll be some motion there. Based on what we saw from pot stocks yesterday, though, maybe not so much. I'm actually really curious about it. But when it comes to the election, the big questions are, did she pick the wrong guy? Would Josh Shapiro made a difference? Would it have mattered if she had more time? If Joe Biden had left, to your point, Matt, a year earlier, would it have mattered? Or was this train rolling down the tracks?
Well, it didn't necessarily have to be her, because remember, before everyone decided, okay, you know, she's the one.
Well, there would have been a primary.
Exactly. And
so it
she
might
didn't do
not
well in the previous primary. And, you know, I don't think anyone would have tapped her until she was the only choice. Also, she didn't really give us anything. I mean, we interviewed President Trump twice in the last few months, right? How many times did we interview Kamala?
We invited her a lot.
President Trump, every time you ask him a question about tax policy, about tariffs, about immigration, he gave you a pretty straight answer. About Israel, pretty straight answer. She avoided those questions. She didn't give anyone a straight answer. So no one really knew what she thought, if she thought anything at all about those issues. Maybe she hadn't even decided. But that's not, I don't think, as important as what the Democratic Party does now, because they have to regroup. They have to do something different, right? Do you think they know that? Are they looking inward?
Oh, I think absolutely. This is a reckoning for the party. It's a reckoning for pollsters. And look, this happens to both parties every couple of cycles. We talked to Leon Panetta about this. Your party ends up in the wilderness inevitably at some point, and you have to rebuild things. You have to have that family conversation. Think about that Republican memo that followed Mitt Romney's loss in 2012. How come we are not resonating with minority communities in this country, with the working class? Where are we? The Republican Party was in the wilderness at that point. Then Donald Trump came along and kind of reinvented the agenda for the party and moved it in a totally different direction. Does that happen to Democrats? A lot of different things could take place here. But to your point, Matt, if this had gone into a primary cycle, we could have ended up with a lot of different names. And Democrats will have a pretty strong roster, beginning with the man I already mentioned, Josh Shapiro, in 4 years.
So I guess the next thing for the Republicans is for Donald Trump to, I guess, form a cabinet. Is that what the next, between now and inauguration?
And it's all, everyone's playing the name game today in Washington. The tip sheets are overflowing. And it's really interesting because we hear so much about Donald Trump's superstition. He did not want to allow a transition team to do this work, which would normally begin many weeks before you get to the actual election. You have to kind of pretend like you won already to get these ducks in a row. So to not offend the boss, they started doing this quietly and, you know, without his involvement. And so short lists are absolutely here. You heard Joe Lavorgna on with us yesterday. Scott Bessent has been on with us recently as well, both being considered for Treasury Secretary. Some of the names like Mike Pompeo we're hearing about for Defense Secretary. and he's going to have a lot of people to hire. It'll be a very different process than the first time when he didn't think he was even going to win. I mean, they just started from scratch. They've got people lined up now, and they're being vetted. In some cases, we're told, by private security firms.
Okay.
So the FBI is not involved, which is also
Interesting.
kind of, very, very Trump 2.0.
Are we, by the way, in the media, are we not listening, right? Because when you hear complaints about immigration, they come from the right. When you hear complaints about, when we heard initially complaints about President Biden's, age, they came from the right, but were ignored by the networks and the Times. And when you hear complaints about inflation, they weren't really, we always try and downplay that. Hey, they got inflation under control. There's no more inflation. But clearly.
Did you do that? I don't think you did that.
Well, you know what? We did. We said food inflation has come back down, and we're getting closer to 2%. But we ignored the fact that inflation was too high to begin with and had driven absolute prices to a level that were untenable.
But what you said was still true. It just wasn't enough. And by the way, some people could be paying quite a bit less for things, but still not feel like they're enjoying the benefits of the economy. And we got into that.
Yeah, we said that a lot. We said, hey, the economy is so great, we're just not feeling it. But
yes,
maybe somehow it's not.
Well, it's not for everybody.
Yeah.
And, look, there are different stratas of the electorate that did feel like they did not take part in this. And if you look at the statement from Bernie Sanders, kind of said it all yesterday. No one should be surprised by what happened. He said the Democratic Party abandoned the working class. And so, of course, the working class abandoned the Democratic Party. That's pretty tough.
That is pretty tough and pretty direct. And you could argue Monday morning quarterbacking, but
it all is.
Kamala Harris what's the feeling of these early stages about what her future may or may not be? Anybody talking about that at this point?
I don't know anybody who sees her running a viable candidacy in 4 years. You get your turn in some cases, and there were a lot of people waiting in the wings. But boy, who knows? I mean, everyone. You want to talk about what we said on the air, Matt? Everyone counted out Donald Trump. They said his political career was over, and he will never be allowed back in the Capitol following January 6th. He's now the president-elect.
Yeah, now the president-elect. Joe, thank you so much
Great to see
for joining us. Joe Matthew, co-host of Balance of Power, that starts at the top of the hour, so stick around for that. Let's get a little bit of a reset right here. Go to our good friend John Tucker, NA Bloomberg Business Flash. John, what do you have?
All right, guys, major stock averages. Right now, they're mixed. Traders expecting, of course, the Federal Reserve to cut interest rates this afternoon. The expectation for a 0.25%. S&P 500 higher again after it notched a record high in the previous session. NVIDIA and Apple, they're leading the gains right now. Shares of NVIDIA up 1.5%. Apple shares, they're higher by 1.6%. The Treasury yield, they dropped after yesterday's historic sell-off. The 10-year right around 436. Evercore, ISI strategists say the stock rally nowhere near done. They say Donald Trump's plans to slice through red tape could propel the S&P 500 another 11% through the middle of next year. Right now, the S&P 500 up 36 points. That's a rise of 0.6%. We're at 5,965. The Nasdaq Composite Index 248 points higher. That's up 1.3%. And right now, the Dow Jones Industrial Average, after yesterday's record, it is down 19 points, 43,709. And again, yields 2-year, that's down today, down about 5 basis points, 421 to 10. Again, 7 basis points lower. That is at 436. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate that. Matt Miller sitting in for Alex Steele here in this hour. We appreciate that. Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Matt, I'm not sure if you're aware of my Milwaukee theory. And my Milwaukee theory is pound for pound, some of the best money managers in the world are in Milwaukee. I have no idea why.
I thought you were going to say motorcycles.
No.
Harley Davidson, baby.
Yeah, I know the HOG, H-O-G. I don't know what's going on out there. Maybe it's the University of Wisconsin. But one of those folks joins us right now. Janet Rilling, Senior Portfolio Manager and Head of Plus Fixed Income and Allspring Global Investments. Maybe because Ann Maletti was one of my first clients, and she's one of the smartest folks. Bloomberg Interactive Broker Studio is where Janet finds herself. Janet, today versus maybe a couple of days ago, has your view of the bond market, the treasury market, the Federal Reserve, has that changed given what's happened politically here in this country in the past couple of days?
Well, we do have new information, and we can remove some scenarios off the table because we do know some things about what our government's going to look like in 2025. When it comes to the Fed, however, I think the Fed is on the same path. They are looking to get off of restrictive level of rates. The expectation, of course, today is that 25 basis point rate cut. And I think as they look forward, they're going to continue to want to move in that direction. But they too now have more information, though still not enough to really know what policies will be implemented. So I think they're going to be cautious in terms of how they interpret the election results, but they are certainly aware of them. And I think down the road that is going to influence their path.
Yeah, we had priced in about 170 basis points of cuts for next year, for 2025. And right now, the terminal with the WIRP function is showing only about 80 basis points of cuts for next year. So the market has moved substantially in terms of pricing. Obviously, you can see it in the long end, well, across the curve, but especially on the long end as well, of the Treasury yields. Do you think that we turn that around? Is that just a knee-jerk reaction to Donald Trump, winning the presidency? Is it possible that rates on the 10-year go back under 4, or do you see them heading back towards 5?
I do think it's possible that they move back under 4. We did learn with this change in government that, we'll probably have a pretty supportive fiscal outlook for growth. So that's something that, will keep things growing. On the other hand, the prospect of tariffs leads to potentially more upward pricing pressure. So with that in place, it's a balance. The tariffs will take quite some time to, first of all, get in place if the policy is successful, and then to work its way through the economy. In the meantime, I think there is the opportunity for rates to start coming back down after people have digested all of the information. Inflation, though, it does still need to be top of mind. It is not at the Fed's target. It's been moving in the right direction, but it's been sticky. And, that is going to be a focus for the bond market. And certainly if the bond market is of the view that we're going to continue to grow the deficit, that's going to weigh on rates. And so it's probably more likely it will be in this range, but I do think it's possible we can go back below 4.
All right, so given that backdrop, do I just sit in my 2-year Treasury and get 4.2%, or do I take some credit risk out there?
Well, it's certainly tempting to stay at the front end, particularly money markets, right? We know a lot of folks have stayed in money markets.
Yeah.
But what we have to remember is those yields will continue to reset lower as the Fed continues to cut rates. And we do think that will persist. The Fed does want to move off of this restrictive level. So to avoid that reinvestment risk, it can make sense to start moving out the curve. And in terms of credit, we do know credit spreads are rich, but the economic outlook is quite good. And so credit spreads could stay narrow for quite some time. So we're not recommending a full overweight in corporate credit, but we do think some allocation there makes sense to get that incremental yield. Stay highly diversified. That's quite important. But if you're just huddled in the front end, you're really positioned for one scenario rather than being diversified for what is likely a wide range of scenarios.
In terms of stocks, we're just 35 points away from S&P 6,000. It's pretty unbelievable as I look down at my screen and I see 59.66 on the S&P 500 right now. There are very few strategists who even have this as a year-end target, let alone a 2025 target. Do you think we have more room to run here?
Well, again, I think we're setting up for a good growth environment. We have more clarity on tax policy, and from the corporate side, I think that is supportive. It allows companies to make decisions, to invest, to continue to add to capital expenditures to fuel that future growth. So I think that is about a lot of the optimism that's baked in. But we have seen in the past, the knee-jerk reaction after elections, people extrapolating things. It's not going to be totally clear sailing. There's going to be more talk about what is the tariff policy, what impact will that have, working its way through the supply chain. The input costs could be impacted. Retailers that you have a lot of goods that come from China could impact their margins, or else they have to pass that along to the consumer. So we're going to have to continue to watch how the consumer is doing through all of this. But I think at the outset, certainly having more certainty on tax policy and decision-making by corporate America is helpful.
In the fixed income world, what is a structured product, or what are structured products? Because a lot of people tell me that's where I need to look. How do you guys think about that?
Well, first of all, we would agree. We think that's a good place to look. We think
So is that
there's
like
value.
mortgage-backed securities, asset-backed securities, that kind of thing?
Yeah, it's really
Okay.
a range of securities. So agency mortgage-backed securities is the largest part of that market, but ABS or asset-backed securities, which actually has a wide range of exposures. I mean, it can be consumer, like credit cards. It can be auto exposures, but also some company exposures, franchise deals, like Five Guys is an example of a franchise deal. So it's
delicious, delicious.
Yeah, so that's a way you could get exposure to that. Very diversified exposures there. That's part of our view of what the appeal is to structured product, and a very important part of the investment grade part of the fixed income market.
So you're not talking like buffer products. You're not talking like, capped gains and protection against losses when you talk about structured.
No, thinking
products.
about cash flow streams that are packaged in a way that focus on different parts of the market. So, a pool of credit card balances would be one example of ABS. There's other exposures too. Commercial mortgage-backed securities is another segment of structured product. Certainly an area where like office properties have been under pressure, but it's a very wide space, and so there are things beyond commercial or office properties, things like leisure, retail, and many of those properties are doing quite well. So that's another avenue for structured
Medical,
product.
student housing, adult living or senior living facilities.
Why are you looking at me? Why are you looking at me? U.S. versus non-U.S. What do you guys at Allspring do?
We do both.
Okay.
We think that being diversified globally makes a lot of sense. European credit, for example, is an interesting area. You can look at valuation there compared to the US. Currently, it slightly tilts in the favor of European credit, and it's a way to just diversify your portfolio a bit more. We like the triple B area of European credit, and then that higher rung and high yield, the double B.
All right, good stuff. Janet, thanks so much for joining. You're based in Menominee. I can't pronounce this. I've been doing it for 40 years. Menominee Falls.
Menominee Falls.
Right, and that was originally Dick Strong Asset Management. We're out there, and I think he just went to University of Wisconsin, picked out like the best students every year.
I mean, I've heard your Milwaukee theory before.
Yes, and and downtown Milwaukee, there's some old crusty little firms down there that have been managing little money you'd never heard of, but they've been doing it for like generations. I don't know what's going on out there, but
It sounds fantastic to me. I love Laverne and Shirley.
Yep.
But didn't Donald Trump say it wasn't a very nice place to?
I don't know.
Wasn't he? He used a more colorful term.
I thought that was a trade. Or was that?
Well, that too.
It could have been as well. All right. Janet Rilling, Senior Portfolio Manager and Head of Plus Fixed Income, Allspring Global Investments in the greater Milwaukee area. We'll call it that. But she's here in our New York Interactive Broker Studio, coming to New York because it is the world capital, of course. Looking at S&P 500 up 37 points. The Dow down 13. The NASDAQ up 260 points. That's 1.4%. So it's had quite the rip over the past couple of days since Janet's sitting here. We'll quote the 10-year Treasury, 4.35%, giving back some of the yield pickup from yesterday. 2-year, 4.21%. For Alex Steele, I always call out WTI crude oil. It's pretty steady here, right at about $72 per barrel. We're going to have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Matt Miller sitting in for Alex Steele. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. It is Fed Day, and after announcing what's widely expected to be a quarter-point cut in interest rates, the Fed will have to reassure markets it can manage the impact of a president-elect who's vowed a raft of new tariffs and tax cuts. What is that? Fed Chairman Jay Powell, did his job just get more difficult after Tuesday's political election results? Katerina Sarajeva joins us here, a Federal Reserve reporter from Bloomberg News. Katerina, did Fed Chairman Powell's job get a little bit more difficult given the presidential election results from Tuesday?
I think in a way, yes. I mean, of course, you will try to, steer clear of anything politics related in his press conference. And, when he's asked about it going forward, they always try to remain apolitical. But I think the reality of the new administration is that we are likely to see some policies that may stoke inflation a little bit or even growth, right? It's not all negative, but it does mean, it may change some things for the Fed. And we've certainly seen that in banks, some of the Wall Street economists and financial markets kind of repricing what they expect for the Fed going forward.
So what do you think we're going to get out of today? I feel like it's going to be a pretty boring Fed meeting since they're locked in for 25 basis points, but they probably won't want to say anything about the next meeting, certainly not about 2025, right?
Yeah, I think that's right. I think today should be pretty boring. They're probably going to deliver what we're all expecting, which is that quarter-point cut, like you're saying. And then it's not one of the quarterly meetings, so we don't get updated economic forecasts from them. So there's not kind of those extras that we would get at, that we got in September and that we'll get in December. And yeah, I think they're really going to want to leave the door open because we don't, we've had some economic data recently shown that things might be heating up a little bit again. So even outside of the election, we're seeing some strength in the economy that might have implications for the Fed. And then also we don't know what policies will be implemented. We're not going to have a new government in place until January. And then, these things take a while. So the Fed isn't going to want to kind of subscribe itself to anything that hasn't happened yet.
So what do you think we'll hear from Chairman Powell today as it relates to the election? Is it just literally say nothing, just dance around it, or just, I guess, kind of say, hey, we're apolitical and we're fine?
Yeah, I think that is, both of those is what we'll see. And we've seen that all year. This has been a big question for them. But yeah, they love to say, look, we have nothing to do with this. Our job is to react to what the economy is doing, right? They'll say things like Congress has given us this dual mandate, stable prices, and maximum employment, and that's what we're focused on. We're looking at the data as it comes in to figure out what we can do. And they'll probably repeat something that they've been saying this year as well, which is that policy is well positioned to address anything that comes its way. So we're kind of in a, they started cutting interest rates already. We're in a position where if they need to cut more, they can do that. If they need to pause for a while, they can do that. So I think they see themselves as being kind of in a good place to be nimble and react.
Is policy really restrictive here? I mean, I'm looking at 6,000 right now on the S&P 500. Unemployment is at 4%. Growth is at 3%. I mean, what are they restricting with these levels?
Yeah, and we just got some really hot, earnings number, not earnings, like worker earnings numbers today. So yeah, I think that's been.
But earnings also have been good, and we're expecting 14% earnings growth in Q4 and Q1.
Yes, yeah. No, I mean that's been the $1 million question all along, right? How are we restrictive? How restrictive are we if we are? How is that even being transmitted to the economy right now? I mean, we know, for example, with mortgage rates, a lot of people are locked into low rates, and it's not having the transmission effect that it normally would. So it's. I think that's an open question, and I do wonder if we're going to start hearing more chatter of, are they going to have to start hiking again if things get really out of hand?
Paul, you're not locked into a low mortgage rate.
No, I'm at 6%.
Are your refinance dreams dashed by Trump?
Dashed.
Yeah.
I mean, the rates just kicked back up here. All right, Katerina, sorry, Federal Reserve reporter for Bloomberg News. Thank you so much for joining us there. Matt, before we let you go here and we go to Joe Matthew and Balance of Power, what are you driving?
Oh, actually, right now I'm driving so for those who don't listen regularly or watch my show, I drive a new car every week. So I'm always test driving a new vehicle for my podcast, Hot Pursuit with Hannah Elliott. Usually I'm in fancier cars, like maybe an Aston Martin or a hot new Mercedes, a lot of BMWs I like a lot. Right now I'm driving a Chrysler Pacifica minivan.
Ooh, how's that going?
It's a hybrid. I gotta say, I had never driven a minivan before.
You have 2 kids, so you should be in the market.
Yeah, and I've spent so many years and spent so much money trying to avoid going to the minivan. I get an SUV that functions like a minivan but still looks tough, and I feel like I've been wasting that cash because this is a pretty nice ride. I mean, it's not amazing, but it's got the low load floor. It's kind of smooth sailing with the hybrid engine. It's pretty good.
See, there you go. Yeah, we were 20 years we had the minivan thing now. No mas. Katerina, thank you so much for joining us there. Coming up, Balance of Power with Joe Matthew. He's here in New York City. He's going to bring us the latest with Kaylee Lines. Get the latest on what's happening in Washington, D.C. with a new president-elect, Donald Trump. This is great.
From the world of politics to the world of business, this is Balance of Power.
From Bloomberg's world headquarters in New York to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lines, I'm Joe Matthew. It's the Thursday edition of the fastest show in politics. We're still at world headquarters. We're still waiting for some races to be called, specifically in the swing states of Nevada and Arizona, Senate races. House control still up in the air. But Kaylee, today we're talking about Joe Biden, who's calling to lower the temperature after bruising losses on Tuesday night.
Yeah, here it brings some familiar language from Joe Biden as he spoke from the Rose Garden of the White House, talking about the victory of Donald Trump and repeating some things we've heard from him in the past, including that you can't love your country only when you win.
Campaign's a contest of competing visions. The country chooses one or the other. We accept the choice the country made. I've said many times, you can't love your country only when you win.
from the Rose Garden to Bloomberg's Washington Bureau, where we find Mike Dorning standing by from our Washington, D.C. studios. Mike, the president said setbacks are unavoidable, but giving up is unforgivable. He's telling people in the Rose Garden across the nation this as many Democrats blame him for Kamala Harris's loss. How do you see it?
Well, I think the president's trying to set up how history remembers him. There's a long tradition in American politics going back to George Washington of presidents using sort of farewell addresses to shape history's view of them and shape kind of a lesson they're trying to give the country going forward. Obviously, Biden has a lot to answer for from Democrats who feel like had he stepped aside sooner, they could have perhaps possibly put a stronger candidate or a stronger campaign by the same candidate. Those are all sort of hypotheticals, and we don't know what would have happened really.
Well, that's absolutely true. We also don't know for sure what will happen over the course of the next 74 days of this administration that he was talking about. There will be a lame duck session, both for him being a lame duck right now, Mike, and then a lame duck session, of course, for Congress. What realistically is going to be able to be accomplished between now and the inauguration on January 20th?
From Congress, most likely not a lot. They'll probably be able to come up with a solution to keep funding the government. Usually after the election, you can come up with a resolution to that reasonably easy with a little bit of standoffs and gamesmanship. But there's a new power structure coming in. Everyone understands what that is. So that makes the negotiating easier. The other thing we'll probably see is the Biden administration continuing to try to get money out the door from these funding bills that are their priorities, because once it's out the door, you can't take it back.
That's a big part of the story right now is how much Joe Biden can do for Ukraine, for instance, before he leaves office. There's still some money left in the $60 billion approved. Mike, should he start sending military hardware now? Could that be rescinded if Donald Trump wanted to pull it back?
The military hardware is something that's a little bit different than what I focus on. There are some things where it takes a while to get the military hardware over there, and I'm not exactly sure of the chain of custody, but he can't just send it out and it gets there right away.
Right.
My guess is even if it was on its way, it would be hard for Trump to stop it politically, even if he presumably could. But it doesn't even matter if a little more hardware gets over there. In terms of a war and a negotiation and strategy, Trump still has the leverage because they know whatever Biden gives them is short term. Trump's in charge in the long term.
Well, and Trump maintains that he can end the war in Ukraine in a single day. Of course, the first day of his administration, Mike, will be January 20th, and it will be a question of what he can accomplish on that first day in the first 100 days. What should we expect first?
I would expect you would see something on immigration and his campaign promise to do more about illegal immigrants, even if it isn't quite the mass roundups of millions of illegal immigrants right away or undocumented workers. They would do something quickly, and that's something that the president has the authority to do with a stroke of a pen. There are logistical impediments of where do you put people that you might round up, but you would see something quickly on that. You might see pardons right away for January 6th protesters, because that's something, again, all you need is pen and paper and you can do. What will take longer, but will be something that they will probably get on top of, is tariffs and trade and taxes. On tariffs and trade, the president can do stuff on his own, but it takes a while. There's a process. It takes months to go through, but he can start that process quickly. It's core. The other thing is taxes. You'll see movement there quickly, but probably not a resolution for many months.
Joe Biden came to Washington in 1973 when he was elected to the Senate, Mike, and today was a bit of a farewell. I'm sure he'll have another opportunity, but that was a moment for him as part of the legacy building that you referred to when he spoke to the Rose Garden earlier today, as he talked about the accomplishments that I'm sure Republicans wouldn't reflect in quite the same way. I just wonder if you could speak to the career of this 81-year-old who finds himself in a precarious situation here, being blamed, at least partially, for a loss.
Well, I think actually probably in the coming months, there will be kind of a negative focus on Democrats are going to have an internal struggle, and he will catch a lot of blame in that internal struggle. But as time sort of elapses, it'll focus more on, as you were talking about, the broad strokes of his career. Someone who has always kind of represented the center of the Democratic Party. He's kind of moved to the more liberal side as the party has moved, but he has had a strong instinct at somehow sort of catching somewhere in the middle between the progressive wing of the party and the white working class people who were the origins of the New Deal coalition and were the backbone of the party for many years. And he is someone who also was the partner of the first black president. He's appointed the first black, or not appointed, chose the first black vice president. So he will be a part of the civil rights legacy of the Democratic Party in history.
All right, Mike Dorning joining us from Bloomberg's Washington, DC studios. Thank you so much for being here. And of course, as we consider that notion regarding civil rights and racial equality in the United States and the historic nature of Kamala Harris's candidacy, she of course will not become a historic president, but she will be a historic vice president at the same time. Some of these racial demographics we're paying close attention to in the outcome of these results. The swing we did see to some degree among black men for Donald Trump, but most specifically, a big swing in the Latino population of this country.
Yeah, it's a big reason we can, I think, say with credibility why Donald Trump won. The fact of the matter is, you're right, black men in the end did break largely for Kamala Harris, but she had lower shares of each constituency than Joe Biden did in 2020. And when you put it together, that was enough to be a problem.
Indeed. Well, we want to focus more on what's happening with the Latino vote and overall what the future of this administration and potentially the House could look like, and turn to Republican Congressman Carlos Jimenez. He represents Florida's 28th district, which includes part of Miami-Dade County, and he also used to be the mayor of that county. Congressman, thank you for being here on Balance of Power. First of all, congratulations on your reelection. If we could just focus on Miami-Dade, Donald Trump just became the first president to win that county, which has a population that is overwhelmingly Hispanic. Some 70% of the population is Hispanic. He won it the first time any Republican has done so since 1988. What does that capture to you? And do you think that is a permanent switch or just a moment in time?
I think it's a permanent switch. I think Hispanics here are moving more and more to the right way because the Republican Party represents the values of Hispanics. We're people of faith, we're people of family, hard work. We believe in the American dream. We don't believe in oppressive government or over government regulations. Those are the things that we believe in, and so that's where the Republican Party is, right now. And frankly, the Democrat Party has left many Hispanics in their wake as they've gone more left and left and left. Also remember that many Hispanics here in Miami-Dade County in particular have fled socialism. We fled dictatorial regimes such as Cuba, Venezuela, and Nicaragua. And when we see the Democrat Party kind of embracing those regimes and also embracing some of their ideology, that's what caused the Democrat Party really to lose so many followers here in Miami-Dade County. We've also seen the independents swinging to the right too. And this trend has been going on for the last 8 years.
So walk back with us 2 weeks, Congressman. Was the whole uproar over the bad jokes told at Madison Square Garden, referring to Puerto Rico as a floating island of garbage? You know what came from that. We spent an entire week of talking about garbage on both sides of the aisle. Was that a media narrative? What about the corrosive effect that we all heard that this would have on the Republican ticket?
Look, Hispanics, we're not dumb. That was a bad joke by an idiot comedian in Madison Square Garden, but that's all it was. All right. President Trump certainly doesn't believe that. What was far worse was when Joe Biden, the president of the United States, called everybody who supported Trump garbage. That came right out of his mouth. That's far worse than what some idiot comedian
said in Madison
So
Square
you didn't
Garden.
believe
So
the cleanup on that when Joe Biden tried to rephrase that?
No,
you think he meant it?
I heard what I heard, and so did over 100 million people. They heard what they heard too. And so the fact that he was trying to clean it up, and then he had some people trying to help him clean it up, that's also an insult to us. Okay, we're not dumb. We understand what he said. We understand why he said it, and so that was an insult to now the majority of the American people, obviously, because Donald Trump not only won the electoral college, he also won the popular vote. And so obviously we didn't believe that retraction, as we didn't pay much attention to some comments about Puerto Rico. It wasn't funny, and certainly it did not reflect our ideals. Puerto Rico, they're great patriots in Puerto Rico. I have a number of friends that are from Puerto Rico. I love Puerto Rico, and so that was just a stupid thing to say by an idiot.
So that's what was heard by you and others last week. I'm interested as well, Congressman, in what you heard this morning. The Speaker, Mike Johnson, of course, had a call with members, and I'm wondering what projections you are getting from what is currently the majority leadership as to whether or not it is the expectation that you will stay a member of the majority.
Yeah, the leader and also all the leadership there expects that we will attain at least 218 and that we'll go beyond that. And so they're pretty confident in that number. And so, what I've seen, nothing that they said, gave me rise for concern at this point. I certainly would love to have a bigger majority. First of all, it's the majority, because the majority in the House is everything. Even if it's one seat majority, it's everything. And we need to have the majority, but they're confident that we're going to attain it. And so I will, I have confidence in my leadership, and I believe that we will be the majority party in the House.
So before we get to the next session, let's finish this one, Congressman. What's this lame duck session going to look like? There were questions about, for instance, an emergency supplemental for natural disasters, the hurricanes that we saw. How about the farm bill? What can you get done before the end of the year?
Hopefully we can get done a lot. I'd love to get the farm bill through. Look, we're going to have to obviously talk to the president-elect and what the administration wants us to do. But we need to pass a continuing resolution to keep the government open. I have high confidence we will be doing that. Question is, how long? I'd say probably into the March-April timeframe. That way, it gives us enough time, if we're in the majority, to put together the packages that we need to send on to the White House to start turning this country around and start implementing the policies of Donald J. Trump. And so, we're going to be working arm in arm, hand in hand with the Senate now that we control also the Senate. Look, if we control the House, the Senate, and the White House, we have no more excuses. We need to get to work. We need to deliver for the American people. We need to give them a break on high prices. We need to restore our energy independence and energy dominance. We need to restore our place in the world. And so all those things we need to do, and do it quickly. And we have to tackle the long-term problem of our debt. The national debt is running out of control, and our interest payments are higher than our payments for our expenditures on national defense. We need to get that under control too.
Well, I'm so glad you brought that up, Congressman, because as you discussed delivering for the American people, I do wonder, with the debt and deficit in mind, if you think it's realistic to deliver on all of the promises that President-elect Trump has made when it comes to taxes and all of the tax breaks he would like to offer. It is likely to be deficit additive, and I wonder if you think that actually may make it more difficult to work its way through even a Republican House of Representatives.
Oh, we need to look at the revenue side of the House too. It's not just the deficit side of the House. I've always said that there's two sides to this. There's spending cuts that we have to implement, but there's also revenue enhancements. One thing that the president has alluded to already is that we have natural resources underneath our feet. For some reason or another, this administration has really hampered our oil and gas exploration and utilization. We should not only just be energy independent, which apparently we're not right now. We should be energy dominant. We should be using it to help our allies around the world, and also to balance the imbalance in trade that we have. And so, yeah, it's going to be difficult to implement all these things, but we need to find the solutions. Look, one of the things that the president is really proud of is that when he makes a promise, he keeps it. And so I'm sure that he's going to, come to us and said, I made these promises. We're going to have to find a way to make sure that it doesn't increase the deficit. And I believe, here's what I think will happen. Because of these promises, we're going to have more growth, economic growth. And when you have economic growth, you also have additional revenue into the coffers, just like what happened during the Reagan era, where we had more money coming in, even though there was some tax cuts implemented by the Reagan administration.
Yeah, we had a long conversation with Joe Lavorgna about that right around this time yesterday, Congressman. We've got just about a minute left. What will happen in the energy market under the Trump administration, knowing that we're already at a record level of production now? How do you compel oil producers to pump more, having seen them burn so many times in the past and knowing their penchant for returning cash to shareholders?
Yeah, look, we need to have a stable energy policy and not one that goes up and down depending on the administration. That's something that we're going to have to do with legislation. The executive branch hampers production or can increase production simply through the stroke of a pen, executive action. We need to make sure that those that are investing in energy production are assured of the long-term investment is going to pay off. What we need to do is actually start to supplant Russian oil and adversarial oil with American oil. The Iranians, we should be able to put sanctions on Iranian oil, Venezuelan oil, because those are our enemies, and we need to start sanctioning them so that we deny them the funds that they need in order to wreak havoc around the world. That's one of the things I would love to see the United States do.
Great to have you with us this week, Congressman. Let's meet up when we're back in Washington. Congressman Carlos Jimenez of Florida, the Republican, with us on Balance of Power. We'll have much more ahead on Bloomberg TV and radio.
The top names in business are on Bloomberg.
A lot of things we've done which I think are bad, whether you're Democrat or Republican, if you support, it's often done in the name of good, have hurt the lower 20%. They're dying younger, their income didn't go up for 20 years. They're the ones who have more crime in their neighborhoods, their schools don't work. I think we have to be very clear-headed about how we can accomplish what we want to accomplish to lift up all of America.
Nobody covers business like Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The top names in global leadership are on Bloomberg.
It was important that when we came into office, we looked at the books, we assessed the state of the economy. We needed to understand the damage that's been done, and that £22 billion black hole is a real problem that we've got to deal with, and make sure that we go through all the processes necessary for a properly thought through budget.
Nobody covers the top global leaders like Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
This is Balance of Power on Bloomberg TV and radio, live from world headquarters in New York. I'm Kaylee Lyons alongside Joe Matthew. Thank you for joining us on this Thursday. It, of course, is 2 days after the election in the U.S. in which Donald Trump will become the 47th president of the United States, something that was acknowledged today in a Rose Garden speech by President Joe Biden, who shared that he had called Trump to congratulate him on his victory and has pledged to oversee a peaceful transition of power. It was similar in language to what we heard from the loser in this presidential election, Vice President Kamala Harris, who delivered her concession speech at Howard University yesterday.
The outcome of this election is not what we wanted, not what we fought for, not what we voted for. While I concede this election, I do not concede the fight that fueled this campaign. I spoke with President-elect Trump and congratulated him on his victory. I also told him that we will help him and his team with their transition, and that we will engage in a peaceful transfer of power.
Now that we've heard from both Harris and Biden, we assemble our signature political panel. Rick Davis is with us, partner at Stone Court Capital, Republican strategist, alongside Jeannie Shanzano, Democratic analyst and political science professor at Iona University. Great to have you both with us here. Jeannie, Joe Biden said, we have legislation we passed that's just now only really kicking in. When he spoke in the Rose Garden, he seemed to suggest that we were just getting to the good part as he's now leaving the building. And Democrats are largely for the losses that Democrats is if he had simply left a year earlier, everything would have been different. Are they right about that?
Yeah, it's been sort of ugly to see on the Democratic side, but not unexpected. There's a lot of blame going on. I think Joe Biden does own some criticism for this, but, the blame doesn't fall squarely on anyone, either Joe Biden or Kamala Harris. Democratic Party contributed to all of this. I mean, just one example. When, 7 out of 10 Americans tell you they are not happy and think we're on the wrong track, it's probably not a good idea either to run the incumbent at 80 years old or to choose his vice president and hoist her on the American public and expect them to feel differently. So today, Joe and Kaylee, I am saying that Kamala Harris is looking more and more like Hubert Humphrey, and that is not a good look.
No.
So, and nothing to do with what she's done, but the process by which Democrats did this. It's not a surprise that this happened. And so, we have to think hard about how we move forward. But we know now this is not the way. You don't put somebody on a ticket when people are this unhappy without a vetting process in terms of a primary.
But it's not even just about the presidential outcome, Rick. This election brought a rebuke of Democrats all up and down the ballot. They have lost the Senate. The majority still has yet to be decided with a few outstanding races, and they very well could have lost their ability to retake control of the House.
Well, I think you have to assume that right now the Republican Party is the majority party in the United States. Senator Hawley said about 1.5 years ago when the Trump campaign was just starting up that the Republican Party is the party of the working class, multicultural voters of America. And you would have thought he was talking about the Democratic Party from 10 years ago. And so I think you can lay the blame all you want. There obviously plenty to go around, and I feel bad that people go through that because having been the victim of losing campaigns, it's never fun. But the reality is there's been a realignment going on since 2015 that the Democrats have done virtually nothing to even abate rather than turn around. And so Republicans really are the working class family party. If you look at the data, Donald Trump significantly increased his share of the vote in working class counties all across the country. But what has also happened, and it's not attributable to any one decision or any one candidate, is that he's made inroads into traditional Democratic constituencies, primarily because he was able to show that he could offer another alternative, having been president and actually having benefited these constituencies, like, young working class Blacks, young working class Hispanics. I mean, when you look at it, it's an economic model, not a cultural model that has shifted this campaign.
Well, it's interesting, Jeannie, because I'm hearing a lot of people say today that where were you guys for the last year? How come we weren't having this conversation before Tuesday? Hindsight's 2020, right? Everybody's an expert and a political analyst this morning. But should there have been a more conservative look at this issue? We've been talking about inflation since Joe Biden walked into the Oval Office. How else should we have been looking at this?
Well, so many of the assumptions turn out in the aftermath, as you mentioned, Joe, to be wrong. I'll just give you one example. The Democrats were banking on abortion. They were encouraging these states to have abortion initiatives on the ballot. And the idea was that you would go into the polling booth, particularly as women, and you would vote for the right to choose. And then while you were there, you would vote for Kamala Harris. And that's not what happened. I mean, it's a good thought. But what seems to have happened as we look at the exit polls is women did what a lot of Americans did, which is they said, yeah, I can do two things at once. I can go for this ballot initiative, support the right to choose. And you know what? Then I can also protect my economics by voting for change and Donald Trump. And so you have both of these things going on. And I think one of the big mistakes that both parties make, but the Democrats made it a lot here, is to assume that because you are a woman or because you are a Latino or because you are Black, you think and believe a certain way. And in doing that, they put aside how important the economy is for all voters and how important it is for people not to be feeling like they are getting I'm sorry to say this, but screwed as they go into grocery shop or get gas and everything else. So, people were unhappy with this economy. It impacts all of us. Just because I'm a woman doesn't necessarily mean I cast that aside to save a right to choose. First election since the overturning of Roe. So we're just learning some of these lessons, but the assumptions are dead wrong and it's stereotypes, and that's problematic. Democrats do it a lot.
Well, and it is worth pointing out while many states that had abortion on the ballot in this cycle did protect those rights, there were states that did not, including in Florida. The abortion amendment making the 60% threshold in that state, even though it did win the majority of the vote. But that points us to, Rick, that there were other things on the ballot and that we did see some split ticketing, including potentially in a lot of these battleground Senate races. We know the Democrats won in Michigan and Wisconsin. We're still waiting to find out both Pennsylvania and Arizona. Right now in Pennsylvania, we're within 0.4% point. Dave McCormick up 98% of the votes in. In Arizona, not as much of the vote in. We're moving slower there, 69%, but Ruben Gallego is up on Kari Lake by 2 points. Is there any chance that the person who is behind right now in those races is going to be able to pull out the victory?
Yes, I think probably more so because it's so much closer in Pennsylvania. As you point out, less outstanding, but 30,000 votes separate the two. And so the reality is there's a good chance, from what I can tell in the voting patterns, that McCormick's got a legitimate shot at being a United States Senator this year. A little trickier in Arizona. It's all sort of concentrated in one place, Maricopa County. Maricopa County, we know, takes a while to count their votes. They love to be the center of attention. Good news this year is there's no reporting of irregularities or corruption or anything like that. So I suspect that once we get a final count from Maricopa County, it'll be a settled case in Arizona. But I think there's an outside chance that Kari Lake could overcome Ruben Gallego to become a senator, but much less so, only because it's a much bigger bogey. 2% of the vote is still, she's lagging behind. And she'd have to get a real big majority, over 60% of the outstanding votes in Maricopa, to be able to overtake that. So that's a heavy lift. We've seen it happen before. and maybe it will come in sort of the later ballots that absentees are done. But I would say just one thing. I don't think we should underestimate the habit of Trump voters to bullet vote, right? Especially the early voters who were, putting it on a ballot and sticking it in the mail. They may or may not vote a full ballot. And we've seen this kind of sort of, split ticket voting in the past, although the numbers don't add up, right? There are more votes for president in the state than there are for the Senate candidates.
Mm-hmm. We got a statement, by the way, from the Bob Casey campaign in Pennsylvania suggesting we could be headed for a recount here. As they write, quote, yesterday, the vote margin shrunk by 50,000. This race is now within a half point. The threshold for automatic recounts in Pennsylvania, with tens of thousands more votes to be counted, we're committed to ensuring, as you would imagine the rest of the line here, it ends by saying Senator Casey will be reelected. I don't know how long that's going to take, Rick, but we could be talking about recounts within a couple of days here. Kaylee, we've got a lot more to follow after our signature panel. Rick Davis and Jeannie Shanzana will be back with us in our second hour here on Balance of Power.
Indeed. And we also, while we're here on Balance of Power, have to keep track of the markets because this is Bloomberg TV and radio. And obviously, we saw a massive move yesterday, that first day that we knew Donald Trump would be the 47th president of the United States. You're seeing some of those trends continue today. And Bloomberg's Abigail Doolittle is following them for us. Abigail?
It is pretty incredible, Kelly, to see the gains that we do have for the S&P 500 and the NASDAQ. That S&P 500 up the better part of 1%, the NASDAQ up more than 1%. So after yesterday's big rally, the certainty that we're seeing, or the relief rally that we're seeing around the certainty of who the president-elect is, over the last 3 days, the S&P 500 up significantly, up the better part of 5%. That is the best 3-day stretch going back all the way to November of 2022. And again, having to do with certainty, but it also has to do with the Trump trade, the idea that taxes may be cut and tariffs and protectionist policy. So when we put this into the perspective, some pockets of that Trump trade may be reversing a little bit today. But yesterday's gains for Donald Trump are really pretty impressive, shadowing, I should say, the 2016 gains, the S&P 500 up 2.5%. That's the best day after a presidential election ever. So investors really cheering that. The Russell 2000 up nearly 6%, Bitcoin higher. So this is the market's way of saying that they too are voting for Donald Trump, that they're happy that Donald Trump is the president-elect.
15 handle on the VIX. Abigail, are we getting a little too relaxed here, too comfortable?
Good question, Joe, because about a week ago, it was closer to a 22. And at that point, you had some investors playing for volatility, playing around the uncertainty, others hedging. Now, though, not all that nervous, investors not so nervous. What we do have up later today, if you can believe it, I feel as though it's really getting lost in the dust. Of course, the big Fed meeting, it's pretty much baked in, though, that they are going to cut by about 1/4 of a basis point. It's hard to imagine that they would throw some kind of a curveball, but into that meeting, we do see a reversal of yield coming in, also that dollar in. But yeah, that VIX at 15, it seems as though investors are back kind of just in the saddle of going along and happy.
Elbows up on the barrel. Bloomberg's Abigail Doolittle. Thank you, Abigail. Reminds us, of course, less than an hour from now, we'll be in our special Fed coverage. Kaylee, not only the announcement, but the news conference, which I'd be very curious to hear today. I don't know what Michael McKee has up his sleeve, but I suspect we could have some questions about politics.
Well, sure. And especially what the political outcomes mean for monetary policy outcomes. If we're looking down the barrel of potentially inflationary policy in a second Trump administration, that will impact, presumably, the trajectory of interest rates. And also Chairman Powell might have some questions about his job. There's a massive question about what the Fed will look like under Donald Trump.
Yeah.
Mixed messages.
Keep them on board. Business Week interview. New Hampshire up next on Bloomberg TV and radio.
strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile and play on another device. But there isn't actually a gaming platform and experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
Game season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Yeah, I think that it would be irresponsible for us to ignore the AI revolution. I think that as much as there is a lot of short-term hype, I think long-term it has the potential to be transformative. And so we are spending a lot of time thinking about what elements of it are structurally have barriers to entry. And so there is a winner-take-all element to that and which don't. And it seems to me that things like chips, things like infrastructure and systems has a little bit of that, because NVIDIA is so far ahead, it's expensive to catch up. There's, the technology that it requires to build these chips are sort of based in Taiwan. What we're seeing is that some of the apps and some of the applications, there are no barriers to entry, right? Like it's fairly easy to come up with, and I don't mean to belittle the complexity of it, but they're not moats around those things like they used to. So I think that there is less of a winner take all in that space. You're going to have to earn that spot. Whereas, so it'll be fun to watch what happens. And I think there's going to be a lot of money burned in the process, because somebody will develop something and a fast follower will come along and make it better and cheaper, because data gets cheaper and more pervasive, and it's going to be easy for new players to come in and do interesting things. So I think we wait and we see.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. DraftKings has become a top performer in the booming U.S. sports betting industry. CFO Alan Ellingson knows the company must stay focused on change and innovation to succeed.
We're in an evolving business. We're constantly evolving and tweaking our expectations for how things should be performing. We're constantly looking at things in different ways.
Watch Chief Future Officer Wednesday, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insights with Haslinda Anand, only on Bloomberg.
Speaking of the Hall of Fame, 98.5% of the vote. Have you ever figured out who that person was that didn't vote for you? I mean, who is this person waiting for? I've hunted all 5 of them down.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
This is Balance of Power on Bloomberg TV and radio, live from World Headquarters in New York. Alongside Joe Matthew, I'm Kaylee Lyons. Thank you for joining us on this Thursday of election week. But it's not just any Thursday, Joe. It is also the Thursday we get a Federal Reserve decision, because we haven't gotten enough news this week. Let's add an expected 25 basis point rate cut onto it.
At least they didn't call the presidential race right at 2 o'clock. We were kind of thinking what we would do in that scenario here. But yes, less than an hour from now, about 50 minutes, we'll have the start of our special coverage here on Bloomberg TV and through the announcement and the news conference. But there's quite a bit of crossover, though, and I wonder, Kaylee, to what extent Jay Powell will be asked about the election on Tuesday night. Looks like you're pointing to some breaking news.
Yeah, we're getting some news and that Republicans have retained the majority or have earned. We just got a call from the Associated Press about we were watching. This is the 4th district where the incumbent Congressman Despacito has been defeated now, according to the Associated Press. The Democrat in that race, Laura Gillen, has had that race called for her. The margin with 98% of the vote points. She earned 50.9% of that vote. Despacito 49.1% of the vote. So this is important as we consider how tight the House and Senate, and the fact that the path does run from
Mr. D'Esposito is part of a trend here.
Yeah.
They had a largely losing night, managed to unwind some of the Republican gains from 2 years ago in New York State. Freshman Republicans Brandon Williams and Marcus Molinaro lost their seats. Now we add Anthony D'Esposito losing to Lauren Gillen in a race that was too close to call, remembering New York, Kaylee, and Berman, who controls the House.
Yeah, we still have 30 races to be called. Right now, the balance, 194 seats for Democrats, 207 for Republicans, and we're trying to get to 218 to understand a majority.
I will tell you, we got to New York over the weekend for our election week here. I was struck by the number run by and for and against House Republicans in the New York delegation. I think I saw more D'Esposito Oppo ads than anyone else. So this resonates for people who've been living around commercials. You are now going to get some relief. Washington, ahead of our conversation with Andrew Smith at the University of New Hampshire. And of course, the host of the Big Take DC podcast and political reporter in Washington, DC. Soleil, it's great to have you. Welcome from our Washington bureau. I'd love to just start wide here. There's a big conversation about the transition that's already underway, and I'm sure you're plugged into it. But just your wide impressions, having had a couple of days to let the dust settle here in the Democrats' loss.
The president will probably soon start that his transition co-chairs, Howard Lutnick and Linda McMahon, have been working on for him since August. I think he spent the first couple of days straight, like a lot of us, but he was making. And here at Bloomberg, we are eagerly awaiting for some of the top economic policy positions to be announced.
Well, so as we consider those economic policy positions, Leah, keeping in mind that it is Fed Day, what do we think about the composition of the Fed? We've had mixed messages from Donald Trump about whether or not he would still like to see Jerome Powell be chair. Regulatory question on Michael Barr, the vice.
Yeah, always mixed messages from politicians generally, but also President-elect Donald Trump. So, look, this is a decision that Trump does not need to deal with right now. He needs to fill thousands of government jobs. He will have obviously make the decision on his cabinet and those top posts for Fed chair and vice chair and other. Open up until 2026. So there's a bit of time for him to get his government in order before those decisions are made. And let's see if we hear after today's or this afternoon's Fed interest rate decision, if we see Trump hitting the social media airwaves to start talking about how Powell is performing.
It'll be another episode of The Apprentice. Number of positions in the cabinet and beyond. There's a lot of today on the names that are being bandied about, beginning with Chief of Staff. Soleil, is this Susie Wiles' job if she wants it?
You know, it's way too soon to say. There is one man who is going to make those decisions. He has not weighed in, according to Bloomberg News reporting. So far, all of the names that are being floated and put out for several months.
All right, Bloomberg Soleil Mosin, host of the Big Take DC podcast, which will have a new episode dropping today. Thank you so much. You can, of course, check that out wherever you get your podcasts, as she takes a closer look to the Fed. But of course, it's a Fed day that is within an focus back on the results of that election. Joining us now is Andrew Smith. He is director of the Survey Center at the University of New Hampshire. Welcome back to Bloomberg TV and radio. Andrew, if we look at New Hampshire specifically, it's a state that Kamala Harris won. There was some question earlier in the cycle as to whether or not a Democrat would be able to win for Donald Trump, but you also had a Republican winning the gubernatorial. So net, what does that say about the state?
Well, it really shows that there is a difference between the president and the governor. officials. They're the two people that have to basically be administrators. They're the chief executives of the respective electoral bases. And New Hampshire has a long tradition of electing Republicans and Democrats in opposite parties to those positions. So if you just go back in the last 20 years, John Lynch was a 4-term here, a Democrat, even survived the 2010 Republican landslide. And Chris Sununu was able to do that. He was a Republican. He was able to survive the Democratic landslide in 2018 here. And so here we have a Kelly Ayotte, former senator, pretty well known and liked within the Trump win at the top of the ticket because she got a lot of people that liked the way that Sununu governed. And I think governors in New Hampshire tend to govern in nonpartisan ways, much more focused on just making sure that the books balance, the taxes are kept low, and the economy's running.
Saw some interesting ticket splitting in New Hampshire. A lot of people expected to see it around the country. Andrew, of course, we saw in the last election, but it actually took place there. Kelly Ayotte, senator, won her race for governor of New Hampshire, even as Kamala Harris won at the top of the ticket. Is that just New Hampshire being New Hampshire?
I think there is a lot to be said for that, but you can see this across New England. Phil Scott wins again, a Republican winning in overwhelmingly Democratic New York. Baker would win in Massachusetts. Mitt Romney would win in Massachusetts. So I think there's something that goes on in Massachusetts where you are in New England, where you've got more mainstream Republicans, kind of more traditional Rockefeller Republicans, so to speak, are able to do well, even though the region and the state of New Hampshire are largely Democratic.
Well, so as we consider the wider region and the tighter margins we are seeing in 2024 for the victors, at least at the presidential level, when you compare what Biden did in 2020 against Trump to what Harris time around, I wonder if you think which of those is more indicative of the way things are going to go in the future, I guess. Was it just 2020 was a super high turnout election? There were higher vote tallies in total, and that what made the difference, or does this suggest that we might see repetitions of 2024 in that the margins are getting tighter and tighter and tighter?
I think you could see both. I think actually the 2020 was a record outcome for turnout. Like that, it was even more than the 1960 election, which is always seen in the modern times as the highest turnout election. I don't think we'll see that again. Remember, that was in the midst of COVID, in the midst of Trump's kind of was being impeached at that time. A lot of reason from Republicans and Democrats to get out. This is still high turnout this year, but it's probably more down around the 60 to 62% turnout when we get all the final numbers in. More likely to be a typical sort of a turnout as we'll see forward.
Well, there's a lot to consider here when it comes to your view in New Hampshire. I would just love your impressions broadly here as we look at the country. Andrew, you've been in the polling business for a long time, and there's said to be a reckoning after every election, and I wonder what it should be this time. Undersampling Trump, sample to reach more people who don't like talking to pollsters. How are people in your industry approaching this new frontier?
1,000 flowers are blooming is what I would start off with. The whole polling industry has been going through a paradigm shift in methodology for the last 5 years plus, similar to what happened between the 1960s and 1970s when we moved from in-person surveys to telephone surveys. Those worked very well until the later part of the 2000 aughts, when we saw response rates really plummet, where we're getting only about 5% response rates in telephone surveys. That makes them very, very expensive then, and web surveys certainly much less expensive. And since that time, us and many other organizations have been experimenting with these different technologies and figuring out best practices to use web surveys. We're going to be going forward to web surveys, whether we like it or not, because the cost difference is so great. We as an industry are going to be looking at this very carefully to see what methodologies were most accurate in predicting the elections, which didn't work, and hopefully be able to have a more unified front, I guess, going up to the 2028 elections. I should say that, generally speaking, the polls performed quite well. in this election, despite of all the problems that we spoke about.
Well, and that's true when you kind of look across the board, not just at the presidential race. And as we look ahead to 2028, I do wonder, Andrew, if ultimately this was mostly about Donald Trump consistently being underpolled, whether that was because of the way voters felt comfortable expressing their support or lack thereof of him or what have you. But I wonder how much of to this particular candidate who's about to start a second term, that's all he's constitutionally allowed. He's not going to be on the ballot again in 28.
Well, I'd say, first of all, the methodological challenges that we face in industry are going to continue. That said, the undercount, or what we would call the partisan non-response, some Republican votes over the last several cycles that may go away in a non-Trump era. One of the things that I've seen in the research that I've been doing is that Republicans were less likely to do things such as put a yard sign in front of their yard, or put a bumper sticker on their car because they were afraid their car was going to be vandalized. Support for Trump to families, co-workers, friends, whoever. Trump supporters to not support him. With a sociological theory called the spiral of silence theory, which says that people are less likely to talk with a pollster, but they're still going to vote for their candidate eventually. So this may be heightened because of Trump, but we may see this going on forward. I think it's something that we as researchers are going to be paying a lot of attention to.
Andrew, I mentioned your governor-elect, Kelly Ayotte. What about the governor about to leave the building? Chris Sununu threw all of his chips on Nikki Haley and has been twisting himself into a pretzel in some cases to try to justify his support for Donald Trump. What's in his future? Is it even in politics?
I think he has a future in politics. He's quite young. He was considering actually running for president himself in 2024. I think that he's got that in his future. I think the problem that any governor has, any party member, is it's very, very difficult to cross paths with the person who's at the top of the ticket. I had an old colleague here in New Hampshire who was the chair of the Republican Party back during the 1970s. He says, it comes a member of the party, this is your team. You have to support on your team and rationalize it why your skunk is better than the other party's skunk.
It's great to have you back with us here on Bloomberg, Andrew, director of the University of New Hampshire Survey Center. That's Andrew Smith joining us from the Granite State. Kaylee, we have a little bit of breaking news, at least CNN does, that pertains to a conversation we were just having. Jay Powell's future tenure, or not, remembering that Donald Trump Jay Powell to serve out his term as chair of the Fed, which runs 26 when he sat down with Bloomberg Business Week over the summer. Now he's saying something similar to CNN.
Yeah, he's essentially confirming that he will indeed let him serve out the remainder of his term, at least according to CNN's reporting. But then what happens after May 2026, of course, is an open question, keeping in mind that someone very close to policy, Scott Bessent, has advocated for what would effectively nominate someone and get them confirmed potential term is up, which of course has had a lot of criticism inspired by those who watch this space.
Questions. In fact, we asked him about that last time he joined us at the table here, about the extent to which that would neutralize the actual Fed chair and their authority. This may well come up, I suspect, during the news conference after today's Fed meeting. And in 35 minutes, our special Fed coverage will be here on Bloomberg TV and radio with a 2 o'clock decision in the offing. We'll have much more ahead on Balance of Power as we count down to that decision at 2 p.m. Wall Street time. Joined next hour by Bloomberg Opinion's Catherine on Balance of Power on Bloomberg TV and radio.
multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Asia is a continent of contrast. The region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we
translate Korean architecture.
Madam, in general terms, it's where we can be ourselves. We belong.
There is an old saying in Korea that says, "Call me blue, white breachy." It means simple. So it has a tremendous impact on architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum.
Technologically neutral, right? Split neutral. There's implications.
Hi, Tomo. Hey there, Emily. You have machines that say, I love you. I care about you. I'm your friend.
I'm a human, not an AI. You can't just shut me down. Who do you think you are?
I'm a Chang. Welcome to Posthuman.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power. This is Bloomberg. From the world of politics to the world of business.
From Bloomberg's world headquarters in New York City to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons. We are 1 hour from a Federal Reserve rate decision, and we're 1 day from the day the world learned that Donald Trump will be the 47th president of the United States. Still many questions out there, Joe, including the size of the Republican majority in the Senate, whether it will be a Republican or Democratic majority in the House. But one thing we know for sure is Chairman Powell is going to take the podium about an hour and a half from now.
That's right.
Knowing there is a new in the U.S. of A.
That's true. And of course, our special coverage will start before then, about a half hour from now, 1:30 p.m. Wall Street time, from right here in Manhattan. The surveillance crew will bring this to you on Bloomberg TV and radio with a 2 p.m. announcement, the news conference that could be quite political. A lot of questions, as CNN now reports, the same as Bloomberg Business Week did over the summer, that Donald Trump does plan to keep Jay Powell on the job. But to your point, Kaylee, we do still have voting to follow here and votes to count. The House has not been called. About 24 House races, a little more than that, are still outstanding, and we're waiting for Senate races to be called in some pretty important states. Pennsylvania, Nevada, Arizona. That Pennsylvania race could end up in a recount.
Who is currently lagging former Bridgewater executive 0.1 of a percentage point.
Yeah.
Margins are tight, as they would be, though, of course, the margin and the outcome of the presidential race much wider than initially expected, with what looks to be a landslide victory for Donald Trump and a sweep of the 7 swing states, though Nevada and Arizona have yet to be called.
Yep, that's absolutely right. Joining us now from Washington, D.C. is Bloomberg's Gregory Cordy. Gregory, it's great to have you with us. Thanks for joining. As we look at the future here, we're spending some time looking to the past. We heard addressed people in the Rose Garden, spoke to the nation about the to Donald Trump. Let's listen to what he said.
Yesterday, I spoke with President-elect Trump to congratulate him on his victory. And I assured him that I'd direct my entire administration to work with his team to ensure a peaceful and orderly
Gregory, it seems that Democrats' primary mission, the results and reforming the party and its message, is deliberate about showing what a peaceful transfer of power should be. Is that right?
Yeah, the line that we heard from the president today, and it's a line that we've heard from him in speeches about democracy during the campaign when he was still a candidate and through his presidency, is that you can't love America when you win, right? And that was delivered throughout the campaign as an indictment of former president, now president-elect Donald Trump, who famously sent a mob to the U.S. Capitol in an attempt to try to overturn the results of the election, railed against crooked elections, a fixed election. And here is Joe Biden intentionally trying to convey a more gracious tone to practice what he preaches and to say, look, the voters have spoken. It was a pretty convincing Trump victory. And now his job and his constitutional responsibility, as he said, is to make sure that there is a peaceful transition of power from now through January 20th, when President-elect Trump will take the oath of office.
Well, so even if this administration is willing to cooperate with the next one, Gregory, I do wonder if there still could be some bumps in the road, in that Donald Trump has expressed a great deal of skepticism around, say, the General Services Administration, which usually, of course, plays a big role in facilitating this, with the intelligence community, which would have a hand in ensuring there are background checks done on all of those who would be incoming into this administration. What kind of difficulty could that skepticism cause?
Yeah, remember 4 years ago, even before January 6th, there was a lot of friction between the Trump and Biden camps, accusing the Trump administration of really. There's been some changes. The Congress passed some amendments to what's called the Presidential Transition Act a couple of years ago, which should streamline this kind of thing. And the biggest issue now that we don't have is we don't have two different candidates contesting claiming victory right now. So we know that President-elect Trump will be the next president. He's been president before. So whereas, in 2016, when he was elected, he was really starting from scratch, trying to put together a team, understand real sort of what roles he even had to fill. There's a thing called the Plum Book, which lists every political appointment in the administration that presidents have to fill. Trump knows how to do that now. He has people. It presumably will be a less rocky transition, but I agree with you. I think President Trump will try to go it alone, not seek the help of the Biden administration for the transition if he can all avoid it.
Bloomberg's Gregory Cordy. Gregory, thank you for the time and the insights. As we turn to our signature political panel, Rick Davis is here, partner at Stone Court Capital, Republican strategist. Jeannie Shanzano, political science professor at Iona University and senior democracy fellow at the Center for the Study of the Presidency and Congress. Great to have you both with us. Last hour, I asked Jeannie if Joe Biden deserved the blame he's getting. I'd like to ask you a slightly different question, Rick, because you worked with Joe Biden in your career in the Senate quite a lot. He knew John McCain very well. And I wonder, as the legacy building begins here, while he's in a tough spot, how will he be remembered?
Usually, history treats former presidents better every year you're outside of office. And I think that there's no question that he accomplished a lot legislatively in his term of office. Trillions of dollars of spending to supercharge the economy. He's handing over a very robust, healthy economy to Donald Trump. So that's a real plus for him, right? Even though he won't get credit for it politically, right? It's obviously not something that Kamala Harris could take advantage of in the campaign. But I think his failures are foreign policy, right? Which is exactly the opposite of what most people would have thought, right? That his stewardship.
He wanted to be the America's baddest president.
Right, exactly. And so, it's unfortunate for him, but I think that's the cross he'll have to bear. I mean, the botched withdrawal from Afghanistan will haunt him for eternity.
Well, so Jeannie, as we consider that, the kind of world that exists now when Joe Biden leaves office with ongoing wars in multiple theaters, there's also the question, and Rick was just alluding to this, of whether the accomplishments that he likes to herald are going to be lasting. When he spoke from the Rose Garden, he was talking about legislative accomplishments, alluding to the likes of the Inflation Reduction Act and the CHIPS Act, things that Republicans are talking about peeling back if they get power back. And it looks like they very well could in the House after winning the Republican majority in the Senate. So the things that Biden wants wants to be remembered for, are they actually going to last in the U.S.?
Yeah, it's such an important point because, of course, Donald Trump, the Republicans now come in with a mandate, and they have been very, very clear throughout this campaign on what they intend to do. And to your point, a lot of that is focused on peeling back what the Democrats and Joe Biden put into place. And that's one of the reasons, quite frankly, they got a lot of support, particularly as it pertains to regulation. So I do think still unresolved at this point is so important, and why that the Republicans have in the Senate, and if that changed much with these last few races, and the size that whoever wins has in the House matters so much. You know, you just point to one example. You've got Elon Musk saying he's going to cut trillions of dollars in what he describes as wasteful spending. That's not going to happen if either Democrats have the House or Republicans retain it by a very narrow majority, because it's going to be difficult there. And then, of course, to pass the filibuster in the Senate. So those majorities are going to matter. But in a larger perspective, that is what Donald Trump has told us he intends to do. And this impacts everything from energy to, as you mentioned, the CHIPS Act. They've even talked about, we heard Mike Johnson talking about the Affordable Care Act. So all of that is going to be on the table. And all of these things that Joe Biden was just talking about in the Rose Garden as big, successes for him, and I agree they're big successes. Many of them are in danger of being repealed, but it's going to start with whatever Donald Trump can do via EO, because those things are the things he will tackle first. The other things are going to be a little bit more difficult for him to do unilaterally.
Joe Biden said today in the Rose Garden, "You're hurting. I hear you and I see you. Don't forget all that we've accomplished." What does that tell you as we prepare to hear from the Fed? Current state of the economy, interest rates. He would point to inflation, I suspect, as an accomplishment. While they didn't finish the job, they got it down to 2.1%. I know that every news release says there's more work to be done, but he's got to have this in the back of his head as Jay Powell prepares to hit the podium today, that we.
Yeah, I think that the only thing that would actually is the election of Kamala Harris on the fact stewardship of the economy was good. So he's going to never have that to think about as far as a legacy item. But the facts are there, right? So historians write the history. It's not what actually we experience. And I suspect he'll get a decent write-up on his stewardship of the economy. I remember sitting at this desk talking about how a recession was almost a certainty 2 years ago, right? And so, he steered us through those troubled waters, and he should get credit for that.
Yeah, this White House loves to remind us here at Bloomberg about a recession call from about that long ago that was projected with 100% certainty. Hasn't yet materialized. But Rick, when we consider then future stewardship of the economy, everything Donald Trump has promised, and we were speaking in the last hour with Congressman Carlos Menendez, a Republican from Florida, about this. There is a lot he says he wants to do when it comes to deregulation, when it comes to tax cuts and supplementing those tax cuts with income from tariffs. If we were to consider all of it together, how likely is it that the majority of Donald Trump's campaign promises turn into actual reality?
Yeah, look, I think that it's not a purity thing, right? I mean, like, there are going to be aspects of all the things that he talked about turned into legislative or executive proposals that get acted on. It's not going to be 100% of everything you do. Ronald Reagan had this great line. He's like, "I'm going to demand 100%, but I'll settle for 80." And I think Donald Trump gets it, right? He is a deal guy at his heart, and a success is a success, whether it's 70, 80, 90% of what he wanted. He has the incredible benefit of having been delivered a great economy when he was first elected in 2016 after a global financial crisis in 2008. And now he has this, the great benefit of getting a terrific economy handed to him after, pandemic. So he has, the stars have aligned for him. And I wouldn't underestimate Republicans looking at this and saying, here's last thing we want to do is overspend, or efforts to let the economy grow. And by the way, I think part of that role is going to be Elon Musk's whispering in Donald Trump's ear. Deficits matter.
Well, I know that you're not a big fan of that idea. with Elon Musk working with the future administration, Jeannie, but I wonder some of the other names that are being floated right now. Everybody's got a short list at the moment as Donald Trump has to build out a cabinet. John Paulson's name is floated, as well as Scott Bessent for Treasury Secretary. Both of them have been on Bloomberg talking about this the last couple of weeks. Joe Lavorgna, who was with us on the program, sat at the table here yesterday being floated for chair of the Council of Economic Advisors. How do these names make a Democrat feel?
You know, I think Democrats are feeling like they have to be the opposition party that they have now found themselves in. And again, it depends on what happens in the House, but certainly they feel like they have to watch very carefully. I mean, for many Democrats, one of the things that was so frightening to them as they thought about a potential Trump presidency was Project 2025. And as you look at that 900-page document, which of course Donald Trump has said he is not a part of and has nothing to do with his campaign or now his upcoming presidency, there are a lot of proposals in there, including economic, which send shivers up the backs of many Democrats. So they are going to have to be the loyal opposition watching and taking exception to steps that the president and the administration, Republicans in DC, may take that they find objectionable. And I would just say, you know, I think, by the way, Elon Musk, one of my favorite topics of the last few weeks, he's got a big challenge on his hands to cut that much if he has either a Democratic House or a Republican maintaining a very narrow lead. You know, he's done beautifully in the private sector, but the public sector is something different. So as much as I may not like it, it's going to be fascinating to watch.
Well, one of the proposals, at least in the area where we are right now, that might be popular is the lifting of the SALT cap, which Donald Trump had promised. And we were wondering how that might resonate here in New York in the House races that ultimately could have a hand in deciding the majority. And other than Mike Lawler, the incumbent Republicans that were seen at risk, Rick, have lost their races. The AP just within the last hour called the Despacito race for his Democratic opponent, Laura Gillen. Marcus Molinaro lost his reelect, as did Brandon Williams. We obviously have a lot outstanding in the West, California specifically. So is New York something that could be an example of how the rest of that is going to go, or is this an outlier?
I think New York and in some cases, depending upon the district, California are outliers, right? We did extremely, Republicans did extremely well in the midterm in New York and California. These weren't historically red districts, and I would have anticipated some losses, especially in those two. But the reality is Republicans do look poised to take control of the House of Representatives with these losses. I mean, it's literally 3 of the 4 losses that Republicans have taken in New York for the rest of the country. So there is a lot of resiliency with this Republican majority. It won't be big, as Jeannie says. I mean, at best, I think, 223 seats would probably become the Republican majority, which takes us right back, deja vu all over again, pretty much where we started the year, at the beginning of the Biden administration.
Jeannie, Donald Trump told CNN today, same thing he told Bloomberg Business Week a couple of months ago, that he does plan to keep Jay Powell on the job, remembering, of course, he tapped him to begin with. Was it the right decision?
I think it is. First of all, his term, as you've talked about so many times, isn't ending. This notion that you talked to Scott Bessent about this shadow chair, that doesn't resonate with many people. I think you've got to give Powell credit. Where we are today in the economy, he has shepherded that. And I think Donald Trump is very, very conscious of the fact that he is, as Rick just mentioned, inheriting a very good economy. And while he has publicly taken exception to Powell many times, it is now his economy. He owns it. So I think it is a smart to try to take on Powell at this point or make any changes there, which again would be difficult for him to make without something happening that would allow him to charge malfeasance of some kind. So it is a decision that makes sense, and it reiterates what he has said in the past.
Are we still going to see, though, frequent tweets or Truth Social posts or whatever at this time around Fed decisions and the push to cut rates at every turn, Rick?
Well,
we experienced this last time.
He is a major shareholder with billions of equity in Truth Social. So I would imagine he will feed the beast from time to time. I mean, it's in his self-interest to do it. But already we're seeing a little bit more structure to the run up to his transition, including this announcement today that he would expect Jay Powell to see his way. That tweet could have looked much different. Confident that he'll probably spend more time on X than he has throughout the campaign because, of course, his new best friend is going to insist upon.
Did you see this though, Kaylee, on X? David Plouffe has deleted his account, according to Jackie Heinrich. I wonder if we see more Democrats make that choice. And that's something.
Yeah, I would think so. I mean, a more partisan platform.
Yeah.
It's the way he wants it. Politics and where the majority of users will.
10 seconds. Are you going to stay on X?
I am barely on X, but I'm going to stay on. You know, I enjoy telling you and Joe what I see and sending you little things. So I'm there, Kaylee.
All right, Jeannie Shanzino
Truth Social.
and Rick Davis, our signature political panel. Thank you. We have much more ahead here on Balance of Power on Bloomberg TV and radio.
In case you missed it, on Bloomberg Technology.
We're excited to change the expectations for space companies where you have this always on, reliable, and frankly dynamic satellite connectivity that you would expect of your power grid.
Easier access to space means more demand for space, and that's the definition of an exponential growth function.
I think that's what's so exciting from a business perspective. If you can do it, you're one of the few numbers of organizations in the history that actually pulled it off.
Don't miss Bloomberg Technology live every weekday.
The top names in business are on Bloomberg.
A lot of things we've done which I think are bad, whether you're Democrat or Republican, if you support, it's often done in the name of good. They're dying younger, their incomes didn't go up, more crime in the neighborhoods, their schools don't work. I think we have to be very about how we can accomplish what we want to accomplish to lift up all of America.
Nobody covers business like Bloomberg. Context changes everything. The top names in global leadership are on Bloomberg.
It was important that when we came into office, we looked at the books, we assessed the state of the economy. We needed to understand the damage that's been done, and that £22 billion is a real problem that we've got to deal with, and make sure that we go through all the processes necessary for a properly thought through budget.
Nobody covers the top global leaders like Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving, allow for deep discussions and important insights. Are markets too optimistic? How do you worry about it? Completely stop. I'm Francine Lacqua, and this is weekday only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings the unmatched expertise you need to keep track of breaking news, in-depth market analysis, makers in and around China. Bloomberg, the China here on Bloomberg. Context changes every. Reshaping the C-suite. Bloomberg's user shines a spotlight on these dynamic leaders. DraftKings has become a top performer in the booming U.S. sports betting industry. CFO Alan Ellingson knows he focused on change and innovation to succeed.
We're in an evolving business, constantly evolving and tweaking our expectations for how things should be performing. We're constantly looking at things in different ways.
Watch Chief Future Officer Wednesday, only on Bloomberg.
Speaking of the Hall of Fame, 5% of the vote. Have you ever figured out who that? I mean, who is this person waiting for? I've hunted all 5 of them down.
This is Balance of Power on Bloomberg TV and radio. Thanks for joining us on the fastest show in politics
Today, the shortest in recent memory as well, as we prepare for special Fed coverage. That's about 10 minutes from now. The Bank of England beat us to it, cutting interest rates for the second time only since 2020. We got a 0.25 percentage point cut. Bank's Governor Andrew Bailey commented on Donald Trump's win in his news conference after.
Look about the US election. Okay, just first of all, we always respond to announced policies, not, and that's true in the world, it's true in the UK, not to, stories about what they might be. So we're not going to respond to anything. The second thing I'll make, just to be very clear on this, we work with all US administrations.
If we're going to get some similar language from just over 1 hour from now. So joining us with more as we head to the decision and the press conference is Catherine Edwards of Bloomberg Opinion. So Catherine, we have a lot we could ask you about the election and what influence, if any, it will have on Fed policy. We could just begin with the policy itself. You have Elizabeth Warren this week pushing for another 50 basis point Fed cut. The market is expecting 25 basis points. And there are others suggesting this economy might not need another cut right now at all. Where do you come down?
I mean, the last jobs report was low enough, even with the data concerns from the hurricane and the strike, that I would be shocked if they didn't.
At least 0.25 point. Are we in a world in which some Democratic senators, including Elizabeth?
I would be surprised if they went that high. I mean, core is what they baked in. They like sticking to expectations, and what the economy needs, almost always is steadiness and predictability to a certain degree. So able to look at the data, see that we had a weak jobs report, but an okay GDP report, stay on track for continuing to reduce rates at a steady clip, I think is what they'll do.
I just want to ask something about Elizabeth Warren really quickly before we continue our discussion on the Fed, because the Republicans obviously have earned the Senate majority. That's going to make Senator Tim Scott chair of the Banking Committee. But when you look at the senior members of the Banking Committee on the Democratic side, Mark Warner and Jack Reed likely to be ranking members on other committees. That could mean Elizabeth Warren is the next ranking member of the Banking Committee, helping to lead the inquisition of whoever the Fed chair is biannually on Capitol Hill or semi-annually. And I just wonder if she has a greater role in the Senate in defining banking policy, what impact ultimately that could have, knowing that she does tend to be much more liberal in her ideas.
She's a firm regulator, and that's, she was a lawyer and a professor for some time, but she, really made her mark in so many ways of being part of the auditor of the TARP funds, if we can all go back to that very unpleasant time in economic history, and she has proven to be very effective at being a regulator and overseer, even though she is now a senator. Is not just to set policy, but also to set standards. You can't be so mad at a regulator that she comes into power. It does make me wonder why they're so upset.
Yes, you are. You're allowed to. A little TARP and Edwards. It's interesting here to consider what we're going to learn today in the news conference, Catherine. I don't know what you would be asking Jay Powell, but I suspect we're going to hear about Donald Trump's victory this week, what it will mean for his tenure. What do you think he'll tell us?
I'm not sure. I mean, he's been trying to avoid politics for a long time. I think he'll echo what we heard from the head of the Bank of England earlier, that they don't respond to claims or pronouncements. It's when a policy has been announced and enacted that they adjust their policy making. So, I mean, we just went through a campaign that but he doesn't really have a lot to go on other than,
that new president has, to your point, whether it's blessed or on the campaign trail, including that for higher tariffs potentially across the board, at the very least higher tariffs on countries where the U.S. imports a lot of goods from, Catherine. And I wonder if ultimately, if enacted, that's going to bring this entire cutting cycle for the Federal Reserve premature end.
To the extent that he actually pursues the tariff policy, I think the Fed would have to work around it, because the impact on prices could potentially be devastating. The job of the central bank to keep prices low would be made much more difficult if import prices for U.S. producers were to climb as they are, no doubt, in behind which industries would be most affected. I doubt that Doubt that they're not planning for it right now, but that doesn't mean that they're counting on it occurring or that they would act as if it has started.
Well, Catherine, we're hearing a lot about animal spirits on Wall Street. To tell you about the reaction that we've seen, certainly it's been powerful. What do you think Donald Trump will mean for our economy?
You know, it's unclear. I think presidents often get too much credit for the bills that come due and the investments that start to return that were enacted by people in the office long before then. I mean, it's a $20 trillion colossus of an economy. You don't really get to control it with a wave of your hand, even if you are the president of the United States. You know, he's inheriting an economy that's basically been given a second chance. You know, so many people thought when the 2024 election happened, we'd be in a recession or trying to come out of one. So we've got a second chance for the economy, and it's been handed to him. He's only the second president since Ronald Reagan to take office not in a recession. It's him and H.W. Bush. So that's a gift. That's lucky in a lot of ways. And I would hope that he doesn't squander it. But as for the rest of economic policy, I don't think I would be, radical in saying that he's not exactly a man that can be taken at his word. And that there is a lot of blessing is pretty detrimental. I think will probably use this opportunity to pass to devastate the kind of current fiscal state of the U.S. government. And that's probably all we can count on at this point is just another tax cut.
So you think he'll be devastating is what I'm hearing. Catherine Edwards, thank you for joining us. Find her work on the term limit online at Bloomberg Opinion. And we always appreciate the insights, certainly ahead of a Fed meeting. In just a moment to our colleagues for special Fed coverage. Balance of power at 5 o'clock to unpack what we heard.
Yeah, and it's expected to be a 25 basis point rate cut, but it's really the press conference where we could see a lot. Given some of the economic policies put forward President-elect. And of course, we'll wait for political questions as well. That's it for Joe and I. A special edition of Bloomberg Surveillance, The Fed Decides with Jonathan Farrow, Lisa Abramowitz, and Tom Keene will start right after this on Bloomberg TV and radio.
AI is not technologically neutral. There's implications.
Machines that say, I love you, I care about you, friend.
I'm a human, not an AI. You can't just shut me down. Who do you think you are?
I'm Emily Chang. Welcome to Post-Human.
In case you missed it on Bloomberg Technology.
We're excited to really change the expectations for space companies where you have this always on, reliable, and frankly dynamic satellite connectivity that you would expect of your power grid.
Easier access to space means more demand for space, and that's the definition of an exponential growth function.
I think that's what's so exciting from a business perspective. If you can do it, you're one of a few numbers of organizations in the history that actually pulled it off.
Goodness. Every weekday.
Equity just as one piece of the institutional equity market. There are dollars invested than uninvested, right? So you have about $3.5 trillion in the ground that needs to get resolved versus about $1.5 trillion that's wanting to be invested. So if you're a private equity manager, you're trying to decide, do I take my capital and put it into my existing portfolio to either defend what I own or to try to grow it and create more value? Or do I use some, to your point, some creative financing to extend the duration or the runway of what I own and then try to put the capital into the new market environment? And everyone's taking a different approach, function of where you are in your life cycle. Everyone is dealing with that. Even the highest performing PE firms, you're seeing slower fundraising. And in this deal, how to get liquidity back to your investors.
The top names in business are on.
They're bad, whether you're Democrat or Republican, lower 20%. They're dying young, didn't go up for 20 years. They're the ones who have more crime in neighborhoods. Their schools don't work. I about how we can accomplish what we want to accomplish to all of America.
Nobody covers business like Bloomberg. Context changes everything.
Live from New York City for our audience worldwide, Bloomberg's The Fed Decides starts right now.
This is a special edition of Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz. Bloomberg Surveillance, The Fed Decides.
To another Fed rate decision and Chairman Powell news conference. And Lisa Abramowitz, I'm Jonathan Farrow, teeing up one of the most bizarre Fed decisions we have seen in a long, long time.
They're ultimately political because the economy is political, but they can't represent the political sphere that has just very much changed the entire dynamic in markets. How do they talk about this without talking about this? How do they remain something that's not even news?
What's great about it is we've got exit polls coming out at 2:05, so we'll have our first look here at a different Fed meeting. It's election central at the building.
I'm pleased you've gone there, TK, because I think that's the most important point. We're operating on two completely different planets right now. This market in the last 24 hours has been pricing in a domestic growth shock, a positive growth shock. This Federal Reserve is working on forecasts from back in September, and we're still trying to work out how big the margins might be down in Washington this week and how workable those margins will be
205 years from now, when we actually get the transcripts from the meeting and we get a sense of just how they're discussing that election and the potential ramifications. The issue is they're not going to talk about it. They're going to say, look, we're going to get incoming data. We're not necessarily going to make rash decisions. However, they have to give scenario analysis, and that's what I'm looking for.
A scenario analysis. I'm in the scenario to FOMC on the Bloomberg and look at the meetings in 2025. Where's nominal GDP going to be May 7th, the third meeting of 2000? What's the character of it? Is it an inflation dynamic? Or does President-elect Trump get the growth he wants?
These meetings might look very, very stale by the time we get to spring next year. We've all got to figure out how many of these campaign promises become reality. Equities right now on the S&P 500 up and %. Remember the 10-year yield? That 10-year yield, 50 basis points, was trading in the 360.
And to me, this is the main question that Fed Chair Jay Powell needs to address in the press conference. This is effectively a tightening in financial conditions by the tune of 70 basis points since the last Fed meeting. How do they respond to that? Is that actually causing an expediting of the weakness? Or is this indicating that there is new strength in the economy based on what we've seen from the Citigroup U.S. Surprise Economic Index that really has surged going back to April? Coming up, what we're looking for, Kathy Jones of Charles Schwab and Aditya Bahave of America Securities. They will be with us until the Fed rate decision at 2 p.m. Eastern. Then immediate reaction from PIMCO's Rich Clarida, Diane Swank of KPMG, and Deutsche Bank's Matt Lazzetti. And finally, breaking down Chair Powell's news conference where he hopes to say nothing, and we will try to find anything but BlackRock's Rick Reader and Dom Constam of Mizuho. John.
Some bond market commentary. Academy's Peter Cheer. Buy bonds. Strategus. I'm a buyer of bonds. That's Chris Ferrone. Here's Macquarie's Terry Wiseman. If there's a surprise coming from Trump in the next few months, it will be about fiscal restraint rather than fiscal irresponsibility. Joining us now, Bob Michael of JP Morgan. Bob Michael, have you been buying bonds?
We have been. Mostly credit, but we've been in the market buying. We see this as the mirror image at what happened at the last FOMC meeting. The Fed did 50 basis points. The market had already priced it in. There was some consolidation back to around 4%. And then all the polls started to come out and shifted that. This time, we look at buy the rumor, sell the news again, where there's been a backup to 440. And suddenly we have the election results. Everyone's looking around. We're at 440. It will take over a year to pass any fiscal stimulus. And suddenly it looks like the market's going to consolidate back around 4%.
So then why wouldn't that be an argument to buy long-dated treasuries as the purest bet on this backup, considering that that has been the biggest move?
Because the corporate bond market looks more attractive. You get incremental yield. The thought of recession is now almost completely off the table as a tail risk because you've got a unified Congress and administration in that will do everything possible to prevent recession, moreover, ensure that there's reasonable levels of growth.
Michael Ferroli, who works for a small bank on Park Avenue, he stated, okay, we got this meeting today, we got the December meeting, and then there's a huge mystery out of 2025. Do you have the same feeling that you really don't know where we're going to be first quarter, even second quarter 2025?
I think the Fed today should be discussing what level do we have to get to that's a reasonable resting spot that takes some pressure off of businesses and households. because it's there. Inflation is close to their target. Consumers are struggling a little bit. You see a little pressure in corporate America. Get to a spot that relieves and wait and see what comes out of the administration. Is that rate cuts? Could be.
Is that a John Williams spot, or is it a spot much higher?
I think it's somewhere around 4 to 4.5%. I think you're going to see a rate cut today, a rate cut before year end, and then 2 to 4 rate cuts in the first half of next year.
How dependent is that on policy down in Washington from the other side, from fiscal authorities? How dependent is your rate cut call for 25?
Not very dependent. That's just looking at the economy as it looks today. The momentum in the economy is still a slowdown. We know there's likely to be a tremendous amount of stimulus coming. Is that the end of next year or into the following year? But what do you do in the meantime if you're the Fed? You don't pause here and wait for a year to see what it looks like. If you do that, then the probability of recession before then has to go up.
Given the fact that you think that the baseline of the economy hasn't changed dramatically from before November 5th and after before November 6th and after November 6th, why do you think that higher long-term treasury yields doesn't exert more downward pressure on this economy and actually expedite any weakness?
You're right. The backup in yields is going to be tough for businesses and households to absorb. We were already looking at new and existing home sales. We're plunging. This isn't going to help them pick up because home prices for sure aren't coming down now. And mortgage rates for sure are going up a little bit. And all the amend and extend and pick in corporate credit, a lot of that tells you there was pressure there. So this doesn't, there has been a tightening of financial conditions in some parts of the economy.
If this is a Fed truly worried about weakening in the labor market, why not stop rolling off their balance sheet? Why not stopping some of this quantitative tightening that they've been doing? I mean, why don't they use their balance sheet even with the accusations that could come with it?
Okay, so we are for now gliding into a soft landing. They've done a very good job of getting there. I think the path with 25 basis help them continue to get there. When I just wonder, is there going to be any more tapering? Is that the passive aggressive way to push back against the potential for fiscal policy stimulus? Just let it run off.
John Edwards sat on a lawn in Louisiana years ago and invented two Americas. We just had an election that starkly is two Americas. Is Jay Powell going to speak to the elites today, booming in this financial market, or can he address two Americas with policy?
I think we're going to see three things from Jay Powell. One of the things we're going to see is he's going to confirm that inflation is on their path to 2%. He'll look at 3 and 6 month annualized core PC. It's right around 2.3%. We expect that we'll see unanimity from the Fed. I think this is a meeting. You said, well, it's a bizarre one. This is where you lock arms and walk out of there. And I see zero acknowledgement of the fact that it's been a general election.
John, should they have a Catherine Mann? I mean, where is Catherine Mann for the Americans?
Oh, if only, TK, if only. I do think we've got our head in the sand a little bit here. But what we could see out of this administration, and I know it's hugely dependent on what happens with the House and how workable the margins are, but let's just work through 2025. We could have no taxes on tips. We could have a corporate tax rate come down to 15% from 21. You're going to have a presidency here that's very, very focused on getting financial conditions and equity markets higher. He's going to want, obviously, a much higher growth rate. And I just wonder about where you're going with this, because ultimately 2025 could look and feel so different. This market is pricing in a positive growth shock in America. You see it in equities, you see it in small caps. And we're sitting here saying the Federal Reserve is going to keep cutting interest rates into that with Chair Powell at the helm, even though he might not be there after 2026. Is that what you think?
So I think Tom is right about Feroli. This is not 2025. Yes, eventually you may see no tax on tips and overtime and some other things. But how do you pull that together and get that through Congress now? You wait until September, you wait until the Tax Cut and Jobs Act is about to come up for expiration. Then you tinker around with that and put all of that in there. I don't know how you go through a budget reconciliation process in the second quarter with, here are a handful of things we want to do, get it through. I think that kind of thing, this Senate and this House will push back on because the margins aren't that vast.
If I think I'm not getting taxes on my tips in 12 months' time,
you tip?
I'm already spending. That's what I would be doing. That's what people will be doing this holiday season.
Which is the reason why you're seeing the reaction that you are in equity markets.
Bob, you're going to be sticking with us. Bob Michael at JP Morgan. Coming up on the program, Kathy Jones of Charles Schwab alongside Aditya Bave of Bank of America. That decision, 17 minutes away.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The top names in global leadership are on Bloomberg.
It was important that when we came into office, we assessed the state of the economy. We needed to understand the damage that's been done, and that £22 billion black hole is a real problem that we've got to deal with. Make sure that we go through all the processes necessary for a properly thought through budget.
Nobody covers the top global leaders like Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
The Fed is going to cut rates.
They're going to cut today. A 25 basis point cut.
25 basis points.
That's pretty certain at this point.
We should expect rate cuts at each of the next 2 meetings.
The Fed is still moving in the direction of easing.
There's more of a question around December.
December is really difficult.
We're still debating kind of when the Fed skips now. The Fed is going to be reacting to what we're seeing in current economic data.
The Fed's is somewhat on autopilot, assuming the economy doesn't take a really bad turn.
Chair Powell will obviously potentially get a question around the implications from the U.S. election.
It complicates the Fed's job next year.
He's going to sidestep that question, and he's going to wait. It remains to be seen what of the things that Trump has talked about he will be implementing. He needs to see what actually emerges in terms of policies.
This is a difficult one for the next several meetings for this Federal Reserve. This is the countdown to the Fed Decides on Bloomberg TV and radio. Check out the equity market, all-time highs on the S&P 500 and the NASDAQ. We add some weight to that on the NASDAQ 100, up another 1.25%. This bond market is a very, very different bond market to the one we saw back on September 18th when the Federal Reserve last met. The 2-year and 10-year were trading in the 360s. Right now, the 10-year, just off the day when it was trading in the 440s, Lisa, and just finished short of 450.
There's been a massive repricing in the Treasury market. The why behind it is debatable. Some people say it's just the economic data has been coming in better than expected. Other people saying that it's the expectation of Donald Trump possibly coming in with a whole red sweep. And guess what? That's what happened. And we are looking at a market that is still trying to grapple with what the consequences are.
Joining us around the table is Kathy Jones of Charles Schwab. Kathy, good afternoon.
Hi.
Are you buying bonds or selling them here?
Well, we're staying pat. So we had been in advising, hug your benchmark, stay up in credit quality. We like credit. And then when rates go up, extend duration, take advantage of those opportunities. Now we're benchmark or below. We're not going to be aggressive in buying bonds even when yields go up because we want to get that extra risk premium in case we do get a really expansive fiscal policy that drives up inflation and nominal GDP.
What gives you confidence that this truly is truly is a seismic change that's lasting, given that we probably won't see that stimulus until maybe mid-year next year.
Yeah, I think it is down the road, but markets have to discount this ahead of time. So we've already seen the term premium move up. We've seen 5-year move up. We've markets trying to discount this, and I think there'll be a lot of volatility trying to figure out how much is it, how many basis points is all this worth, right? And we're not going to know for a while, but we want to be cautious about it. Also, keep in mind that core PCE has been coming down nicely, but it's kind of been stuck here for a while. So as the Fed does lower rates, you get a little bit more compression, a little less space there to play with. And we think that that could mean they get a bit more cautious going forward.
The Bloomberg Total Corporate Index, price-based, has had a phenomenal year. I think it's way underreported. Stocks have done great. Gold's done great, but far more the bond market's recovered from -6 standard deviations, almost halfway back to -3.x standard deviations. Does it continue with the Trump administration? Does it continue with a Fed that will still cut rates?
Yeah, I think we'll get positive returns. Maybe not at the rate that we've had over the past 12 months or so, because we've had a pretty good market. But again, the coupon helps you, right? You have a much bigger coupon now. So even with rates standing still or even moving up a little, positive returns are pretty likely. So we feel good about it, but we just don't want to get out in duration right now because we just don't know what to expect down the road.
Hey, Kathy, do you think this week has the potential to redefine the outlook? Do you believe it might have the potential to?
Well, I think it already is. I think that we've already seen the market trying to price in what it means to have a clean sweep and policies that will shift to being stimulative at a time when we already have high deficits, we're already not at our inflation target yet, and a lot of unexpected events. So the range of outcomes is really wide. We're not ruling out lower inflation and lower yields, but the bias now we're tilting to, okay, instead of coming down to 3.5.
Which is why we've all got a lot of sympathy with the Federal Reserve today, because or may not happen down in Washington, D.C. We don't know if we get the sweep. We don't know how big the sweep will be. We don't know how workable those margins will be. We don't know the future Republican Kristen Sinema and Manchin will be down in Washington, D.C. for the next several years. And yet, Bob, I wonder whether this chairman has to entertain just a little bit of synopsis today, just as a risk manager to say, if X happens, then we might have to consider doing something different. Do they have to entertain that at today's meeting?
No, that's ridiculous. If I think about this Fed and what we're talking about, we can't just pay whatever you decide today or in September, you have to live with it for 5 years. I don't even know when this started. Maybe, 15 years ago. They very well could cut rates 2, 4, 6 more times and
What will happen is, it's like I will leave here a little bit.
The Fed's cutting, not hiking. It gives you a sense of where the Fed sees itself in the broader institutional framework, and there's this very strong inclination that we want to stay in our lane.
Aditya, have you changed your view on the animal spirit of the nation with the Trump victory? Have you adjusted nominal GDP out 12 months?
I don't think you need to worry about our view. You can look at what happened in markets, right? So we get a very clean read from yesterday's market moves. You can see the big rally in equities, which probably reflects expectations of fiscal stimulus and also expectations of deregulation. If you look at which sectors did the best, you can look at the sell-off in the bond market as well as its nuances and learn two things. One, there was a huge increase in break-evens at the front end, which suggests that markets are expecting tariffs, right? And two, real yields and nominal yields increase much more at the back end, which suggests that we're thinking about structurally higher policy rates and also higher nominal rates at the long end, suggesting that deficits are going to be a problem going forward. So that's the verdict that the markets have delivered.
Bob, I'd love your thought on that. Basically, this is what the market is saying, that they're expecting stimulus. It's a forward-looking indicator, and that basically the Fed cannot respond to it, but they have to consider that.
Yeah, I'll just go back to that's down the road. That could actually be 12 to 18 months away. So there could be a lot of discussion. What do you do in the meantime? Do you just leave rates where they are? You know that they're highly restrictive and continue to grind businesses and households? Or do you try to find a reasonable landing spot, call it either side of 4.5%, and just rest there and then pause and wait and see what happens? I think they're looking for that landing spot. We think it's 4 to 4.5%.
Aditya, I know you've got to run. It's great to catch up with you, sir. Aditya Barber there of Bank of America with about 4 minutes to go until that Federal Reserve decision. As Aditya said, this decision's an easy one. You believe the next one's an easy one too. When do they start to get a little bit more complicated for this Federal Reserve?
Well, when the data starts to change for them, and the data will come in two areas. It will be inflation and the labor market. That's one area. And then it will be discussion of policies in Washington.
Well, let's do some scenario analysis with you. Donald Trump comes in end of January, says that's it, 10%, 20% blanket tariff. They're going to wait for the data. Would you wait for the data?
If I were on the Fed, I would argue cut rates, because that's going to be a tax and a headwind to the consumer. And what you're going to see in inflation is an artificial ingredient.
Kathy, do you agree that basically people are overestimating the inflationary impact of tariffs and some of these other potential policies?
No, I think it's obviously tariffs have that mixed impact of being a price shock on the one hand and negative for growth on the other hand. But I think this particular Fed has to be very conscious of lagging inflation, and as they did in the past. And I think they may be hyper aware of their the message that they send. So my bias would be to say that they go very cautiously from here, simply because the last thing they want to do is get accused of being behind the eight ball on inflation.
Let's bring a couple things together here, Bob. The president's going to have dessert with. He's going to go, let's do two things at once. We got to cut rates. In DXY 104, 105, the first thing out of his mouth is going to be, I need a weaker dollar because those foreigners are getting me. How do you get a weaker dollar?
Now, that's going to be a tough one, because in theory, the Fed cutting rates takes the pressure off the dollar.
Right.
But we know there's a huge stimulus plan coming, and somewhere down the road of some magnitude, you're not really going to take the steam out of the dollar, and you throw tariffs on top of it. The dollar's exceptionalism continues. I don't know how you get it down.
Do you think US exceptionalism continues when you consider the global backdrop right now, the difficulties in Europe and China compared to, say, the United States? Do you think that continues?
Well, I feel right now when we talk to official institutions, there's a search on for what's the alternate reserve currency to the dollar. And there doesn't seem to be one out there right now.
With the exception of maybe gold, which is what we've seen so far this year, right?
But
Massive run.
Bitcoin, come on. That
record high on election night.
That was the big winner, right? So maybe that's the new reserve currency. That's what we were going to be, right?
That's what we saw.
Capital?
Yeah, apparently. apparently. Kathy, it's good to see you. As always, Kathy Jones there of Charles Schwab. But Michael's going to stick with us through the decision. Just to set up the scores for you with about 90 seconds to go, and we'll start with equities after a historic run in this equity market. All-time highs on the S&P 500 this week, record highs on the NASDAQ 100 this week, moves we haven't seen on the Russell in several years, a move of almost 6% following the election in the United States of America. In the bond market, I think we should stress once again, Lisa, this is a very different bond market to the one on September 18th when the Federal Reserve reduced interest rates by 50 basis points. The 2-year had a 3 handle. The 10-year was trading in the 360s. We are 70 basis points higher since then.
And it came before the election. And that's what people are pointing to, the fact that we are seeing just an incredible upside surprise to a whole host of economic features here. I do wonder, though, how they frame that increase that you've seen in the long end at a time where they are talking about balanced risk and ongoing weakening of the labor market. Is that true?
The data surprise to the upside.
Yes.
It's not just the politics.
Correct.
The 50 basis point cuts, some people believe, encourage the move in long end rates as well. Do they understand their responsibility in some of the moves we've seen?
Which is the reason why some people think that you are going to get another dissent from this rate decision. Potentially could be, again, 8-1.
10 seconds to go. Apparently, this is an easy decision for the Federal Reserve. And the Federal Reserve decision we're looking for is an interest rate cut on the FOMC of about 25 basis points. With that decision, it's Mike McKee.
You got it, John. A 1/4 point cut in the Fed's benchmark interest rate, a few changes to the statement, and that's about it from the Fed. The target range now 4.5 to 4.75%. There is no change to balance sheet policy. The decision this time unanimous, as September dissenter Mickey Bowman voted for this rate cut. Inflation, the statement says, has made progress, dropping the word further, toward the 2% target, but remains somewhat elevated. No longer included, the assertion that the committee has gained greater confidence that inflation is moving sustainably toward 2%. The economic assessment suggests a slight earlier this year. Labor market conditions have employment rate has moved up, but remains low. Still, the statement repeats September's view that risks to achieving its employment and inflation goals are roughly in balance. The rate cut today is in support of its goals instead of September's in light of the progress on inflation and the balance of risks. Policymakers note again they will consider additional adjustments to their benchmark rate, but offer no further guidance beyond that. There is no mention of politics in the statement. That will be up to Chairman Powell in about a half hour.
And Mike McKee, it'll be up to you, sir, to ask the questions. How many questions do you expect are going to be leading with the events of this week and not this decision? How much of this is going to be about the politics at 2:30, Mike?
I would imagine quite a bit would be, and maybe we want to check the Las Vegas over-under line for that. But he's not going to say anything. He's not going to respond. So the question is, how many different ways can we ask, and how many different ways will he parry the question?
60 minutes of that. Looking forward to it. Michael McKee, you've got to run. I know that news conference begins in about 28 minutes time. So no big changes to the statement. 25 basis point rate cut as expected. And when you see something like that, you're not looking for a big change in the market either. We stay higher on the S&P 500 by about 0.6%. Yields are still a little bit lower. On a 10-year, we're still down by 8 basis points, 4.35. And in foreign exchange, the euro gives up a little bit of the move, but still positive on the session. Lisa, 107.84 on euro dollar.
I think it's interesting that the Federal Reserve removed a reference to gaining confidence in inflation and saying that labor market conditions have generally eased. Honestly, to me, you're looking at this and on the margins, just setting the stage to potentially be a little less dovish. And that is a tone that I really am curious to hear in the press conference.
With us around the table, Bob Michael of JP Morgan, and a man who's seen it all before, the former Fed Vice Chair, Rich Clarida. Rich, I want to start with you, and not on the 25 basis point rate cut. You lift the tariffs of Trump in volume 1 on the Federal Reserve. How did you handle it then? How much scenario analysis did you do ahead of time? How do you think this chairman's going to handle it in the months to come?
Well, the staff did good work, and some of that's in the public domain now, comes out every 5 years. The reality is, during my time at the Fed, inflation was running a little bit below target. The tariffs that were put in place made the headlines, but they didn't really push up inflation very much. You know, the devil will be in the details, I think, both on trade policy and fiscal policy. And I don't think they need to make any big decisions at this meeting or the next meeting about how they'll strategize for 2025.
Vice Chairman, I want to go to the politics of the moment. We're not going to get an answer from Jerome Powell, so we're going to get it from you right now. Harry Truman, 1950, before William McChesney Martin saved the day. I quote, President Truman, I hope the board will not allow the bottom to drop out from under securities. If that happens, that is exactly what Mr. Stalin wants. We've had this pressure before, and you and your brethren get the pressure this time from President-elect Trump. How does the Fed deal with it?
I think they deal with it, Tom, the way that they did the last time, is just stick your, keep your focus on the goals of policy, price stability, maximum employment, and do what you think can best achieve those goals. As you point out, opinions on the Fed, including from presidents, are not unheard of, and so we could see more of that. But I think the Powell Fed will just keep doing what they're doing.
How much is the market, though, speaking louder than any policy that's going to come down the pike? The fact that we've seen this massive rally in stocks and a sell-off in bonds that hasn't really hit risk assets. How much does that have to really cause the Fed to pause and even reconsider whether to cut rates again in December?
Good point. I do think financial conditions are obviously an input to policy, but I would hope the Fed does not convey the impression that they're too sensitive to financial conditions, because they can rise and fall for a number of reasons. My own sense of what we're seeing this week is some of it is not so much more stimulus down the road as more certainty that the existing 2017 tax bill is going to be extended, right? So it's the absence of a tax hike as opposed to necessarily a tax cut. And I do think the deregulation piece of this is also important. So we've certainly seen a level set. I wouldn't necessarily extrapolate this from here. We'll just have to see how this plays out.
Either way, what we've heard is just the deficit is likely to expand.
Yeah.
It's been one of the main stories and consistency throughout all of the analysis. Does the Fed deal with that at all by signaling what they plan to do with their balance sheet? There's some speculation that, they could potentially monetize the debt to keep even keel economic conditions.
Well, certainly there would be that pressure, but I have high confidence that they would resist that. Look, the Fed is judged primarily on whether or not it achieves the inflation target. And when inflation's getting to 2%, that's really the focus. I think monetizing the debt is something that done on a sustained basis is inconsistent with the inflation target. You do raise another point, though, which is a good one, Lisa, which is the fact that they are doing QT right now. During my time there, the Fed stopped QT about the time that it cut rates in 2019. So the Powell Fed's continuing to shrink the balance sheet. They've given some indication about when they'll stop, but that I think will be a decision they'll need to make next year. And that could be in the context of pretty depressing budget numbers.
But Michael, all of this seems very predictable. You get this from a former Fed official, Columbia professor as well. What is the surprise you're worried about in the Q1, Q2?
Well, I guess my question for Rich is, what are they modeling? Are they modeling all the probabilities that fiscal stimulus could look like? Are they modeling the extension of the tax cuts? Are they just modeling the existing economy?
Well, I guess the short answer is I don't know. We'll find out in 5 years. My sense, though, is certainly if I were there, what I would be focused on is a scenario where you may get a tariff. And then the question is that inflationary or is it a price level effect? Or in the wonkiness of central bankers, are there second round effects? Chris Waller, who I have enormous regard for, worked with Chris, gave a speech several months ago or a Q&A, maybe on Bloomberg, in which he said, look, a tariff is a one-time increase in the price level. It's not necessarily inflationary. So I think if I were there, I'd be wanting to see, will that play out in various scenarios? But beyond that, the details will matter.
Well, my chart of the day is Jim Bianco had a fabulous chart showing the inflation, Bob Michael, coming out of 2021-22. And yeah, it's noodling along right now. The economists like Clarida are looking at the noodling along right now. And the public that just voted for Donald Trump is looking at the jump condition in inflation on a level change. Where are we going to be in 2025? Are we going to be looking at level change in the memory of it? Or are we going to be noodling along feeling happy?
Well, we're not going to feel happy because there's no deflation. We're not going to feel happy because by the end of 2025, there will be tariffs and some of that will be passed along to the consumer. We're not going to be happy because I don't think there will be additional tax cuts, maybe on tips and overtime and corporate tax cuts in 2025. I think that's a 2026 issue. So we're not going to be real happy with further improvement in inflation. to me, I took the same thing Lisa took away. They dropped gaining confidence in inflation out of the statement. To me, that was an acknowledgement of a change in potential fiscal policy.
Do you think that that means potentially they won't cut even in December?
No, there is, how do you get from here to there?
Yeah.
It could be a number of quarters. You've got to preserve the economy in some sort of steady state. We're too high right now.
If I could jump off preserve, I think Jay Powell will want to preserve optionality for 2025. A lot can happen. It'll be more tricky in December because there's the dots. And so whatever the dots show, there will be questions about how confident the Fed is on that path. And I would suspect today he will begin to lay out a path to give themselves a lot of optionality in December as well.
Rich, this is important.
Yeah.
You think they begin to communicate or at least open the door to have the option to pause in December? And that starts today.
I do. It may be subtle, but I do.
Help me understand what that sounds like at 2:30. What does he say? What
Well,
kind of
since there
language
is
should we
no
look
SEP
for?
today, I would imagine, well, again, hypotheticals will know. A hypothetical would be a question about next year. And the chair will say something along the lines of, it's too soon to make a judgment. And we'll be looking at the incoming assessment. And he'll remind folks that the rate path in the SEP is conditional on inflation continuing to come down. If there is a risk that it doesn't, that would factor into the rate path. So it's more, not so much about getting into scenario details as it is, look, the rate path depends on continued progress on inflation or disinflation.
If you are just joining us, welcome to the program. A 25 basis point reduction of the Federal Reserve, a news conference with Chairman Powell in about 20 minutes time. Joining us now is Diane Swonk of KPMG. Diane, a 25 basis point reduction, and welcome to the program. At a time where the data is still holding up, jobless claims are still quite low. Do they have the luxury of waiting, of setting up a pause in December?
Well, I do think they're going to be, as exactly as everyone has said, that they want optionality. I think they're still going to cut again in December. That said, the Fed wants to start talking about calibrating rate cuts to the economy, and they're not going to be wanting to pull rate cuts, do as many rate cuts sequentially, I think, in 2025. And optionality, as Rich said, is going to be number one issue because they don't know exactly what the policy will be, when policy will change, how it will affect the economy, and that is going to matter. Exactly as Rick stated, that the certainty on the dot plot in December is going to be really uncertainty. And I think one of the greatest challenges that the Fed now faces is communication. This is uncertainty on the course of policy going forward.
Thunderstruck by the shift across the blue wall towards Mr. Trump. We all saw it. Frankly, we saw it out in Long Island, here in New York as well. There seem to be a haves and a have-nots here within this election. How does Mr. Powell address both groups into 2025? How does he aggregate and make a constructive policy for the people flat on their back that voted for Donald Trump?
Well, at the end of the day, and Rich has made this point, and I agree with them. At the end of the day, the Fed's job is price stability. There is deflation in some goods prices. So some goods prices are coming down. They're still elevated from where they were. I do worry about shelter costs and whether or not those can really come down like many would like. And that is a problem. And also insurance costs. Those are more structural in nature. But at the end of the day, it's the Fed's job, one way or the other, to get enough prices to fall to get to that price stability, but to get inflation to no longer be number one issue. I think that's going to be more challenging as we get into 2026. I agree wholeheartedly that the bulk of the policy shifts that we see, especially in terms of fiscal policy, are not likely to hit till 2026. And I don't expect a lot more than the extension of the tax cuts that we had, with maybe some additional corporate tax cuts. But we will see. And I think it will take some time. I don't think it's all going to be done in the first 100 days. The tariffs, as Rich said, are issues that can be a level change, but if you combine them with curbs on immigration at this time and actually have any kind of deportations along with that, that tends to both stem growth and stoke inflation in this environment. We are not where we were pre-pandemic, and certainly tariffs in sequential order along with retaliatory tariffs, that kind of a situation would be much harder for the Federal Reserve to deal with, and the pressure on the Fed is going to intensify intensify if that occurs.
There's a lot of nodding around the table. I find it fascinating how little we understand inflation and exactly what's going to cause a real surge in it. And I do have to wonder, and Bob, I'll throw this to you because I know you think that the Fed should keep cutting and that there is weakness to be addressing. I am struck by the fact that there hasn't been a more marked slowdown in any of the economic data with high yields, with rates at the long end as high as they've gotten. Doesn't that tell us something about how restrictive or not that restrictive policy actually is at this level?
Well, I think it's unfair to say there are no signs of a slowdown. As I said, you look at new and existing home sales. Those are purely dependent on the level of rates currently, because we know home prices aren't going to come back and they're quite high. And so new and existing home sales are down. They're going to decline further with this pop up in rates. And as I said, in corporate America, you look at the amount of amended and extend and pick, there is a lot of corporate America that's struggling with the higher cost of funding. And a lot of that is floating rate. So for me, if you're at the Fed, you've got to step back and say, okay, we're also looking at performance of credit cards and auto loans and other things. We do continue to need to take some of the pressure off to ensure we have a soft landing. I'm not talking about going to 0, 2, or 3%. I'm just saying where we are currently around 5% is still a little bit too high.
I'm going to be the rude one today, the former vice chairman of the Federal Reserve System. This is Kyla Tausch over at CNN. Michael McKee passes this on to us. McKee insists that I'm as rude as I can be to Richard Clarida. There's speculation here after the Powell term. Your name is not mentioned. That's, I guess, the good news.
Yeah.
There's Kevin Hassett and Kevin Warsh as well. Those are two very different people. What kind of person do we need to run the Fed into the Trump administration? Do we need a monetary expert like you on DSGE, or can we use someone like Warsh who's more a part of the regulatory and Wall Street system?
Well, I would also throw in Chris Waller's name as well. It's certainly beyond my list.
Throw in Richard Clarida's name as well while we're here making some news.
Look, I think that there is no one cookie cutter job description. I think that Jay Powell's been an incredibly successful Fed chair, Ben Bernanke, Janet Yellen. So you can certainly come from a background. What I would say about it is that in the world today, it's not just hiking and lowering rates. There's the communication piece we talked about. There is the supervision and regulatory piece that is not just only about banks. It's about how the economy functions. And so it requires a special skill set and a special person. But all the names you mentioned would be good choices.
I just wanted to cross over to Dan Swung just to fit in a final question before you run away, Dan. We always ask you this question. If you had a question for the chairman today in the news conference, Dan, what would it be?
It would be how much discussion was there about the labor market and the recent inflation numbers. I mean, that is where the tire meets the road in terms of where the next rate cut is going to be, and how much are they secure in the labor market weakness that we saw being transitory with regard to hurricanes and strikes. We know that part is transitory, but there is some signs that the labor market is slowing, and how concerned are they on that? The other issue I think is really important, one that we talk about all the time, that word that's out there, nonlinearity. What the Fed always worries about, and this gets to the issue of, when do rates have a bigger impact on the economy, is the nonlinear effects, I think, in both delinquencies, but also particularly in the business sector where we do see some floating rates out there. There is some stress now starting to show in the business sector, and I think that's a very important issue.
Dan, you're one of the best. It's always great to get some time with you. Dan Swung there of KPMG. If you are just joining us, about 12, 13 minutes away from a news conference with Chairman Powell. Equities at the moment still near session highs, at all-time highs on the S&P 500. We're at 1.4% on the NASDAQ. That itself is a record as well, following a 25 basis point reduction of the Federal Reserve. Equities stay elevated. Not much price action off the back of this decision this afternoon, though. Joining us now is Matt Lazzetti over at Deutsche Bank. Matt, I want your thoughts on the outlook. And Matt, welcome to the program. Have you made any changes since the election this week? And if so, how many?
Yeah, thanks for having me. So we haven't really made any official changes to the outlook at this point. I think, we need to gain clarity on a number of things. How we're thinking about tax policy, the sequencing of that between trade and tariffs will be really important. But we did publish a note just giving kind of a guidepost of where we think the economy may be moving and where the Fed outlook may be moving for next year. And in particular, we do think that we could upgrade our growth forecast for next year, probably into the 2.5% range, give or take or so. A labor market that is probably going to look a little bit tighter on the back of tax cuts that we're likely to see, easier financial conditions that we're likely to have, but also a Fed that is likely cutting rates less next year than we previously thought. And so, we are kind of outlined a scenario in which the Fed stops cutting rates above 4% next year.
Yeah, this is one comment from the recent note that you put out, that if it truly is a red sweep, then the likelihood is that the Fed funds rate remains above 4% by the end of next year, with growth and inflation revised upward. Matt, what would you have to see to make that your base case?
Look, I think we're close to that. I think it's just getting clarity on how we think the policy outlook is likely to evolve. I think we know a few things since the September meeting. One, labor market data, I think on balance have come in better and have diminished some of the downside risks that we've been worried about. Two, inflation data have come in hotter than anticipated. And so I think if the Fed were to have revised their forecast today, it's inflation higher, a labor market that is tighter. Three, financial conditions have eased considerably since the September meeting. And so I think as you look at all of that and just ignore the election for the time being, you've actually had an evolution in the data and financial conditions, which would be hawkish for the Fed. Now, we overlay on top of that fiscal stimulus that may come via tax cuts, trade policy that could lift inflation next year. And I think undeniably together, these are just hawkish developments for the Fed.
That was George Sarvelis talked to him the other day. He's a little occupied with the collapse of the German government. But what does Deutsche Bank feel about the ability to steer to a weaker dollar, something President Trump would like?
Yeah, I'm not sure that that's actually something that's going to be a key policy objective of the Trump administration. I think some of their tone has changed on that. I think that they have emphasized that the reserve currency is a really important part, that making the U.S. economy a place for investment is a really important part from a policy perspective. Now, certainly, a weaker dollar could help on some of the trade objectives, but I don't anticipate kind of talking down the dollar is going to be a big part of the next administration.
Matt, we've been told so many times by so many people that the decision today was an easy one, and then maybe December will be an easy one. When do these decisions start to get hard?
So today was easy. I'm not sure December is going to be as easy.
Right.
If the incoming data continue to point to a labor market that looks resilient and downside risks have diminished, and if we get inflation data that continue to come in a little bit hotter, along with financial conditions that are easy, we are beginning to approach a range of kind of reasonable estimates of neutral from our perspective. We think neutral from a nominal rate perspective could be anywhere probably between 3.5% and 4%. So after this cut, perhaps the December one can come and they can still feel comfortable with that. But I really do think that the December meeting is the first one where we probably have a little bit more contentiousness around it because they're approaching neutral, the data look fine, and you do have risks to the outlook where just from a risk management perspective, it could make some sense to slow the pace of cuts.
Rich, do you agree with that, especially with the fact that they have to come out with a statement of economic projections, how that makes them, forces them to really write down, codify this idea of a neutral rate north of 4%?
Yeah, I think that scenario is certainly a plausible one, but the nuance I would offer is I could see a scenario where they get the funds rate down to around 4 and stay there, not because neutral's 4, but just inflation stuck at 2.5. I don't see the Powell Fed breaking a lot of China to get inflation down from 2.5 to 2 with rate hikes, but they may just pause at a funds rate in the low 4s because inflation's stuck at 2.5. So that's another way that delivers Matt's scenario.
Matt, what do you think of the idea of tariffs being inflationary versus not, right? I mean, what are you sort of looking at as the most inflationary aspects of policy that would be maybe a warning sign for the Federal Reserve?
Yeah, I think the complications for the Fed next year could be that we have demand side policy in terms of tax cuts happening with an economy that is already strong, being coupled with supply side policy via tariffs that would lift inflation. And both of those things being kind of giving you an inflationary outcome where it makes it difficult to disentangle what's happening from certainly if the Fed was able to identify, they could potentially look through the tariff effects on inflation. But I think that they were probably just less prone to do so for a few reasons. One, inflation is already above their target and is continuing to do so. Two, inflation expectations could be at risk of moving higher. And I think that this is primarily, or even more so, an issue if those tariffs are phased in over time. It makes it more difficult and complicated, I think, to identify the price level shock, and makes you a little bit more worried about it factoring into inflation expectations.
So, Bob Michael, if I want to affect the Lazzetti-Claire to move here in bonds, price up, yield down, how far out on duration do I want to be into 2025? Do I want to extend duration?
Yeah, I think you do here. I think there are a lot of things to do. That's the kind of interest we're seeing from clients. The municipal bond market is a large part of that. A lot of clients who own municipal bonds have ladders. Stuff is rolling off. Roll it out to 10 years. There's a lot going on in credit. Get out there and invest. You have to recognize there's been a pretty significant backup in yields. We don't know what fiscal policy will look like. And it sure looks like we're not going to see a lot before a year or so.
There's some people, Bob, worried about a buyer's strike emerging in the bond market. And I just wonder, with yields at these levels, do we just keep sucking capital away from the rest of the world here in the United States? Because if I'm thinking about the policy coming down the pike, from my perspective and many others as well, if you're investing in America, there's going to be policies to reward it. If you're exporting it, that's a very, very different scenario, trying to export into America. But do we just keep sucking capital away from the rest of the world?
Well, yesterday was the perfect evidence of that. There was every reason to hide from the bond market. You had a 30-year auction, and it went flawlessly.
Yeah.
You see the same thing, Rich?
I do. And in particular, look, we focus on the U.S., but it's a global bond market, and Treasury yields 4.5. We saw almost exactly a year ago, Treasury yields got to 5, and there was a voracious appetite to lock in those yields. And so I do think there's a range within which the growth in the Fed and the fiscal pit plays in. But beyond a certain point, it becomes very attractive to international investors.
So we retain the privilege of acting recklessly, as some people might say. Maybe.
Absolutely.
Kicking that can down the road.
Yeah, although I do wonder what the consequence is of kicking the can down the road and then Germany saying, hey, they're doing it, so we'll do it too. This sounds like a good plan. France, hey, what about us? And all of a sudden you get yields rising higher. And how much does the bond market suck in the capital away from other risk assets? That's the question. No, I'm serious. That's one of my main questions.
Some of these European bond markets have learned they're not American. And that has been a painful lesson.
Which one in
We've
particular?
seen that in the UK. We had a little sprinkle of that in France. We saw that in the periphery a decade ago.
Well, I'm just saying the challenge for many European countries is the countries they'd like to invest on don't have a lot of debt outstanding, like Germany and Switzerland, and the countries that want to borrow have to pay a big premium. So, yeah.
I want to cross back over to Matt Lazzetti. Matt, just before you run, what's the best way of getting the chairman to answer a question about the election without answering a question about the election? Because that's all every journalist on the planet right now is thinking, and every single journalist in that news conference will be trying to do.
Yeah, I think it's a really difficult one. I think at the moment, Chair Powell has really no incentive to answer any question about what fiscal policy is going to look like. There's so much uncertainty. I think he's going to emphasize data dependence. I guess if you could do it through a few avenues, it would be one, how do they think about risks to the outlook as they look ahead, in terms of the policy outlook that has to factor into how they're thinking about things. Two, I think it was interesting at the September meeting, he noted that the neutral rate has risen, quote unquote, significantly relative to the pre-COVID levels. And I would, just kind of think, if we're getting additional fiscal stimulus on that, how would he view the outlook for the neutral rate as evolving in that type of environment? But to be honest, I think it's difficult to get kind of a solid answer for him about what the election could mean for the outlook at this meeting.
Matt, appreciate your time, sir. Matt Lazzetti of Deutsche Bank. About 3 minutes to go until this news conference starts. Rich, you're perfectly placed to answer that question. What would you lean into in this news conference? If you were on the other side asking the questions, what would you lean on?
I think I'd ask the chair about financial conditions broadly versus the real funds rate, because it does seem over the last year, the committee at some points emphasizes tighter financial conditions. We saw that explicitly in the statement in both November and December of last year. More recently, they've emphasized, well, look, the funds rate's well above the rate of inflation, but at the same time, financial conditions have been getting easier. And it's not necessarily you have to pick one or the other, but get a sense of how he and the committee are thinking about that right now in a global market and in the U.S. market, in which it's definitely risk on in the last several days and really for some time now.
I've asked this before, but I think it's so important. Where's the
asking too many
in
questions.
2025? President Trump's going to go. He's going to do that before January, whatever, the inauguration. How goosed is the economy going to be under Trump?
Well, I think there is that element at minimum because we did resolve some uncertainty, I think, about the extension of the existing. I would again remind you, if we extend the existing tax cuts, it's very expensive in terms of the way it's scored by the CBO, but it doesn't change anybody's tax rates relative to what they're paying now. I think the regulation, in particular certain sectors, energy and perhaps financial services, is sort of a one-time reassessment. I don't think you can keep that going. I think we are seeing a more or less rational, at least directionality-wise, reaction to markets. And to point on the dollar, strong dollar. I know some would like it weaker, but this is the dollar.
Here's the sum.
Yeah.
So, Bob, final question. We're about a minute, 90 seconds away from this press conference. How would you get him to answer something about his new balance of risks?
I'd ask the question we had gone back and forth on. Ask him, what is your staff modeling now? Because there's the current and expected set of data, and there's the majority probability that there's enormous fiscal stimulus coming down the pike a year from now. What do you model?
This has been a fantastic conversation, gents. Bob Michael and a former Fed Vice Chair, Richard Clarida. To the two of you, just absolutely brilliant. Just some takeaways from the last 30 minutes if you're just joining us. Richard Clarida talking about maybe finding some space to generate some optionality going into 2025. And I think there's a consensus around this table as well, that the decision gets harder once you get to December, and that this one was an easy one and maybe December is a tricky one.
My big takeaway is that the Fed removed the reference in their statement to gaining confidence on inflation at the same time that our esteemed panelists are talking about opening the door in December to either not cutting rates or potentially going forward and maybe not cutting next year.
Are you ready for a 45-minute clinic on how to not answer questions? Are you ready for this?
I actually am so excited.
Is this a certified snooze fest?
No, absolutely not. Tension's going to be pretty wild.
I think it's going to be one of those news conferences, and Mr. Clarida knows this well, where you have a sheet of paper in front of you, you've got your notes written down, and every time you get that question, 20 different versions of it, a sheet of paper comes up and you read it verbatim and hope they get bored of asking.
My favorite is when they have multiple sheets, when Jay Powell has multiple sheets and someone asks a question, you see him going through the papers. Wait, okay, there's the answer.
You ever written one of those questions, answer sheets for the chairman?
I participated in discussions of press conference briefings, yes.
25 basis point reduction over the Federal Reserve. Here's the chairman, Jay Powell.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by 1/4 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Done.
Chair Powell, Nick Timrose from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long run rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent. And if they're material, then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
You get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly the September employment report was stronger. The October report, not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular. And so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December. By December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. What will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
I can't. We don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I would just say for December we're going to be, again, at every meeting we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? That we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be. And in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah. That I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, we're going to wait and see how things come in December. I mean, it's just, I would put it this way. We're on a path to a more neutral stance. And that's very much what we're on. That has not changed at all since September. And we're just going to have to see where the data lead us. We have, whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but I would say, I would say that, again, we didn't update the SEP, so I'm not going to characterize, where the committee would be.
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate and explain a little bit the two changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation in the last 3 months?
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we met that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in what I've said. The path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates? And are rising deficits a concern to you?
So we don't comment on fiscal policy. And again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outline. So we'd start to model it. And then we'd wait. And then at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we try to get smart on that. And then the law actually passes. And you'd start to you probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model along with a million other things. So we have a very large economy. Many things are affecting it at any given time. And, a law change of some kind would go in there, but it would, it's a process that takes some time. Clearly, the legislative process takes a lot of time. And of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And, the overall effect on the economy at any given time. So I think that's a process that takes a lot of time and that we go through all the time with every administration constantly. And this will be no different. But right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, and once we know what they are, we won't have a sense of when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time, and it will be very much regular order when we do that.
If I could just follow up on Nick's question, are the current rates something you feel like you need to lean against in that they go against the direction of policy by being adding restriction to the economy, or do you just take them as a given and perhaps a signal that you should do less?
I just think the first question is how long will they be sustained? If you remember the 5% 10-year, people were drawing were massively important conclusions only to find, 3 weeks later so, it's material changes in are persistent that really matter. And we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now it's not a major factor in how we're thinking about things.
Chris.
Thank you, Chris Rugaber at Associated Press. You mentioned the positive economic data that we've seen since the September meeting, including the revisions to things like savings growth. We saw stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this?
So you're right. As I data have been strong, and that's of course a great thing and highly welcome. But of course, our mandate is maximum employment and price stability, and we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate. And we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago. And we judged, as I mentioned, that it's on a sustainable path back to 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress. And today's decision is really another step in that process. Overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market, even as our policy stance enables further progress toward our inflation goal.
Great. And just to follow up, what might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So we haven't, made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset purchase, with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down. And so we're thinking about it that way, but it's something that we're just beginning to think about.
Edward.
Thanks, Chair Powell. So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12 month. 3 and 6 month core PCE, you'll see that we look at all of them, and we also look at 12. What it's telling us is that we really have made significant progress, and we expect there to be bumps. For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward. On the other hand, the January reading certainly looks like residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see it will literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation? Where is it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is, I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing we're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be one or two really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Hi, Chair Powell. Craig Torres from Bloomberg. 2 questions today. Did you learn anything about what Americans think about the economy from the election results? First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. Put a marker at Jackson Hole saying it is cooling generally a little bit further. At what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything indirectly to the election. On the second one, this is the great question, and so one we think about all the time. So I'll just say a couple things. There's nothing really here. What we know is that the unemployment rate is low. We also know moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant, so far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool. But it seems to be in a good place, and our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market while also enabling further progress. You mentioned a bunch of indicators, and you're right. The openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you could say it the other way, that wage increases are now consistent with 2% inflation given current productivity readings. But of course, the lure on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer term trend. That has always been the case for 50 years. But it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market. We can talk about 20 different data series. We'll be looking at all of them, of course. We don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
Victoria. Hi, Victoria Guida with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Mike?
Michael McHugh from Bloomberg Radio and Television. You talk a lot about what the data are telling you and how you are dependent on the data. But in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much a discussion topic in their worlds, whereas 2 years ago it was all they were talking about. So they feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong, and you're seeing 2.8% growth in the third quarter estimated. Maybe the year's 2.5%. This is a strong economy. It's actually remarkable how well the U.S. economy has been performing with strong growth, a strong labor market, inflation coming down. We're really performing better than any of our global peers, and I think that is reflected in what you hear from what I hear people hear from CEOs. I don't get to talk to a lot of CEOs in my job, but I hear what others summarize from those. And of course, I hear the Reserve Bank presidents do a lot of that. And it's pretty constructive overall. Now, that's not to say there are areas of caution and things like that, but ultimately, overall, pretty positive.
Well, to follow up the areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like clearly geopolitical risks around the world are elevated, and just as clearly they've had relatively little effect on the U.S. economy. Now, that can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy, its performance has been very good, and that's what we hear from business people, and expectation that will continue. If anything, people feel next year. I've heard this from several people that next year could even be stronger than this year.
Andrew.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are rising. Is that something you'd speak out against?
So, I have said many times, no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that in, you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that we, that to be dealt with. It is ultimately a threat to the economy. Now, I can say that. I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Okay, thank you. I guess the other question is to follow up on Victoria's question. Do you believe that the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Courtney Brown from Axios. In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals that the president-elect has put out on the campaign trail, tariffs, for instance?
No, I was not referring to the new administration's policies at all, nor will I today. So what I'm just saying is, as we look ahead, we know, as I mentioned this in my statement, that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place, And but as you look forward, you say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly, and inflation comes back, and we lost our chance to get inflation back to 2%. So we have to avoid that risk. And to avoid that risk, that means you want to move carefully. The other risk is that we move too slowly and do unnecessary damage to the labor market. That says don't get behind the curve. So these are the two risks that we have to manage. And so we're in the middle there. We try to be in the middle and deal with both of them, manage both of those. Again, the idea is to maintain, support the strength we have in the labor market and in the economy, but also with a somewhat less restrictive but still restrictive policy, enable further progress toward our 2% inflation goal. This is meeting by meeting, we're going to be making our assessment of what the right path is. It's not as important. The precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now. Works. We're pretty sure further, there will be more uncertainty about where that is. Move carefully as this goes on, so that we can increase the chances that we will get it right.
Simon.
Thank you, Chair Powell. Simon Rabinovich with The Economist. I know you don't want to share your decomposition of bond yields, but if you look at the break-evens, it is clear that expectations do seem to have risen up at about 2.5%, for example, on the 5-year. That's up half a point from when you cut in September. Do you have any concern at all that longer-term inflation expectations are de-anchoring, or put another way, are anchoring at a slightly higher level? Thanks.
So we would be concerned if we thought we saw longer-term inflation expectations anchoring at a higher level. That's not what we're seeing. We're still seeing, between surveys and market readings, broadly consistent with. I looked at the 5-year earlier today, and it's probably moved, but it's not. It's kind of right where it's been, and also it's pretty close to consistent with 2% PCE inflation. So that's one that's been a traditional one that we look at a lot. But overall, expectations seem to be, and really have throughout this, in a place that's consistent with 2% inflation. But you're right to say we watch that very carefully, and we will not allow inflation expectations to drift upward. But that's really why we reacted so sharply back in 2022 was to avoid that.
Hi, Chair Powell. Kelly O'Grady, CBS News. We just talked about what you've heard from business leaders on the economy, but many average Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
So you're right that we say the economy is performing well, and it is, but we also know that people are still feeling the effects of high prices, for example. And the world went through a global inflation shock, and inflation went up everywhere, and it stays with you because the price level doesn't come back down. So what that takes is it takes some years of real wage gains for people to feel better. And that's what we're trying to create. And I think we're well on the road to creating that. Inflation has come way down. The economy is still strong here. Wages are moving up, but at a sustainable level. So it's just, I think what needs to happen is happening, and for the most part has happened. But it'll be some time before people, regain their confidence and feel that. And we don't tell people how to feel about the economy. We completely respect. Accurate. We don't question them. We respect.
Quick follow-up. President-elect Trump has been critical of your performance. Any concern about his influence on the Fed's independence?
Any of the political things here today, but thank you.
Hi, Chair Powell. Nancy Marshall-Genser with Marketplace. What is your plan if we start to see stag?
So that's the whole plan is not to have stagflation, so we don't have to deal with it. So that's, your rates will hurt one side or the other, either the inflation mandate or the employment mandate. I would just say that we've been to see inflation come down a whole lot, much closer to our goal, without the kind of sharp increase in unemployment accompanied programs of disinflation. So, knock on wood, we've gotten this far without seeing a real weakening in the labor market, and we believe we can complete the inflation task while also keeping the labor market strong, and that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our baseline expectation is that we'll continue to move gradually down towards neutral, that the economy will continue to grow at a healthy clip, and that the labor market will remain strong. If you look at our that will not change from the September SEP. That is our baseline forecast, and short of some exogenous event, that will continue to be our forecast for the foreseeable future. So, but ultimately, we're not in a world where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
Let's go to Jean for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime, so people have a chance to catch up?
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And part of the problem there is that low inflation can be a problem too, in a way. But that's not part of our framework, and it's not something we're going to be looking at in our framework review. Thank you very much.
An absolutely fascinating news conference with Chairman Powell. Where do we start? Where do we end? A 25 basis point reduction for the Federal Reserve as anticipated, but some drama over the last 45 minutes or so. Let's start with the equity market. On the S&P 500, we look a little something like this at all-time highs, up 0.8%. On the NASDAQ, we're up by 1.6. At the moment, looking at the Russell, we're up down by about 0.1%. Let's switch it up and get to the bond market, and we'll go through these yields. Let's look at yields at the moment, down 6 basis points on 2s and down about 11 on 10s. On the 30-year, we're down about 8 basis points at the moment. On policy, this was really, really subtle. Did they drop their easing bias? Not quite. Did they find a way to find some optionality? Without a doubt. Effectively endorsing a view that we've had around this table over the last few hours. As time goes by, these decisions get a whole lot harder. Acknowledgement that downside risks have diminished, awareness redefine the outlook. As anticipated, a lot of this week's election. Take a listen.
In the near term, the election will have no effects on our policy decisions. Here, we don't know what the time policy changes will be. We therefore don't know what the effects on the economy, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't assume.
That's the takeaway on the election. The obvious follow-up to that question, are the September forecasts still valid? Take a listen.
You take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions. And so overall feeling good about it. I think really the question is December. By December we'll have more data. I guess one more employment report, 2 more inflation reports, and
December will be sound you heard, just the door slowly opening to a point. Now that's policy. Let's talk about leadership. You want some tension in this news conference? Take a listen to this exchange from about 20 minutes ago.
Some of the Lex advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, you think that legally you're not required to leave?
No.
No, and then no again. And a follow-up question a little bit later in the news conference. The answer to that follow-up, Lisa, not permitted under the law.
Even demotion is not necessarily permitted under law. The interesting aspect of this, number one, he was very definitive. Number two, he had a clear answer. It was clear that he had looked at that law ahead of this meeting and that it was fresh on his mind. It seems like this is going to be a very interesting transcript that we get in 5 years.
There's 2 press conferences today. Gina Smilek, Colby Smith, Steve Leisman, and all asking adult questions about the economics. I went to Craig Torres after his question, our great historian on economics, and I said, Craig, finally. And with Craig Torres launching off, John, we got into the emotion of this election and Fed independence into 2025.
We've got to separate these 2 issues, haven't we? Policy for December, which seemed highly dependent on recent data and incoming data between now and then. Then the projections around policy, which still feels some way off at the moment. There's nothing to model, I think is basically what Chairman Powell said in that news conference. So let's park the politics just for a while, just park the policy. Based on the data we've had since that September meeting, and basically depending on the data we get when we go into December, that sounds like a Federal Reserve that's teeing us up for something that the former Vice Chair Richard Clara talked about in this program before that news conference started, that we could see Chairman Powell look to find some optionality going into December.
That is what the market was looking at. What I was looking at was a 95% chance of at the end of October, was pricing in a 60%. As a few minutes ago, as Jay Powell was talking, key question is how much does this turn up the volume on CPI that we get next Wednesday, especially given that he pinpointed stickiness in the latest inflation.
There's something you said when the news conference is on, Lisa. This is a Federal Reserve that prepared for this moment. The very he responded in this fashion that he responded to the questions in such a direct way going into next year. It sets up some real tension for 2025 and perhaps even beyond.
Because this is not a Fed that is just being passive and hoping people don't ask the questions. This is a Fed that's very prepared. Prepared in how they were going to answer it. They were prepared even for the yield move question, saying that we only take it into consideration when it has been that way for a prolonged period of time. Again, this is setting up tests for the market to take into consideration at a time when they are saying they are opening the door to responding by not necessarily cutting in December.
Equity markets right now, session up by 0.9%. Yesterday, a big sell-off in This afternoon, we're seeing a bit of a rally. Yields lower across the.
6,000 banner ready? I mean, you got to have that SPX 6,000 banner ready.
What are we, TK? 17 points away?
Yeah,
we're not far away.
There. We can't do Dow 44. SPX 6,000.
I'm sure the president-elect will be very.
He will
have 1,000.
He will be
through next year. I said earlier on the program this morning. It's funny you mentioned this. Stuart Kaiser City was sitting right there this morning, and he said, that's the Dow. And I said, I'm trying to change that. And going into next year, I'm trying to change president-elect as well to make sure that maybe he shifts away from that to the S&P 500.
I think both.
Which is no chance.
Exactly.
Here's my response. No.
Yeah, exactly. But what about if?
No. And I'm sure the president-elect would say the same thing. Rick Reeder joins us now from BlackRock, one of the very best in global fixed income and cross-asset and markets worldwide. Rick, welcome to the program. You followed that news conference. Let's just start with your first takeaway, Rick. What's your big one?
So first of all, you say there's some drama there, and I thought that was interesting. Listen, I think I agree with the comments that they have to introduce some balance, I think, in December. Listen, I think the takeaway is they still think rate is restrictive. I still think you got to get that funds rate down to 4-ish. I think you got to get you got to be really careful about the mortgage rate. But I think they're going to go in December. I think he's got that's part of the plan. But then as you get into next,
there's 2 dates with some asterisks over the next 6 months. Stars in the corner of those dates mean you get some projections at those meetings. So the next one is December 18th. And then as we work forward into the following year, we're going to get a decision from the Federal Reserve in 2025 in the spring on March 19th. On March 19th, Rick, we'll have a new president who may be already coming forwards with some policies and some big tariffs. Rick, do you think it's still too early on March 19th to expect this Federal Reserve to bake in some policy from DJT, the former president-elect Donald Trump?
Can I also say that I will wait and see? Listen, I think you're going to have to evaluate that policy. I mean, we're going to get more data on tariffs. We're going to get more data on how we deal with spending deficits. Listen, I think there's some extremes that get said when you go through an election campaign like this, how aggressive we'll be on tariffs, how aggressive we'll be on cutting spending. And then I think you're going to start to see some clarity. You're going to see, by the way, you're going to see what a cabinet looks like. You're going to see who the people are. You're going to have a sense for those personalities and then, what their disposition is with regard to policy. So yes, I think in March that you're going to have to evaluate that and have to evaluate what it means for the forward growth forecast.
That said, Rick, one thing really stood out to me in the press conference, and yes, it was the no, and the preparation for that question, but also this focus on inflation being a little bit stickier than in prior readings. And to me, that was notable because it seemed like they had left inflation for dead. That wasn't even part of the mandate. It was, sort of autopilot cutting until you sort of get to a certain place and then you wait and see. How much does this turn the volume up on CPI that comes out on Wednesday?
It does. I mean, it's going to, listen, I think one man's opinion, or more our team's forecast, listen, we think most of the descent in inflation has happened. We think you've got tremendous goods deflation. Now you've got base effects that aren't a tailwind going forward. What is service inflation do from here? I mentioned it earlier. I think shelter is a really big deal. And part of why I think you got to get that rate down. What you've seen over the last month, you look at housing affordability, still a problem. Housing starts are low, building permits are low, existing home sales are low. You have a problem today. Shelters, you're not getting enough home building. You look at all the home builder earnings, pretty rough because they're subsidizing mortgages, they're subsidizing houses through their bottom line. Listen, you got to get the rate down. You got to get housing moving more efficiently. Right. And that, by the way, that'll bring shelter inflation down. But that's been the thing that's sticky. But yeah, I think we're going to focus on what these, in particular, I focus on service inflation. Where are we going to be over the next couple of months? And I think it's going to be pretty important. I think most of the benefit, you've seen it play out already.
Rick, it's away from your remit. I was talking with Eric Balchunas, our ETF base. BlackRock's got an interest in Bitcoin from printing 77,000. Equities are moving, bonds are moving in the way we've discussed. What does Bitcoin at 77,000 signal to fixed income and to equities, and for that matter, to the dollar?
These are good questions, hard questions. Listen, I will say one thing. I mean, obviously, what Bitcoin is reflecting is a potential change in policy and a more favorable disposition towards crypto. I think that's point one, and that's clearly the big driver. Second one that I'll throw out there that I think is robust. Listen, we got to deal with debt and deficits and what does it mean for currency going forward. And listen, I mean, it's a scarce asset. It's becoming more scarce. And I think, and I will say from doing a lot of client meetings, people more and more are thinking about real assets. People are thinking about, gosh, in a different world, what does it mean? We got to get our spending down because our debt is too large. Do I own some scarce assets, some real assets? And I think that's playing through, obviously, alongside the bigger one being a more favorable disposition from policy in terms of where that is. But gosh, I hear more and more about real assets, not just crypto, but in other places.
The moment of people pushing back because of the deficit. So just a snapshot of where things are at. So we saw a big fixed income. And typically, if this was EM, say, and we saw moves like that, and I was worried about the fiscal position of that country, we see the currency weakness too. You didn't see that yesterday. You saw a lot of dollar strength. So I'm wondering from your perspective outside of that, whether you are already seeing signs of pushback and whether you'd expect to see it pop up in the US dollar anytime soon.
So I think the first thing people react to is you got a change in policy, tariffs, stronger dollar generally. And I think that's a market tends to knee-jerk. Market usually can only focus on one thing at a time. And I think it was focused on that. I don't do a client meeting today where the first or second question is about the debt, isn't about the debt in the country, the deficits we're running. I think this administration is going to have to address, this Congress is going to have to address. It's too much debt coming due. If you said to me next year, like Lisa said, we're going to be laser focused on inflation. We're also going to be laser focused on auctions because we're issuing so much debt every single week. Every client wants to know, and I think it gets to that question of why people are buying real assets, how they're thinking about. By the way, equities are an operating leverage machine on GDP. And, quite frankly, you think about what does well in this environment, equities still do well. But every client meeting I go to, people want to talk about the debt. And I think it is definitely going to become much, much more of the regular dialogue in everything we do investing. By the way, not just financial investors, corporate CEOs, CFOs, how they think about CapEx, R&D. I think it's going to be a big deal going forward.
Can you just elaborate on that in terms of when we'll actually see it in a more dramatic fashion? Because you can make a lot of arguments for why yields have gone up. And frankly, Jay Powell said, I'm not going to parse out what's what, but some of it could be deficit, some of it could be the political regime, some of it could be better than expected growth. I don't even know. I don't care. It's going to stop anyway. At what point do you say this is real and this is actually a risk premium that's being put on for the first time in a long time?
Movement that takes place in markets. Or, by the way, you look at what's happened to the credit markets, spreads keep tightening. I've said this before. If you go through some of the companies today, high the curve, don't have any financing, don't have any. The U.S. government, we threaten to default every couple of years. We borrow at the front end, and the immense size of bill coupons or bill auctions we do. Coupon auctions we do every week. Listen, I think it is, that's part of why every auction you got to watch, is the market, particularly in the back end of the curve. Listen, I think there's a strong bid to, and by the way, part of why I clip a lot of yield in the front end, just keep clipping that yield. The back end, I think, is going to be a big focus going forward. Like you said, we've never had, not just the amount of debt, it's the debt service. We used to print treasury bills at 0%, 1%. Now we're printing huge size treasury bills every week at high levels. So it's going to be a big focus. And is there one event? Listen, I think auctions are going to be worth watching. And I listen, the shape of the curve. I would say one last thing. And I think Jay Powell was very clear and right in this. Markets can be wrong a lot. We priced 2 hard landings already this year. Markets can get crazy extreme one way or the other. But I think you got to watch over time the premium we're paying in this country for the amount of debt that we're going to issue, what it means for the currency and what it means, for how much will people absorb, not just domestically, but internationally.
Rick, I've had a couple of whispers, and I'd love your response to this from a couple of banks. They're anticipating that maybe credit trades through treasuries, investment grade, US corporate credit trading through treasuries. I'd love your view on that. Is that possible? Because for some companies, we're not that far away. Do you think that we could see that in the next 12 months?
So, Jonathan, I never thought if you go back a few years ago, I never thought, and we talked about it years ago. Remember, we were funding companies at negative yield. Like, I never thought that would happen. Remember that in Europe? Like, we're lending coming in. I remember explaining to my kids, like, I'm lending money to companies at negative. I'm paying them to take my money, but explaining why bonds where they are, it's hard to explain. Anyway, so is it possible? It's definitely possible. The supply-demand dynamics are quite different, and it's definitely possible. I mean, these spread tightening you're seeing across the board is pretty powerful. Listen, one thing, ultimately, taxing authority is a really big deal. And there's one thing that I think is hugely important for the next couple of years. There's been a massive transfer of money from the public sector to the private sector. The private sector has got, I think the number is 220 trillion of net worth. The asset coverage in the United States is pretty darn good. How do you back to the government versus what they've transferred to the that I think this administration is going to have to navigate?
John, your insight there. At least 35 years ago, I had the privilege of hearing John Templeton say the same idea, that credit would trade through full faith and credit. That was unbelievable. Now it's unbelievable, but it's a critical insight.
Yeah, but you heard what Rick said there, and it's really important. Through the pandemic, there was a massive transfer of money, Tom, and it was from the sovereign to corporate America, to individuals, which is why what we've seen ultimately, because of policy, coming out of the pandemic, is that balance sheets for corporates are better. Balance sheets for households were rock solid. And what got weak? Now, Rick, you followed that up and said that ultimately that's going to have to be a source of revenue. But that's not the policy proposal. The policy proposal, as you know, is to drop corporate tax rates from 21 to 15 with conditions, which is domestic manufacturing. I get all of that, Rick. Are you basically saying that at some point we need to understand that that's what we need to do, even if it's not what we want to do? And Rick, for that to happen, you need guardrails, you need constraining forces. And I don't see any sign. Ultimately, it means it needs to come from the market. And the question is, will the market actually provide those forces? Will they hopes of fiscal policymakers, the tax cut hopes from campaigning? Do you think the market will be a constraining factor or not?
The answer is yes. Listen, I think policy generally doesn't react. I'm wrong in this case, but generally policy doesn't react till the shark is right next to the boat. And I think, the markets will usually tend to anticipate things. And by the way, often anticipate them, too early or wrong. But I think the markets are going to be a great barometer for what, policy needs to adjust to. So, I'm hoping it's not just in terms of how that manifests itself. And I will say one thing, and we can debate tax policy, marginal tax rates. Listen, I think the U.S. economy, there's only one way that you bring the debt down. You got to outrun it. Nominal GDP, we have to grow. The economy's got to grow. There's a series of initiatives you can have. You can have fiscal spend as long as it's got velocity to it and that the economy's growing and then the cost of the debt has to come down and the sheer size of the debt has to come down. And then we slowly bring the debt problem down in this country. But I think it has to be a whole series of initiatives. And quite frankly, policy needs to create confidence of investors, of the general populace, that they're moving the boat in that direction. And by the way, confidence is hugely powerful. You can do a tremendous amount. Your comment about emerging markets. The one thing U.S. has, and you look at the faith in the Fed and the faith in the confidence that will ultimately do the right thing. Critical going forward.
Rick, you're a money manager. Can we? Were you selling bonds yesterday?
No, no, not yesterday.
But you've been
listen,
selling.
Listen, without getting specific in terms of things we're doing, regulatory change, or I think there's potential regulatory change. I think the financials are interesting. I think fixed income products like mortgages are interesting. When you change the regulatory dynamic around banks and their ability to buy different things, so those assets have become more interesting. Listen, I think equities are rightly moving in the direction they should move with a series of initiatives that could stimulate growth here going forward. So I like parts of the equity market, and that's been. And then the other side of it is that something that I'm just going to keep persisting on: the front to the belly of the curve, yielding assets, credit, securitized assets, Europe, the way you buy credit, et cetera. Like if you just keep clipping this yield, it is, I mean, even if rates move up so much, you're still able to build portfolios with the CTF or BINC. You're still able to create this portfolio 6.5% yield. That's pretty spectacular with inflation running at 2.3%. So that's my key is like, let's keep buying this yield and hold this yield in the front of the belly and then let people take the risk further out the yield curve.
Rick, this was awesome. It's good to catch up with you, sir. Appreciate it. Rick Reader of BlackRock. When do you begin with that conversation? It's a lot to chew over.
Yeah, well, first of all, he was talking about inflation possibly being sticky even before what transpired in Washington, D.C. I love his response to you about, were you selling bonds? We like mortgages.
We like banks.
We like banks. We like stocks. But this, to me, is really the key debate, which is how much can you buy the front end, clip the coupon? Is this making us great again, essentially, for people who want to sort of get some income on the margins, but then go into asset classes that are going to be less vulnerable to a potential inflationary shock?
It's just a guess, and I haven't heard directly. I'm not sure if the Trump administration is looking to make cash great again. But we'll see. I guess maybe that is a goal.
Well, maybe it's make crypto great again. Actually, I think that it's make dollar less great, so it is weaker, although it seems like that's somewhat contradictory.
Let's get to Mike McKee. Mike McKee was in that room, in that news conference. And Mike McKee, at some point there was some tension with Chairman Powell. Were you surprised?
No, I don't think anybody was surprised. We got about as much out of him as we thought we would get on the issue of Donald Trump and the elections. He just answered with one word and then one sentence. No, he's not going to resign if asked, and it's not permitted by law for the for the president to demote anybody on the Fed. And there wasn't as many questions along those lines as maybe we thought there would be, because he was so definitive on those two answers. I think what you got today was two different news conference messages. One was to the people inside the Beltway here in Washington about his relationship with Donald Trump. And the other is to the markets, and Rick picked up on this very well. The Fed does not know what it's going to do. There are a lot of cross currents coming in 2025. So if you think that the Fed is on some sort of path because of the last SEP and the last dot plot, you're going to probably be wrong. The Fed has a lot to keep an eye on, not just with the president, but with everything else going on in the world.
With respect to the message to the markets, he was asked about the fact that the Fed removed the reference to gaining confidence on inflation. And he basically said, there's nothing to see here. It was just a semantic issue, that we already said that and we're not going to repeat it. Do you buy that?
I do. And that was the conclusion that not only I came to when I read the statement in the lockup, but that all the other reporters basically came to as well. We've seen this before. When they start changing policy, they give a rationale for that. We're moving in the direction, or we're getting close to where we need to be. And then after that, they're already there. So they don't need to keep repeating that. They just took it out, as he said, for clarity.
Mike McKee on the latest in that news conference. Mike, we'll have a longer conversation tomorrow when you get back to New York City. What a news conference with Chairman Powell. Don Constant with us now of Mizuho. Don, welcome to the program. We'll just give you the opportunity to share your initial takes from that news conference, and then we'll get into it. What stood out for you?
It was pretty much as expected, in the sense that he's still committing to the easing cycle. I think the sort of new news might be where might they pause in the context of the new policy regime that we'll be getting with the change in administration. But the idea is, I think there are, subject to the data really shocking. They're kind of on an autopilot to get rates down to around 4% in the early part of next year, and then we take it from there. If they have to respond to policies that adjust the balance of risks, for example, then they'll figure that out then. But the election itself isn't really affecting what we thought anyway they were going to do.
Dominic, if the theme of a Trump administration is growth at any cost, pushing against all this is going to be a nominal GDP lift. When you sum things together with Steve Rasciuto, do you just assume a run rate 5% nominal GDP, or can I even look for an animal spirit towards 6%?
Well, I definitely think there's an animal spirit thing out there that's pretty interesting. I mean, the only caveat is when we went through tariffs before, when they started to sort of hit, it wasn't clear in 2019 that the animal spirits were exactly kicking in, and the Fed had to get into extra easing mode by then. So I think there is certainly definitely uncertainty around the whole thing. Right now, though, the issue is the labor market, it's not great. I mean, employment growth is sort of stagnating. I would say the economy is been bifurcated. You've had some very strong sectors, some weak sectors, and if it wasn't for the latest, the election, we'd still be in a mode whereby the Fed would be preemptively trying to cut rates quite quickly to stop unemployment going up. So we can't forget that, and we're going to have a few more months whereby if animal spirits don't kick up, you might still well see unemployment rising above where the Fed expects it to be, and therefore some disappointment. I mean, growth itself is a bit of a lagging indicator, and it really reflects the average of the economy. It doesn't reflect the underlying weaknesses in some of the sectors.
If we expect the unexpected, is a euro through parity, or dare I say 103 maybe, and yen through 160, will it signal a new resilient and stronger dollar?
Well, I mean, it really should do. I mean, especially if you're going to start pricing for the tariffs. I mean, what we don't know is whether the tariff threat is just a threat or whether it's going to be enacted. If you are going to enact tariffs, then there is obviously the risk the dollar is going to basically go up, and the instance of the tariff is obviously falling. The consumer is going to be somewhat protected. That's where we might end up. Trump is Trump, and so it could well be just a big bargaining chip, and we might not get the full force of the tariffs. I would say one about tariffs is we do actually need them. If he's genuinely the modification to the tax law next year, you do need the tariffs to actually pay for that. So I'm guessing we're going to get the tariffs.
Putting the policy aside, there have been other changes that have happened in the past 3-4 weeks that also were addressed here. Yields have gone up because of economic surprises to the upside. Inflation on the margins has been slightly stickier. There have been questions about why long-term yields are so high, and frankly, why risk assets don't care because they're treating it like it's for the right reason. Dom, at what point do these yields force the Fed to take notice in a way that they don't have to now? They can just dismiss it as a blip potentially.
Well, I do think a lot of the move in yields is obviously being driven by term premium, what we call term premium, and there are good reasons for why term premium is rising. One of them is tariffs, but another one is obviously the fiscal supply. So that means you kind of get this sort of steepening pressure through the yield market, and it's obviously consistent with the deficit concerns that are being coming out of the new policy regime forthcoming. In terms of how that affects risk assets, it's really a balancing act. If you have term premium going up, normally all else equal, risk assets would suffer. However, if on the other side of that, you're getting a sort of higher level of growth, let's say because of the fiscal stimulus coming through, then that really does kind of easily overwhelm the impact of term premium. Term premium has been very low, so to expect it to sort of go up is not unreasonable. It's almost, if you like, normalizing by some models we look at. And if you can take a quid pro quo and say, well, look, we're going to have higher growth coming out of all of this, then there's no reason for risk assets to perform badly. And I think that's kind of where we are. So we're in the sort of, best of all possible worlds in the sense where risk assets are okay. And yes, long-term yields are rising, but they're not rising so much that they're going to unravel the story for risk assets. And bear in mind, the Fed is in restrictive mode. So by the fact that they can reduce their short-term rates, it will help anchor the curve lower. So you may well have higher term premium, but if short rates are still falling at the other end, then the whole curve is somewhat getting anchored, which is actually quite good news. And it does avoid one of the problems we had last year, if you recall. I call it the Liz Truss moment, where if the Fed threatens higher yields at the front end and you have a term premium rising in terms of hurting the long end, that's really bad news for risk assets because that kind of unravels both sides of the equation, so to speak.
You said a number of things there. One aspect is you said that the Fed is clearly in restrictive territory at this point, and it will be easing. Jay Powell actually maybe cast a little bit of question around just how restrictive they were, saying that they're trying to get down to a place and then adjust so they can figure out what that neutral rate is. Do you think that he was opening the door to pausing in December, to not necessarily cutting more for the rest of this year?
I sort of feel that they're pretty much on autopilot for a December cut. I definitely think he's opening the door to a pause, let's say, within the next 6 months. So they're not going to sort of run all the way down to 3%, which is where they have that neutral rate. But they could definitely pause around 4%. Pausing around 4.5% is a little premature, particularly since they haven't even wouldn't have seen the new administration come in. So, to my mind, not yet is the pause, and therefore they can sort of plow through, into a Q1 easing and then pause pause then. In terms of neutral and where it is, obviously no one really knows where it is. But we've done some interesting work to suggest that if interest rates don't come down, employment in certain sectors will continue to slow and go negative. And that's this kind of preemptive aspect of why they want to bring down rates. And that's kind of where, why I feel that neutral is not here. It's probably not at 4% and it's probably close to 3%, but we'll see in the end.
So what do Constam and Rashudo say about a run rate of non-farm payrolls? I mean, can you get non-farm payrolls permanent under 100,000, or can you even go to a negative statistic?
Well, I think, clearly you can, and I think that's the problem. I mean, Powell himself said the labor market has eased enough. You don't really want to have payrolls running 100,000 or so, and the reason, or less. The reason is because layoffs are still very low. The layoff rate is still running below 1.2% of the employed workforce. The idea before COVID, the layoff rate was in a range of 1.2 to 1.4%. So adjusting layoffs higher, which will be reflected, for example, in the claims data going higher, normalizing, if you like, with employment growth down in around 100,000 or so, you will see unemployment rate rising well above the Fed's forecast. So you have to have basically payrolls accelerating, or somehow cross your fingers and hope layoffs never actually go up. And we're in a new world where companies just won't fire people. And in a way, that comes back to the animal spirits to either not lay off, or animal spirits to hire more people and get payrolls accelerating to keep the unemployment rate where it is, in line with where the Fed would like to see it in the medium term.
Hey, Don, this was great. It's good to hear from you, sir. It's been too long. Don Constant there of Mizuho on the Federal Reserve. We'll do this all over again in December. But the key one, I think, circle it on the calendar for 2025, March 19th. March 19th, spring of 2025, when they have to produce some new forecasts with some new policies in mind, maybe.
Especially as the Fed finishes out the first 100 days. It raises this real question: how many of the policy implementations have really affected the trajectory of the economy? And they can't use this as a punt. We'll see what we see. They'll have seen, and they'll have to react.
The Fed is reactionary. The market is anticipatory. The Fed is reacting to the data. This market is anticipating changes to policy. And a lot of that right now hinges on what happens with the House and whether we get this GOP sweep. From New York City, that does it for us. Thank you very much for choosing Bloomberg TV and radio. Coming up on the close, Remain will get you there with Kathy Wood of ARK Invest. From New York, this is Bloomberg.
The top names in global leadership are on Bloomberg.
It was important that when we came into office, we looked at the books, we assessed the state of the economy. We needed to understand the damage that's been done, and that £22 billion black hole is a real problem that we've got to deal with, and make sure that we go through all the processes necessary for a properly thought through budget.
Nobody covers the top global leaders like Bloomberg. Context changes everything.
Asia is a continent of contrast. The region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach.
Then, so give us a sense of how you translate Korean
Magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Mazur and Tim Stenevec on Bloomberg Radio.
A very good afternoon, everybody. On this Fed decision day, this Thursday, November 7th, 2024, I'm Tim Stenbeck. Carol Master is out today. We are live on Bloomberg Radio, streaming on YouTube and Bloomberg Originals. We just heard it from Charlie. The Fed cutting its benchmark lending rate by a 0.25 percentage point Thursday, extending efforts to keep the U.S. economic expansion on solid footing. Stocks hitting a fresh all-time high. Treasury yields falling alongside the dollar. Jay Powell said the economy is strong and he's refraining from signaling the Fed will skip cutting rates. We're going to have much more on the trade and Powell in just a minute. Still ahead, though, in just a few minutes, we're going to be joined by the founder, CEO, and CIO of ARK Invest. Yes, Kathy Wood. She's going to join us for her first interview since the election. We're talking Trump, Elon, Tesla, and more. And speaking of Trump, his win is a tale of widespread discontent. Bloomberg Businessweek editor Brad Stone joins us a little later with more. And from his social media network to real estate and crypto, the former president's return to the White House will give him power to leverage his array of assets. All that and more over the next hour or so. First up, though, we are focusing on the Fed because it did cut its benchmark lending rate by a 0.25 percentage point. It extended efforts to keep the U.S. economic expansion on solid footing. Officials voting unanimously to lower the federal funds rate to a range of 4.5% to 4.75%. The adjustment follows a larger half-point cut in September. Joining us now is Abigail Doolittle. She's Bloomberg News Markets correspondent. She joins us here in the Bloomberg Interactive Brokers studio. Ira Jersey is Bloomberg Intelligence Chief U.S. Interest Rate Strategist. He joins us from Bloomberg Intelligence headquarters in Princeton, New Jersey. Abigail, I'm going to get to the trade with you in just a second, but I want to start with you, Ira. And it's less about the path of rates, at least where I want to start. I want to talk a little bit about the way that politics came up and the way that Powell answered or didn't answer at the press conference today. The word no coming up quite a few times. What did you make of that?
We went through this in 2018 and 2019 when the Federal Reserve was hiking interest rates and there was questions like Donald Trump said, I want to fire this guy. And of course, they got the White House counsel involved and everyone was talking about whether or not the president could remove a chair of the Fed or even a Fed governor. And the answer is no. There is a way for that to occur, but it's very specific in the Federal Reserve Act about how that can be done. And it's similar to some of the other independent agencies. So keep in mind, there's a lot of people in the government who do not serve at the pleasure of the president. So only those people who serve at the pleasure of the president can be immediately removed. So,
okay.
This isn't new, right? We went through this 5 years ago, and I guess some of the people in the press conference forgot that we had done this already.
Okay, but would you say though, Ira, it's a little different now, given that Trump is president-elect, he's back. Powell was, selected by President Biden, and his term doesn't expire until halfway through the next president's administration.
Well, it's May 2026, so not quite halfway, but yeah, I take your point. But so the thing is that if Jay Powell doesn't want to leave as Fed chair, he doesn't have to. Now, can Donald Trump, go into the media and complain about what the Federal Reserve is doing or not doing, whatever? Sure, that's possible. It's also possible that the Federal Reserve Act could be changed by Congress, right? The president can't unilaterally do that. There has to be legislation to change it, maybe to somehow or another reduce the independence of the Fed. I think that would be a mistake, quite frankly, because it has been shown that independent central banks tend to do a better job with monetary policy than central banks that don't have that have more active political whims of elected officials. So, but that being said, that's really the only way that could happen. And maybe Jay Powell gets frustrated, throws up his hands, and resigns. That's not impossible. But today he said no, he's going to stay.
He was very quick. I think he was ready for that question. I think it's fair to say. I do want to go and play some of the press conference when he was asked about the election and its effect on policy decisions.
In the near term, the election will have no effects on our policy decisions. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume.
We don't guess, we don't speculate, and we don't assume. I want to bring in Abigail Doolittle, Bloomberg News Markets correspondent, because we saw no shortage of speculation, guessing, and assumptions yesterday with the equity market reaction to a Donald Trump entering the White House again. What do you make of the way that Powell says, wait a second, we're going to take a step back and we're going to wait to see what happens?
Well, I think it's a fair answer. I mean, the Federal Reserve is a different animal, a different beast than the markets created up of all sorts of investors, whether they're institutional or retail. And he's also respecting the natural law of cause and effect. He's saying that we're not going to treat an effect that we don't know until we see what the cause is. So until we actually see the policies and what the effect is on the economy, it's not going to affect our policy. Markets, on the other hand, are making the assumption that President-elect Trump will do as was done before, cut taxes, and especially since there's the chance of pretty solid chance at this point, looking at some of those House races that are close, that it will be a Republican trifecta, that significant tax cuts could be put into place, 15% corporate tax rate, which would flow right through the economy, plus deregulation. That could really stimulate growth. So these gains that we're seeing for stocks today, the S&P 500 right now up about 0.7%. So we're looking at a better part of a 5% gain over the last 3 days, the best 3 days going back to November of 2022. Investors are telling you they are excited for what could turn out to be a hot economy.
Hey, Ira, come on back in here and sort of give us your thoughts on that, because whereas the Fed chair will not guess, will not speculate, and will not assume, if there is indeed a red sweep, or at least President-elect Trump is able to get through some of his policies, what does that mean for the Federal Reserve come next year?
Well, I think there's a number of things. I think for next year, there's probably very little, because even, President Trump takes office January 20th. It's going to take some time to get all of the policies through committees and then through Congress. And really, it's the 2026 and forward expectations and how those policies will affect the economy, after next year. So in many respects, like Jay Powell will only have a little tiny stub of the Trump policies to contend with when it comes to monetary policy. So near term, and Jay Powell even mentioned this today, near term, there's not going to really be any effect on how they forecast the economy over the next 6 months to a year, because there's not going to be any major policy changes. Now, that being said, I think the market is a discounting mechanism. And one of the reasons why you saw the pretty significant sell-off in treasuries over the last couple of weeks is, yes, the economic data was much better. But I think part of that was just the anticipation that Donald Trump would be elected president and the potential for the sweep by the Republicans. And because of that, the idea that you're going to have potentially more deficits, higher deficits, so therefore more treasury supply, plus on top of that, as Abigail said, potentially better growth going forward. So all of those things combined, I think, is one of the reasons why we're near 4.5% on 10-year treasuries right now instead of 3.5%.
Abigail, give us your view on the equity market reaction here. We are seeing stocks higher, off their best levels of the day, but in general, market reaction was pretty limited to this press conference.
It was, and I actually think that almost none of today's market action is about the Fed. If there's a Fed piece to the S&P 500 being up 0.75%, the Nasdaq being up 1.5%, the SOX up 2.3%, and the Russell 2000 down just a little bit, the banks giving back a little bit from yesterday's greater than 10% rally, it has to do with the fact, to the best of my ability to determine, that the Fed did not in any way say jump ahead, make conclusions that we don't know yet, that because we think that the Trump administration, the future Trump administration is going to stimulate growth, we are going to pare back on what we were planning on doing. If there had been any indication that they were planning for that in the future, we would see probably a different reaction from stocks, because then the assumption would be that, cuts that are priced in for the future, that they wouldn't be happening as quickly. Instead, it's status quo. So the rally we have today is really still the election certainty and the Trump trade.
Abigail Doolittle, Bloomberg News markets correspondent. She's here in our Bloomberg Interactive Brokers studio. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist, joining us from Bloomberg Intelligence headquarters in Princeton, New Jersey. Coming up next, your countdown to the close. The closing bell starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now we are 2 minutes away from the end of the trading day. Romain Bostic alongside Scarlett Fu taking you through the closing bell, a global simulcast. It starts right now. We're joined right now by Tim Stenovic in the radio booth. Carol Masser has the day off as we welcome our audiences across all of our platforms, television, radio, and YouTube. Of course, a couple of days removed from the election and a strange Thursday special Fed decision.
Yeah, what do you make of that? I almost said Wednesday earlier.
I know, it's kind of confusing here, but obviously
confusing.
they needed some distance from the election. But you got your 25 basis points, Tim.
You got your 25 basis points, and you also got a decision by the American voters. We were concerned that we wouldn't have a decision from the American voters by the time this Federal Reserve met and by the time that we heard from Jay Powell. So turns out they did a pretty smart thing by moving the day by 1 day.
Yeah, but Jay Powell was very, very careful, of course, to make clear he was not going to comment at all on the political situation or on what the incoming administration, what policy they might affect. So it was effectively a no comment through much of it. And the press conference was a lot shorter and a lot more tense, by the way, than what we typically see.
Isn't that notable that what we're talking about now is less about the path forward for rates, at least, and more about the way that he answered questions about what he would do if asked to resign or if other members of the Federal Reserve were asked to move aside?
And I think that's going to change in a material way, maybe not at the December meeting, but when we get to next year, because a lot of this is the monetary policy decisions are indeed going to be driven by the fiscal policy decisions, even if Jay Powell doesn't want to touch that. But he is going to have to address that, at least behind closed doors, most likely at that next December meeting. And my guess is it certainly was a topic of conversation in the two-day meeting that we just came out of here today. Meanwhile, let's walk you through the market action here on the day. Interesting price moves. We're well off the highs of the day, but the S&P 500 holding on to a record high, up about 40 points or about 0.7%. The NASDAQ composite and the NASDAQ 100 each up about 1.5% on the day. That's going to be good enough for a record high there. You see the Dow. The Dow had been trading at a record high for a good portion of the day. At one point, it was above right around that 43,800 level. But of course, it gave back a lot of that. And there you see the Russell sitting this one out a little bit, although it had shown a little bit of strength earlier in the session. Closing out the day, Tim, down 0.4%.
Hey, we're still in the midst of earnings season. It's not all about the Fed and the election. I'm watching what's going on over at Redfin right now. In terms of that outlook, the company sees a fourth quarter net loss between $25 and $32 million. That's coming above estimates of $24.1 million. The company says third quarter adjusted EBITDA came in at $3.95 million. Estimates were for $9.24 million. The company says third quarter revenue came in below estimates at $278 million. Estimates were for $281.1 million. Shares right now bouncing around a little bit, but about 3% to the downside.
All right, I'm taking a look at Expedia because that company just came out with results as well. Third quarter adjusted EPS beating analyst estimates, $6.13, 3 cents higher than what was anticipated. Revenue came in a little bit lighter, $4.06 billion. Analysts were looking for $4.11 billion. But in terms of its full year guidance, Expedia, the online travel company, did raise its full year guidance. So we are looking at brighter skies, at least when it comes to the outlook, and that stock marginally higher. Actually, it's bouncing around at the moment here. There's also, in addition, a CFO transition as well taking place at the company.
Yeah, this is interesting too, and we should point out, I think we are expected to get some results out of Airbnb a little bit later tonight, so maybe we'll get a little bit more color here on the health of the travel industry. It gets to this idea though too, when we talk about the beneficiaries here of the big travel boom, that revenge travel, and whether that is egged. This raises a big question here, not so much about how they perform this quarter, but whether they can give some guidance longer term that will please investors. Tim.
Yeah. I mean, look, return of business travel, Airbnb certainly talked up the idea of people using Airbnb for business travel. The company itself has a policy of remote work. So in a sense saying, hey, you guys should do what we're telling everybody else to do. Yeah. But at the same time, since everyone is returning to the office, apart from Airbnb employees, does that affect the company?
Yeah, Airbnb was also very popular for people who were combining work trips with vacation trips because they were able to do more of that. And of course, as we go back to a more conventional work situation, that probably requires less of those long-term rentals at Airbnb places.
Yeah. That's why I was surprised to see Romain today after a few days in Detroit doing election stuff.
Yeah, me too.
Not
Tim.
extending that trip?
Yeah, trust me, me too, man. I tried
Okay.
to stay anyway and take a trip over to winter Canada, but we need to take the trip right now into those earnings out of Airbnb, crossing the wire right now. The red headline on the Bloomberg terminal is about the fourth quarter outlook. The company's seeing fourth quarter growth in nights booked above 8.5%. The street was looking for 7.7%. That's the guidance for the fourth quarter. For the quarter that we just ended, the third quarter, gross booking value coming in above estimates at $20.1 billion. EPS, $2.13. The street was looking for $2.15. Adjusted EBITDA above estimates at $1.96 billion. Revenue also coming in slightly above estimates here. And we're going to go back to the forecast here. So for the fourth quarter, they are saying that revenue in the fourth quarter, they're looking at a range of 2.39 to 2.44 billion. The street was looking for 2.42. So the top end of that range would beat that.
And just some commentary in the letter to shareholders. Airbnb saying that's building on robust momentum in September, off to a great start in the fourth quarter, citing strong demand trends across core as well as expansion markets. So again, to answer at least part of your question about what's going on in travel demand, so far, at least for a company like Airbnb, it looks like it has persisted.
I want to pose a question here too, because it's interesting to see Expedia down, Airbnb up. And I think we had this conversation a few weeks ago when some other earnings were out. This idea that people aren't necessarily using these aggregator platforms to the same extent, that they're booking either directly through the airlines or through the hotel websites, or if you're a platform like Airbnb, maybe there. And I wonder if that has an effect on sites like Booking, Expedia, et cetera.
Yeah, I think that's a really good point. I mean, consumers sometimes I know face challenges when they're trying to change a ticket. Now that it's easier to change a ticket if you do it through a third party versus if you're doing it right through that platform. One thing that I also took away from just a brief glance at Airbnb's release is about hosting versus staying using Airbnb. And you have to remember, this is a two-sided market here. Airbnb has to appeal to hosts to list their listings with the app, and also has to appeal to people looking for places to stay. What Airbnb is trying to do now is say that we want to make hosting as popular as actually traveling with Airbnb, as popular as staying in Airbnb, indicating to me that they're really trying to make the hosting experience better so people list with Airbnb rather than competing platforms.
All right, just quick mention here of Lucid, the car maker, maintaining its full year production forecast, still sees full year production of about 9,000 vehicles. But for the third quarter, it did report a loss, an adjusted loss of 28 cents a share, slightly more narrow than what analysts had been anticipating. Revenue, $200 million. Analysts were looking for just under 197.
Speaking of EVs, Rivian also out with its results right now. 3Q production coming in at about 13,157 vehicles above estimates. Deliveries relatively in line at about 10,000. The company posting revenue of about 874 million. That's a miss. The street was looking for 980 million. And we're also learning right now that the company's loss per share coming in at about 99 cents a share. The street was looking for a loss of 92 cents a share. So a miss on revenue, a worse than expected loss per share. But at least right now, it does look like some of the production and delivery numbers came in either at or slightly above street estimates. Tim.
Okay, let's look at what's going on with Block, formerly known as Square. Third quarter net revenue coming in below estimates at $5.98 billion. Estimates were for $6.24 billion. The company sees a fiscal year adjusted EBITDA at $3 billion. It saw $2.9 billion. The estimate was for $2.92, so a beat there. The company also sees third quarter adjusted operating income at $1.56 billion. It saw $1.44 billion. The estimate was for $1.46 billion. Still shares moving lower in the after hours by about 7%.
All right, and we also have Pinterest, the social media network, reporting results. Let's start with the third quarter. Adjusted EBITDA, $242 million, beating the average analyst estimate, along with the third quarter adjusted EPS and revenue, also higher than anticipated. For the fourth quarter, this quarter, Pinterest sees revenue of anywhere from 1.13 billion to 1.15 billion. And at the high end, that matches the consensus estimate. So the outlook, certainly the range is lower than the median estimate. And in addition, its active users, monthly active users for the third quarter, 537 million, That is higher than what had been anticipated at 532.4 million.
Affirm out now with their results here. Of course, this is basically the fintech company, if you will. In the company's fiscal first quarter, our revenue coming in at about $698 million. That's up 41% year over year and slightly above street estimates. Here's your guidance going forward, though. 2Q revenue, the company sees a range of 770 to 810 million. The street was looking for an average of about 783. Gross merchandise volume also expected to be slightly higher as well. Tim. All right, we actually got a few other earnings that we do want to get to here on a very busy day. Of course, a Fed day and a chance to catch up with some of the biggest investors out there. That does it for our cross-platform coverage of the market close on Bloomberg Television, radio, and YouTube. But we're actually going to stick with our radio simulcast. And Tim Stenivek, who's sitting down right now with Kathy Wood, the CEO and CIO of ARK Invest.
Hey, thanks so much, Romain. Do appreciate it. We are very pleased to have Kathy Wood for her first interview since the election of Donald Trump earlier this week. Kathy, shares of your flagship fund, the ARK Innovation ETF, surged more than 8% on Wednesday. It was the best day in more than a year. Part of the risk on trade that we saw on optimism of a second term for Donald Trump in the White House. And that's where I want to start with you, because when you were back on with us in October, you indicated, without actually saying the former president's name, that you preferred a President Trump over President Harris, strictly from the standpoint of the candidate who you saw would ease the regulatory environment. So here we are. What does another Trump administration mean for you and the companies that ARK invests in?
Okay, well, thank you for having me on your show, Tim. Yes, regulation, critical. I think the regulations that have been creeping into the system, actually, they started to creep in. They've just flooded the system and really gummed it up. So the biggest regulatory issues have been around the SEC, especially when it comes to digital assets or crypto legislation, and the FTC. As it relates to M&A activity. I think both there are going to be big changes there, and that is going to be the beginning, I think, of a lot of regulatory changes. In his first administration, President Trump basically said, for every regulation you want to introduce anyone in my administration, you must get rid of two. I think it's going to be maybe more dramatic than that this time around. And I also think having Elon Musk, who I think today announced that he'd like to name a new department, the Department of Government Efficiency, get that Doge. I think he's going to come into the administration. I don't think he'll be a formal part of the administration. He'll be more in an oversight role, as I understand. Yeah.
Well, hey, Kathy, I want to jump in here because you mentioned a few things that I want to follow up on. One is Elon Musk. Have you talked to Elon since the election?
No, I have not talked to him since the election. I did see on X that he was part of the family as they were taking the picture around President Trump's acceptance speech. So, I know he's obviously had a tremendous impact on the election. I think he had X made a big difference, and his ideas around government efficiency, which will revolve importantly around technology. Artificial intelligence is doing wonders for the most bureaucratic organizations out there. We know from Palantir that it is having a tremendous impact on insurance companies, underwriting process timelines dropping from 2 weeks to 3 hours. And even in the military, Maven, Palantir's working on Maven with the DoD for targeting the enemy. They have shrunk that department. They don't need as many people. They've gone from 2,000 to 20 people, which it's pretty amazing what's going on. And I think we'll see a lot of attrition. Any employee leaving the government probably will not be replaced.
Okay,
I don't think he'll. I just picked up it. I don't think he'll do $2 trillion in government spending savings in 1 year. That might be a 5 to 10 year. And I think between technology and attrition and lower regulations, maybe the abolition of certain departments, that they'll go a long way.
So you don't see him serving a formal role, but still overseeing some sort of Department of Government efficiency in an informal way? Help me understand what you see him doing,
Yes,
and whether or
yes,
not
I
that could
think-
be some sort of threat to, he's a very busy man.
Yes, he's an unbelievable, he's the inventor of our age. I think I said that in 2015 for the first time when I was on your show with Carol Masser at the time. He is the inventor of our age, and he comes into a problem, assesses it with first principles thinking, doesn't care how things have been done, and comes back with ingenious solutions to big problems, whether it's autonomous mobility in the autonomous taxi space, or in the healthcare space, Neuralink. He's in the social network space, X, in AI, XAI, but and a lot of people say, and SpaceX, of course, the entire exploration going to Mars. I think a lot of people can't believe he can do this, but again, he cuts to the quick, and first principles thinking, and surrounds himself with brilliant people who really want to solve the hardest problems in the world. And that's part of the secret to his success. Very high standards, and people who want to be held accountable to very high standards and want to really transform the world.
Hey, we're going to get back to Elon and specifically Tesla in a few minutes, but I want to go back to something that you mentioned at the top of our interview, Kathy, and that's the idea of some of the regulatory challenges that you said have cropped up over the last couple of years and during the Biden administration, specifically with regard to the FTC and the SEC not being present in a second Trump administration. How do you think the Trump regime will approach financial regulation, given that he's vowed to replace SEC Chair Gary Gensler? What does that look like?
Well, I think first, as it relates to crypto or digital asset regulation, they're going to replace Gary Gensler with someone who is much more open-minded, I would say, and will let the legislative process go to work. And the SEC is supposed to regulate, enforce laws. They're not supposed to create laws by enforcement, which is what Gary Gensler was doing. So I think that's going to be important. I also think if you look at the public equity markets, I think the number of public companies out there right now has been cut in half in the last 15, 20 years. The regulatory nightmare of being a public company has kept leaders of companies basically saying, if I don't have to go public, I am not going public. And so I think we're going to see a lot more work in that regard to give, the average investor a shot at some of these moonshots. So I think that's going to become very important. As far as the FTC, the antitrust has gone way too far. They were denying mergers and acquisitions that really the companies were tangential to one another. They weren't even really in the same market. So we're seeing, and yet at the same time, we've seen these megatech companies grow into, massive organizations and dominating their market. So they were denying mergers and acquisitions for, think about JetBlue and Spirit Airlines.
Yeah.
That was ridiculous. That was the same industry, but one is going bankrupt now because they wouldn't allow that M&A. They were just, dogmatic about it and didn't show to us at least any common sense.
So, let's jump in. I just want to jump in because we don't have a ton of time with you, and I want to make sure we get to a lot, Kathy. So forgive me, please. You also mentioned last time you were on with us, you weren't wild about the idea of tariffs. Since then, President Trump said that tariff is the most beautiful word in the dictionary. Do you think he will follow through with his threat of broad tariffs? And how are you preparing and changing your investment style given the threat of tariffs?
Yeah, I'd love to talk about that because we've gotten more information. I think the way the president is looking at this, is if he puts in place tariffs, the other side of that will be income tax and corporate tax cuts. And if you think about it, this is how America started. President George Washington, we had no income tax back then. All the taxes were in the form of tariffs. I do think that they're not going to be crazy tariffs. They're going to be much more thoughtful and really focused away from our free trade agreement partners and towards those countries that have not been really letting our companies play on a level playing field within their countries. So I think there's going to be a lot of negotiation around that, really, really helping us. But I do think tax cuts personal and corporate tax cuts are going to be much more important than tariffs.
Okay.
In terms of the growth engine that this economy needs. I'll comment on just a couple of other things. I know he wants a weak dollar, but if he puts in place the deregulation and the tax cuts that we expect, the dollar's probably going up. And this reminds me very much of the early Reagan years. It's fascinating what's going on, except the first couple of years of the Reagan administration, he had to deal with back-to-back recessions because Volcker was, raising interest rates to 15% plus. We've done that. Trump does not have to face that. We think that the Fed went too far. I think the Fed today even says it's going to continue to unwind a restrictive monetary policy. And I think it's important too, because what we expect now is there will be a lot of delayed activity as consumers and businesses try and figure out, okay, how low are taxes going and how is the world going to change? Am I going to get a better deal? So we're going to need lower interest rates. However, if we get the growth beyond that tax cuts and these other measures are going to cause, the dollar will probably go up. And so I think that will be a surprise, but it's an anti-inflationary force as well. And we're seeing commodities react to the dollar going up now in anticipation of these interesting policies. And then I'd love to just say one other thing. A lot of people talk about the deficit, and it is a big deficit in the middle of, it's a rolling recession. But this deficit is worse than the worst deficit that Reagan faced at 5.5% of GDP. How did he get out of that? And Clinton following beyond him? More through growth, not through tax increases. And you can add on top of that government spending restraint. So, this is going to be extremely healthy and very important, I think, for the stock market. The stock market has gone through a period here of great concentration towards a few stocks. And now we think, and we've seen it in the last few days, there's going to be a broadening out. And we're very excited about that.
We'll talk about that in just a minute. If you're just now joining us, we're joined by Kathy Wood. She's the founder, CEO, and CIO of ARK Invest. She joins us from St. Petersburg, Florida. Kathy, I want to talk one more question on regulation, and then we'll get to a little more on Tesla and Elon and some of the big themes that you're seeing. I'm wondering about from you what you think specifically in terms of financial assets is being held back by regulators. Like, what financial assets do you think should be opened up to the trading masses that haven't been?
Well, it's interesting. We launched a venture fund and we put it we put it in an interval fund structure, which is regulated by the SEC. And we've had access to OpenAI, Anthropic, Databricks, SpaceX, Epic, Discord, lots of companies that young people who don't meet the income or net worth thresholds that venture funds require, they can get into our venture fund because it's in the interval fund structure. I think we're going to see a much more of a loosening up. You know why we can offer our fund to retail investors for as little as $500? It's because we're not taking a carry. We're not charging carried interest, 20% of profits. We do charge a higher fee than you'd get with public companies. And I think we're going to see the democratization increasingly of private companies as well. I think this administration will advocate for that and will lower regulations, whether it's Sarbanes-Oxley, but regulations that have, tied companies in knots. It's very expensive to be a public company now. And so for any company, as the digital world and the physical world converge, and we think that's a big theme going ahead, we're going to need the kind of capital raising that the public markets can offer over a long period of time. So I think more and more of that's going to happen.
So speaking of the digital and physical worlds converging, we got to talk crypto because Bitcoin at a new record, close to $77,000 per Bitcoin. Update your prediction for us of where you think Bitcoin will go and when, now that Trump will serve another term.
Yes, he's going to be very Bitcoin friendly for sure, including building a strategic reserve of Bitcoin. Senator Lummis has been at the forefront of advocating for that. So very exciting there. Our price target hasn't changed, except perhaps we're leaning more towards our bull case. Our base case is $1 million by 2030. And if you go into big ideas, ARC's big ideas from 2023, in the Bitcoin section, you'll see how we get to that $1 million, the building blocks of it. It's a substitute for gold, so it's digital gold. It is going to be used as a new asset class. It is a new asset class for institutional investors. A very big idea, starting with the spot Bitcoin ETFs launched earlier this year. And of course, we're very gratified that ARKB was one of them. And it's going to be used as an insurance policy, both in emerging markets and in developed markets, against confiscation of wealth, whether that means outright confiscation of wealth by corruption and so forth, perhaps in emerging markets, or by inflation. Inflation's a highly regressive tax. Now, we don't think inflation is going to be a problem with this administration. In fact, we think that the floodgates of innovation are going to open up and that we're moving into a world tending towards deflation, but good deflation. Technologically enabled innovation is deflationary. So I think many people are going to be really surprised at how low inflation goes in the years ahead.
Kathy, I want to talk performance and get an understanding for where you see the future, because you've seen outflows every month in the ARK Innovation ETF this year, except for this month. It's a year where you're underperforming the S&P 500 by a wide margin. The ARK Innovation ETF, it's about flat. The S&P 500 up more than 25%. What's your message to investors who've lost money with you? And do you worry that performance will lead to an extended period where you won't attract money?
Well, I think, as I've just described, innovation had quite a few obstacles during the last few years. So that speaks for itself. If you look at our performance, let's break it down. You look at our ARKW, which is our next generation internet fund, very focused on AI and digital assets. It's up more than the market this year, more than, I think it's 27, 28%. If you look at ARKG, which is our genomic revolution portfolio, it is down 22%. And a big problem for that portfolio has been the lack of M&A, the absence of M&A. This group, if any, needs those liquidity events because big companies, big pharma companies need the innovation that is coming out of the smaller companies. So we think that's going to change. We also, if you listen to, now I don't know, I don't think he'll be FDA commissioner, but Robert Kennedy, he wants to clean up corruption in healthcare. There are huge lobbying organizations for pharma. They are not out there advocating for the innovators. I think the most important thing he said is this: we want to go back to the rich tradition of the gold standard of evidence-based science in terms of healthcare. And the tools are here for preventative, predictive, personalized, and participatory behavior, healthcare. So I think healthcare, that the convergence of healthcare, sequencing technologies, DNA, RNA, proteins, sequencing technologies, artificial intelligence, and CRISPR gene editing.
So I want to jump in here, because, and I'm glad you brought in. I'm glad you brought up RFK, because I had a question about that to you, Kathy, and I'm afraid it's probably our last one, just because we're running out of time. He's been a vaccine skeptic. You mentioned RNA technology, mRNA technology, what the COVID vaccines, the newish COVID vaccines, were based on. Are you concerned that how he views public health is going to affect innovation happening in the space?
No, I'm not. If you read what he said very recently, he sounds pretty libertarian about vaccinations. There are some people who really feel it's important and others who don't, and live and let live. But one thing I would like to say, please, is this past administration has been a menace to what we're calling the multi-omics revolution, which is going to be the most profound application of artificial intelligence and new technologies in history. Going to cure disease. And yet, as I look at the traditional analyst response to these drugs like CRISPR Therapeutics and Intellia that are starting to cure disease, and how they think that's bad business because they don't have an annuity keeping someone's symptoms under control. That's an annuity. They prefer that to a cure. In our latest Monday newsletter, it's called Disrupt, ARC Disrupt. You can find it on Twitter. You'll see that we believe that curing disease is going to make the patents of the companies with those cures 2 to 20 times more valuable than those other kinds. So I think there's a complete misunderstanding of the dawn of the new health age. And I am so excited that the Trump administration is going to bring this new world to life for us.
Kathy Wood, we always want more time with you. Thank you so much for spending a big part of your afternoon with us. We do appreciate it. That's Kathy Wood, the founder, CEO, and CIO over at ARK Invest, joining us from St. Petersburg, Florida. A lot's happening in the after hours, a slew of earnings. Fortunately, we got Charlie Pellet all over them to give us an update on business news and what's going on in the after hours.
All right, thank you very much indeed. Lots going on with the Dow lower today. Turned out to be a winning day. Another record for the S&P 500 index. NASDAQ as well. Let's recap, reset on the Federal Reserve. A Fed Thursday today because of the election. S&P up 44, a gain of 0.7%, ending the day at 59.73. NASDAQ up 1.5%. Another record there, 19,269. But not all stocks advanced today. We had the Russell 2000 index of small cap shares slumping after yesterday's surge, down by about 0.4%. Bottom line, Dow flat on the day, down by just about 0.5 point. Your 10-year, 4.32%, with a 2-year, 4.19%. Gold up 1.8% at $27.07 the ounce, while West Texas Intermediate crude $72.06, up by about 0.5%. Fed Chair Jay Powell, you heard him here on Bloomberg Radio, announcing a 25 basis point cut, saying the economy is strong, while refraining from signaling whether the Federal Reserve will skip cutting rates.
At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time.
And the other news, Kathy Wood, founder and CEO of ARK Investment Management, wrapping up a wide-ranging interview right here on Bloomberg Radio with words of praise for Elon Musk.
He is the inventor of our age, and he comes into a problem, assesses it with first principles thinking, doesn't care how things have been done, and comes back with, ingenious solutions to big problems.
And today we had Tesla up by 2.9%. The ARK Innovation ETF up today by just about 1%. Again, recapping stocks higher, S&P at a record up by 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, Charlie, do appreciate that. Hey, if you never want to miss a Bloomberg Business Week story, become a subscriber today. You'll unlock deep reporting and analysis from reporters around the world, including unlimited access to Business Week. Check out our offers right now at Bloomberg.com/subscribe now. Well, earlier today, President Joe Biden expressed hope that Americans can, quote, lower the temperature and reaffirm their faith in the election system after a contentious campaign that saw Republican President-elect Donald Trump secure a sweeping victory. The former president did say that campaigns are a contest of competing visions, or the current president, I should say. A country chooses one or the other. He said, we accept the choice the country made. And he said many times, you can't love your country only when you win. Well, it will take some time for the history books to write the story of this presidential election. But Bloomberg Business Week editor Brad Stone offers an assessment today of what propelled Donald Trump to a decisive victory. Brad is a Bloomberg Business Week editor. He's also the author of 4 books, including the New York Times bestseller, Amazon Unbound, Jeff Bezos, and the Invention of a Global Empire. He joins us from our San Francisco bureau. Brad, you write that Trump's decisive 2024 win against Kamala Harris looks less like the polished narrative gemstone it will inevitably become, and more like an unwieldy clump of muddy economic explanations and gross political blind spots. What are the muddy economic explanations? I want to start there.
Yeah, thanks, Tim. And first of all, great interview with Kathy Wood.
Thank you.
Very interesting stuff. Well, look, we always look back on our elections and sort of contemplate a pithy summation of what happened. So Trump in 2016 kind of bringing Americans to reject Obama's globalist optimism. You can go back, Obama, his message of hope after the Great Recession. And so I was really kind of thinking about, well, what are we going to take from this? And the most obvious explanation, the big one that stands out, is that people were just dissatisfied with the current state of things economically. I mean, you had a president deep underwater in Biden, his popularity, his approval rating at 41%. 26% of Americans dissatisfied with the direction of the company. That's the easiest and most obvious explanation. But when I talk about the kind of muddy factors, I mean, there's just so much we don't know. The fact that Vice President Harris lost ground with Latino voters, non-college educated female voters, young voters. I mean, there's clearly something else going on here. And I think it will take a while for us to really look at the data and understand what went on.
One thing that's really striking to me, again, the data is still continuing to sort of come out here, Brad, and there's been a lot of hand-wringing by a lot of different groups here at this point. But turnout just wasn't there, even on the Republican side, in terms of gross numbers compared to 2020. Do you have any idea what happened there?
I mean, it's remarkable. I mean, maybe there's a little bit of political exhaustion. I mean, the vice president, talked a little bit about that on the campaign trail. You know, in 2020, the election we're comparing it to, we were in the very midst of the pandemic. You know, maybe there weren't all that many alternatives at the time to getting engaged in the electoral process and voting. You know, there might have just been something about the options and the candidates that voters had to turn them off. So no, I think, you know, when you look particularly on the Democratic side, the depressed voter turnout was a major factor behind the across the board defeats.
Brad, you know what's really striking to me, and we actually heard this from Jay Powell over and over again this afternoon. He talked about how good of an economy it is right now. It's firing on all cylinders. Inflation's coming back to 2%. The unemployment rate is pretty in balance with where he wants it to be. That's not the message that I got in terms of this election. That's not the message that voters sent, especially in those swing states. What's the misery index? And explain how you looked at that.
Yeah, Bloomberg had, I thought, a very prescient article about a week ago that talked about how uneven that economic recovery was, and that despite the overall positive kind of macro numbers on jobs, on inflation, on gas prices, states like Wisconsin or Michigan, for President Trump, where the misery index, as you of inflation data, unemployment data is still very high. And so there are things like population declines in some counties, still a stumbling high unemployment numbers that were clearly fueling the dissatisfaction that may have turned the election.
It's so interesting because it seems like the chattering class kind of thought that presidential candidate who has been accused of so many different things, who has been determined by a court be a felon, 34 different counts, and has had so many struggles, at least with the law over the last few years, oversaw not really what he would say, but no question that he was there on January 6th, and all the comments that he's made about that have been well documented. But that just didn't matter at all in the end to voters.
Well, certainly not to a majority of the voters that turned out in this election. You know, maybe it did propel some to stay home. You know, it may also be that people have short-term memories. I mean, my colleague Mark Millian writes today in the Business Week newsletter about nostalgia. Nostalgia can be a powerful political force. You know, make America great again, Reagan's shining city on a hill, evoking these memories. So, you know, nostalgia as a political force, I kind of like the idea, but it also maybe suggests that specific memories aren't as powerful as these vague memories of a greater time, and that in talking about making America great again and all the implicit things in that statement, you know, that Trump is distracting people from the specifics of maybe how they felt about his leadership during the pandemic, how they felt about some of his, you know, crimes, alleged and otherwise, and brought their attention more on, you know, restoring this sense, maybe illusory, that he can help, you know, bring America back to some previous greatness.
So you know, I'm wondering about sort of the lesson, and it's not our job to sort of get. There's a lot of hand wringing going on and well documented, but the Monday morning or the Wednesday morning quarterbacking, the shoulda, woulda, coulda, it sort of seems like in hindsight actually went back to the current president's decision to continue running until that became untenable.
Well, look, I mean, I'm not a political analyst by any means, but you know, I would say this. I mean, first of all, the margin of the victory, you know, for Trump was so big that, you know, perhaps any one factor might not have even had made a difference. And two, you know, the Democratic Party, you know, the fact that there is no longer a chance or a hope of changing minds in Ohio, you know, my home state, or Florida doesn't speak to, you know, middle class or lower, or Oklahoma, you know, where, you know, arguably voters there might appreciate some factors of the Democratic agenda, raising the minimum wage, restoring protections for healthcare and insurance. You know, that the Democrats rely on, you know, 3 Midwestern swing states, the so-called blue wall, or hope to turn Arizona or Nevada It just feels like there needs to be an overhaul, a rebalancing of expectations in the Democratic Party if they really hope to compete going forward.
Yeah, it's fun. You mentioned blue wall, but I've heard people say they might need to change the name of that, given what's happened in the last 3 elections, whereas Democrats only won the blue wall states in one of those last 3, and that was in 2020. Hey, I wanted to talk about with you some of the other stories that you and the team over at Bloomberg Business Week have been highlighting in recent days. There's been a lot of hand-wringing about polling and the idea that every poll that we got, save for a couple polls that people thought were outliers at the time, really showed this race neck and neck, a coin flip. It's pretty remarkable to see. You're the team, Chadwick Matlin. The red, even though there was a red wave, we shouldn't be.
I may not be so charitable as Al. One, there is an argument, and pollsters make it, that, hey, the results were within the margin of error, so they weren't technically wrong. And Alex right, that pollsters are often more accurate than they are precise, which to me feels a little bit like, when your football team loses and they still like all these states, all the swing states, sure, they might have been within the margin of error. They're still very close, but they all underestimated Trump's support. They were all sort of directionally wrong in the same way. And then you look at states like Florida or Texas, and they really extremely underestimated Trump's support, well outside the margin of error. And I think that, pollsters still haven't quite figured out Donald Trump's support. This time around, they weighted their results. They tried to account for communities, like, is the respondent in a rural area, or how did they vote previously? And I just don't think they have quite figured it out or gotten it right. And I think, if you made the mistake once again of putting your faith in the polls, you were probably very disappointed last Tuesday night.
Yeah, that's a good point. In the outlier polls that I was talking about, I mean, there have been these, sort of hopium polls for Democrats out there, like the one we got Saturday night from Ann Seltzer that showed that Vice President Harris was actually leading in Iowa by a margin of 4.
What, she lose 14 points?
Yeah, it wasn't even close. So it's pretty remarkable to see that. Do you think, Brad, that we have to, as Americans, have to adjust the way that we view polling, or do we have to figure out a better way to poll? Because it just seems like, and Billy House was talking about this earlier on Bloomberg Radio, he would speak to people wearing Trump gear in some states, and they wouldn't tell him who they were voting for. They were even skeptical of someone like him, despite the fact that they were signaling it to the world.
Yeah, I mean, my opinion is it's a broken science. It relies on a voluntary response from people that are now connected in all sorts of different ways. We're all besieged by text messages and spam and other kinds of unsolicited email. And so most people's instinct is to kind of reject an unsolicited query. And, and then you layer on top of that we live in such a polarized environment that some people don't want to express their opinion because they might be, they might feel judged by their community. And so I think, the polling community needs to kind of come together and figure out if there is a path forward. And then, as voters, as in the media, as the electorate, I think that relying on polling right now is very dangerous.
Help us figure out the path forward a little bit, the best you can. Not asking you to make predictions, but you are one of the few people who has sat down with President-elect Trump in recent months. You did that down at Mar-a-Lago for a Bloomberg Business Week cover story that really covered pretty much every gamut of the economic agenda of the president-elect. Give us an idea of how you view, if any, his agenda has shifted since then. It was before the convention, it was before his selection of J.D. Vance, and it was versus what you've heard from him now, and how he puts that into action in the coming months during the transition, and what that looks like January 20th.
Tim, I just have no idea. Look, he might have all the branches of government. He's feeling extraordinarily empowered. He's feeling totally vindicated. There will be no checks on the appointees to his cabinet, to judicial postings. At the same time, like, my impression of him when we did go down there in July and just watching him over these past 10 years is that he does see himself as a man of the people. He wants to be liked. It's extraordinarily important to him to be liked and respected and admired. And I don't think that impulse goes away now that arguably he's not going to ever face election again. So when it comes to some of the things that he's proposed, mass deportations or tariffs that could, according to economists, raise the rate of inflation. He's not going to have any practical moderating influences, but, he doesn't want to, I don't think it's in his nature to want to do broadly unpopular things. So I do wonder if that will end up being a check on some of his instincts. Although, the one thing that we heard from him on Tuesday night was he said, promises offered, promises will be fulfilled. So I do expect him, to come into office looking to immediately put points to the board and to fulfill some of the promises that he made on the campaign trail.
Look, I'm not going to ask you to give up what you're talking to your reporters about in your editorial meetings, but you have a job that requires you to think pretty clearly about what things will look like in the next few months, because you're responsible for assigning stories and understanding what people are going to be talking about in the future. How are you thinking about covering the president-elect?
We are going to be looking very precisely at the challenges and battles ahead for the new administration. And we have reached out into the Bloomberg newsroom around the world to look at, what is ahead in Europe and China, in immigration, cryptocurrencies, on Wall Street and in tech. We were thinking of it in terms of the battles ahead, and it'll be interesting now because I'm not so sure there will be battles. Trump isn't going to have a lot of political opposition if he does control. We saw today Gavin Newsom calling a special. A lot of the states girding to try to put checks do either legislatively or in the courts. And so that's our approach, to cover it carefully and to try to look forward rather than back and look like and what it will mean for business.
Well, we look at Bloomberg Business Week. Brad, really appreciate you taking the time to join us this afternoon. Brad Stone is Bloomberg Business Week editor. He's also the author of 4 books, including the New York Times bestseller, Amazon Unbound, Jeff Bezos, An Invention of a Global Empire. If you do want to subscribe to Bloomberg Business Week and unlock deep reporting and analysis from our reporters around the world, including unlimited access to the magazine, check out our offers right now at bloomberg.com/subscribe now. Coming up next, we're continuing our coverage of this historic election outcome. We're going to talk a little bit about the president-elect's expanding financial empire. That's next on Business Week.
listening to Bloomberg Business Messer and Kim Stenbeck on Bloomberg Radio and Television.
It is Bloomberg Business Week, and what would you like to hear about on Bloomberg Radio? Help make a show like ours even better by taking our Bloomberg audience survey. To do that, you just got to visit youtube.com/Bloomberg Podcast. There you'll find the link in our profile or community section, and you can survey there. It's hosted by our partners over at Material. Fill it out now at bloomberg.com/Bloomberg Podcasts. Well, Trump's victory will bolster an empire that spans media, real estate, and crypto, and which to a large extent relies on his image, his brand, and most of all, his political power. Coupled with an ability now to impede the multiple legal entanglements that threaten his business and his freedom, the outlook for his many ventures has never been brighter. So writes Tom Maloney, who's Bloomberg News editor. It's today's big take. You can read the story on the Bloomberg in the Bloomberg Interactive Brokers studio. In terms of how his wealth has changed just since he's not just this week, but really since I think Truth Social went public. That was kind of a big part of it, I think, seems like.
Yeah, absolutely. Look, that's his most valuable asset, and it's been basically his most valuable asset since it went public in a SPAC merger. It's worth more than $3 billion pre-election. On the night of the election, once it became clear that he was going to become president, the price of Truth Social spiked, or Trump Media and Technology spiked 60%, and that added $2 billion to his net worth. So look, it's his biggest asset, it's his most liquid asset, and I think it's the kind of, I guess, the clearest indication of what the value of the presidency means to Trump's fortune.
It's interesting. It's because we're calling it an asset because it is an asset, but it's still, as you note at the top of your piece, it lost $363 million in the first 9 months of 2024 on just $2.6 million of sales. That's, look, we're not here to be financial analysts, but I think it would be fair to say that this valuation is detached from reality.
Absolutely.
Or fundamentals.
Yeah, absolutely. And look, that came in a period when there was an election going on, and you would think if Truth Social can't make money during a quarter when there's an election featuring Donald Trump, when is it going to make money, right? So yes, this thing has been a sort of a meme stock that's traded away from fundamentals based on a kind of really Trump's political fortunes. It is worth noting that since then it's gone down. Today it's down substantially. It's down lower than where it was pre-election. So it's still kind of up in the air what is going to happen to the value of this company. But I think we can look at other assets that are in Trump's fortune and talk about the way that they could benefit from the Trump presidency.
So let's do that. And I want to start with real estate, because we all remember what happened to the DC hotel during the first Trump administration. It was widely reported on what the rates there were charged. What about a place like Mar-a-Lago now?
Mar-a-Lago is really an interesting one. And I was thinking about it the other day. I think before he ran for president, not many people knew what Mar-a-Lago was, where it was. Now it's got to be one of the best known pieces of real estate on the planet, right? It's been in the news so much. It's really a kind of an icon now. And before he ran for president, memberships at Mar-a-Lago were going for $100,000. Now they're $1 million. So that just kind of speaks to really translating Trump's political power into money at Mar-a-Lago.
What about when it comes to the crypto ventures? Because and I use the plural because there are a few of them.
I mean, look, Trump's always been known for trying to use his brand to launch various types of products. And I think the most notable way he's done that recently is through crypto. First with non-fungible tokens, and these were kind of digital trading cards that featured his likeness in various poses, wearing various costumes, and he was selling them for like $99 a pop. According to his most recent ethics disclosure. There's World Liberty Financial, which is a sort of a crypto lending platform.
It's a hard one to describe because I don't think anybody actually knows what it does.
It doesn't exist yet, but they've sold millions of dollars worth of tokens to help build it, and it's going to be worth money to Trump. And certainly, him becoming president makes it more feasible as a business in the future than it would have been if he'd lost.
We talked about some of the real estate Mar-a-Lago, but I want to go outside of the United States and talk about some of the foreign investments that the president-elect has, and the power that comes along with those. What did you find?
Yeah, look, look, after his first term, he signed a number of licensing deals where the Trump name was used in developments around the world. So places like Oman, Saudi Arabia, Vietnam, India. So they've brought in millions of dollars for the Trump organization. Him winning those kind of deals more feasible in the future is to see what he says about doing foreign deals this time around. Last time around, he said he wasn't going to make any foreign financial deals during his first term. It's not kind of clear what's going to happen this time around.
And very briefly, just 30 seconds left. 40 Wall Street here in New York. I wanted to save this one for last. It's a kind of an iconic building down on Wall Street.
Yeah, it's a beautiful building, 1920s Art Deco office building, but it's got a lot of issues. Obviously, office real estate is not doing all that well in North America. Occupancy is way down. This place is not making enough money even to cover its interest payments. It's also got this ground lease, which is a big problem. Oh, yeah. It's going to get more expensive, so that's got to be renegotiated at some point. But the point that we make in the piece is you'd rather be president and you're in a bully pulpit there.
Tom Maloney, Bloomberg News editor. Check out his story. It's the Bloomberg Big Take. That does it for Bloomberg Business Week.
From the world of politics to the world of business, this is Balance of Power. From New York.
Bloomberg's global headquarters in New York to our TV and radio audiences worldwide. Welcome to Balance of Power. Alongside Kaylee Lyons, I'm Joe Matthew.
The Fed makes good on a 25 basis point cut as Chair Jay Powell pledges to not resign his post if asked by President-elect Trump.
If he asked you to leave, would you go?
No.
We're joined by Republican Senator Bill Hagerty, member of the Senate Banking Committee.
Republicans flip another Senate seat with David McCormick now projected to beat Democrat Bob Casey of Pennsylvania. We'll have the latest on the campaign with our signature political panel as President Biden today congratulates Donald Trump for his win.
And we'll focus on foreign policy under the next Trump administration with James Jeffrey, former ambassador to Iraq and Turkey.
Welcome to the Thursday edition of Balance of Power. I'm Joe Matthew alongside Kaylee Lyons. The late edition, we're spending the week here at World Headquarters in New York until the votes are counted. And Kaylee, we did get another important one today, the Senate race. But of course, today was also about
enough into this week already. And Chairman Powell, of course, had to oriented questions at this press conference as a result of us knowing that it is Donald Trump who will be the 47th president of the United States.
Donald Trump suggesting that he's going to keep Powell right where he is as chair of the Fed. We did hear from Chair Powell during the news conference earlier on Bloomberg.
In the near term, the election will have no effect on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume.
Joining us now for a closer look at the press conference and the rate decision is Bloomberg's Michael McKee, who was, of course, in the room as Jerome Powell fielded the questions. He was clearly ready for that one, Mike. He was literally reading verbatim from a statement, but was pretty monetary policy.
Well, I think Trump, don't mess with us. We're drawing a line in this. Probably he was talking more to Trump's advisors, who, if the president elect got into the mood to want to do something about Jay Powell, they'd tell him it's going to be a big fight. You're going to have a problem. You're going to end up in court. It's not going to look good. So maybe just let him serve out his term, which of course he told John Micklethwait a couple of weeks ago he'd be willing to do. The second thing is the message to the markets, which is the normal main purpose of the press conference. And I think what Jay Powell was trying to do today is say, we really don't know. We don't know, absent Trump, what's going to happen even in December, because we've had mixed numbers on the economy, and the economy's been a little stronger. Inflation's been a little higher than we anticipated. So we haven't got a real clear path on what's going to happen in December. And then you add in what's going to happen under the Trump administration. And as he said, we don't know, because Donald Trump has a lot of slogans, but not a lot of policy detail. And until they get that detail, they're not going to be able to decide what the best policy for the Federal Reserve to follow is.
Well, don't mess with us is a pretty good message to send, I guess, Michael. But don't we all know that Donald Trump probably will mess with the Fed chair? Jay Powell's lived that life already for 4 years, and there's talk from Scott Bessent that they're floating this idea of a shadow Fed chair or something like this, and see if that's even possible. I'm just wondering if you could help describe what Jay Powell's life is about to be like.
Well, if it's anything like the first term, he's going to get a lot of tweets. He's going to get some comments here and there suggesting that the course that they're on is not correct. And then he may also get called a few names, as he did the first time around. But Powell's just going to kind of ignore that. Remember, he's only going to have basically 2 years, year and a half left in his term until he is done here as Fed chair. And even if he wanted to be renominated, it's certainly not going to happen. So he can just make it through that period. And plus, they're cutting rates. That's what Donald Trump wants. So Trump may not need to say anything for a while yet.
Yeah, this might work out for a minute. Bloomberg's Michael McKee. Great to see you in Washington. Thanks for joining us today. Former Bridgewater executive Dave McCormick has won the Senate race in Pennsylvania. We can tell you now the Associated Press projecting the Republican to beat Senator Bob Casey. This happening just in the last hour. And with us now from Washington is Bloomberg's Wendy Benjaminson. Wendy, put this one in perspective for us. It's clearly going to be a greater majority for Republicans in the Senate, but the name Casey means something in the state of Pennsylvania. What does this tell you about the performance of Republicans this week?
Well, it's just another strong showing for Republicans this week. You're right. The Casey name has been in Pennsylvania politics for a long time, and for the first time in decades, it is no longer. But this is, in a broader sense, this gives Republicans a 53 right now, a 53 seat majority in the Senate, which means that certainly Trump will have very little trouble getting his nominees confirmed through the Senate. And it will be, even if Lisa Murkowski and Susan Collins, two senators who tend to oppose Trump's policies, even if they vote no, they've still got 51 there.
Well, before anyone can vote, Wendy, we need to know who the nominees are. Do we have a sense of that, or how quickly we will know?
Well, we know they are getting started. They are started already. Trump is superstitious, apparently, according to his aides, and did not want to talk or even hear a name before Tuesday night, or probably Wednesday morning. So now that he knows that he is probably doing that, his transition co-chairs, Howard Lutnick of Cantor Fitzgerald and Linda McMahon, as former Small Business Administration chief, they are the chairs of the transition team, and they have gotten to work on some names. And we are thinking, we're thinking that the White House chief of staff is going to be one of the first jobs named, because that person then can start sort of organizing everything. Kevin McCarthy is on the list, although he, former House Speaker who was ousted, although he has said he doesn't want the job. Susie Wiles, his campaign chair manager, is on that list. And Russ Vought, who was the OMB chair in Trump's term, there he is also on that list. And then for Treasury Secretary, you have a guest coming on, Bill Hagerty, who is his name is being bandied about for Treasury or State. So I'd love to hear what he has to say about that. And there's a lot of other names out there, including for Secretary of State, Rick Grenell, Marco Rubio. And right now, remember, no matter what Howard Lutnick or Linda McMahon think, there is one person in the Trump administration who makes decisions.
And I'm guessing that would be Donald Trump. Bloomberg's Wendy Benjaminson. Thank you so much, Wendy. Teasing ahead to our next guest, Republican Senator Bill Hagerty of Tennessee will join us next to weigh in on Fed, foreign policy, the majority in the Senate, and yes, the cabinet on Balance of Power on Bloomberg TV and radio.
If we control the House, the Senate, and the we need to deliver for the American people. We need prices. We need to restore our energy independence. We need to restore our place in the world, and we have to tackle the long-term problem of our debt.
Republican Congressman Carlos Jimenez of Florida on the early edition of Balance of Power. He reached for the word debt, something that we've been talking about a lot lately here. Now for a view from the other chamber, we're joined by Republican Senator Bill Hagerty of Tennessee. I say the other chamber affectionately, of course. We'll be getting you back in Washington soon enough, Senator. It's great to see you and welcome back to Bloomberg TV. Get our arms around this issue right now. For investors who are worried, and you've seen the reaction, I know that you're financially and market-minded, seen the reaction in the bond market this week to Donald Trump's second election. What should be the message to investors when it comes to debt and deficits, knowing that he is looking to extend tax cuts and has added quite a number of exceptions to the list?
Well, I think what you need to keep in mind is that President Trump's overarching goal is to see a lot more economic growth here in this economy. You can count on another effort to undertake a massive deregulation thrust. By some measures, the cost of deregulation under the Biden administration has been more than $1 trillion. It's a compliance burden that is enormous. That's something that can be lifted on our businesses. It will have an impact in a positive way on the economy, and that can be undertaken without any cost. If you think about where President Trump has gone in the past with respect to tax cuts, he's done it in a manner that's made us more competitive as a nation. Our corporate tax rate was the highest in the world before the Tax Cuts and Jobs Act was put in place in 2017. He brought that down to something more competitive, more middle of the pack. And what we saw was a lot of companies, the inversion stopped, and a lot of companies repatriating funds, and our revenues went up. Corporate tax revenues went up as a result of that, and have. So I wouldn't follow the logic that coming in and taking, acts on the tax package that I think is going to be, front and center for us as we come into the new year. I wouldn't think you would want to lose touch with the fact that it's going to be overarchingly aimed at economic growth.
Well, and monetary policy plays a role in that as well. It's not just fiscal policy, Senator. And on that subject, we, of course, had a Fed decision today and a press conference from Chairman Powell, who had to field some questions on his future under a Trump administration. Just listen to a few of these exchanges and we'll have you respond.
Some of the president-elect's advisors have suggested that you should resign. You go?
No.
Do you think that legally you're not required?
I believe that the president has the power to fire or demote you, and it has the legality of a president demoting at will any of the other governors with leadership positions.
Not permitted under the law.
Not what?
Not permitted under the law.
Senator, of course, one of those governors with a leadership position includes Michael Barr, the vice chair of supervision, who you've taken some issue with in terms of the Basel III endgame that was proposed. Should that legal question be challenged?
I think everything should be on the table here. If you think about what Michael Barr has done as the vice chair, he's taken a regulatory role here. I don't think that deserves the same sort of protection that our monetary policy has. And his regulatory role has been actually contradicting congressional legislation, S2155, for example. This Basel III endgame, this has been, in my view, a rogue operation that has put a great deal of uncertainty to the marketplace. I'm glad that I've seen the banking community stand up against this, but Michael Barr is somebody that has come into a position, and I think in a very political way, in a way that's had a dampening effect on our economic growth, has not done our nation any good. And I've been very concerned about it. I've been vocal and articulate about that, and I remain so. So I would look at any legal option that we might have to make a change there. The review process that he's undertaken has been grossly unacceptable. And the fact is that he's taken a regulatory posture that should not get the same type of protections again as we provide monetary policy here in the United States.
Well, a lot of people said upon the election of Donald Trump this week, Basel III is dead. Are they wrong?
I haven't had an opportunity to discuss that in particular with President Trump, but I certainly think that Basel III has been, all the proposals that I've seen have been largely bad for the American economy because they make us less competitive as a nation. And I don't understand why America should be, that people here, particularly on the left, think that America should be guiding its regulatory construct toward Europe. Let's look and see what happened to the European economy since they formed the common union. They've barely grown. America has grown at more than 10x the rate since the common economy was formed, the EU was formed. We've grown at an amazing rate because we've not been burdened by the regulatory construct that they seem to want to impose in their economy. Why would we want to move in their direction?
Well, so as we consider other countries here, we, of course, and this got to what we were discussing earlier about economic policy. We know that tariffs could play a big role in the future policy of a Trump administration. Do you see room for the potential to cut deals with countries who will open up more to U.S. products to then have lower tariffs placed on goods exported from that country in return? How nuanced do we need to get with this conversation?
Well, the overarching problem is a lack of reciprocity. And there's an historic reason for this. When you go back to World War II, we were trying to move economies like Japan's economy, like European economies, toward America. We didn't want them turning toward communism. We cut very favorable trade deals with them as a result. But what we have today, we should have time limited that. We should have put some sort of GDP per capita limit on it. We didn't. We have fully formed economies, developed economies, that are trading in ways that are very advantageous to them, not so to us. America's got the most open economy in the world. Access to this economy deserves fair treatment, reciprocity. We haven't been getting that, and I think this is an opportunity to come back and address it.
Senator, I don't know what it's like to wake up and read your name in the tip sheets and newspapers in the morning, but you're having a day like that because as the transition takes place, some key Republicans are being named as potential members of the new administration. And of course, you were a member of the last administration. Is that something that you've talked to the former president about?
There's a lot of speculation that is bound to happen after any election victory like President Trump had. And what a landslide, what a mandate that he received. I've got a huge job to do right now to make certain that the new majority in the United States Senate is lined up and prepared to support President Trump's agenda. And I'm going to do everything I can to make certain we move our nation back in the right direction. President Trump has articulated that. I think that's why the American populace has put him back into office with a landslide. And I'm not going to speculate on what the future might be. I'll leave that to the speculators, except to say that I'm going to do everything I can to move us forward, bring our economy back, our national security back, and get America moving again.
If it's a matter of economy and national security, Senator, there's obviously two jobs that you're being floated for. I understand you don't want to comment on those directly, but which, considering you also have symmetrical roles on the Senate Banking Committee, would be the biggest loss for the Senate if you were to leave one of those particular committees?
We have a tremendous group of senators in the United States Senate. I think that you couldn't look at any one person and say that that would be a significant loss, because any senator would be replaced, hopefully by the governor of their state, a very competent person. I think that would be a consideration to be undertaken. Again, I'm not going to speculate on that type of activity because I don't know that it ever even involved me. But I think that the process, as it would unfold, the Senate and the incumbent president the incoming president would be very certain that a very competent person would be there to be replaced.
All right, Republican Senator Bill Hagerty of Tennessee, appreciate your time, sir. Thank you so much for joining us.
Thanks very much.
Now, as we continue to explore this conversation around economic policy in particular, yesterday we spoke to Joe Livornia. He was the former chief economist in the first Trump White House, and we asked him about tariffs as well.
I think there's this misperception that day one of Trump, we're going to have tariffs across the board, X%, and this is my guess. And in China, it's going to be at least 60%, maybe higher. To me, it's going to be more nuanced. It's going to be very transactional. In other words, tariffs are going to be used in large part as a tool to essentially have more fair trade.
Joining us now for more is Ben Harris. He is Vice President and Director of Economic Studies at the Brookings Institution and former Chief Economist at the U.S. Treasury. Ben, thanks for being here. I would love to just get your response to some of those ideas being put forward by Donald Trump and those close to him that are now potentially going to become reality.
So just two thoughts. The one is on tariffs. It's pretty well established within the economics profession that tariffs equal higher prices for consumers. We just went through a 2-year bout with inflation from the end of the pandemic until about mid-2022. And we learned, it's obvious Americans don't like inflation. And so, I am worried about an administration that comes in and does what President Trump has said he's going to do, which is just jack up tariff rates across the board, and not in a targeted way, like Joe just said, but in a really crude across the board way, which just means higher prices for Americans. So I'm obviously, as an economist, very concerned about that. Secondly, around debt, you asked the senator a very difficult question around his view on debt, and he sidestepped it because he had to. And Republicans are in a really tough spot right now when it comes to debt, because the leader of the Republican Party, Donald Trump, just put out a platform which will cost American taxpayers in terms of debt somewhere between $7 and $15 trillion in extra borrowing. So I think as a Republican lawmaker, particularly one who is a deficit hawk, they're going to find themselves in a tough spot. Do you want to back President Trump's expansion in debt, or do you want to be a deficit hawk? That's a tough spot to be in.
Yeah, it's interesting. Joe Livornia used the word nuanced, which is not exactly what we've heard from Donald Trump himself, who calls tariff the greatest word in the dictionary. He's talked about across the board tariffs. But with the amount of deficit spending in addition to the debt that you just framed, where would that put interest rates by the end of his term?
Yeah, it's interesting that you brought up interest rates, because we've already seen a run up in the 10-year by about 70 basis points. Going back a few months, right when investors started seeing a higher likelihood of President Trump getting elected. And you've even seen a run up in the couple of days since the election. My sense is that as the Republican agenda starts taking shape, if it does come with a price tag along the orders of the $7 to $15 trillion that I cited, you're going to see interest rates rise to levels that we haven't seen in quite some time. And that's just going to be another hit for the American people.
Well, so as we consider the American people, Ben, obviously there is a lot of dissection of the results and what happened this week happening right now. We've been having a conversation here at Bloomberg. We have been reporting on the economy as we see it, as the data defines it, this entire cycle. What was being felt by the American people, though, was different perhaps than what the data was actually outlining. And I wonder how you think about that economic disconnect between what policy was actually able to achieve and the degree to which it was felt the actual voting population, and how that contributed to the end result here.
The U.S. macroeconomy is that faster than Europe and others. Inflation has come down a lot to levels that we're quite comfortable with. Non-shelter inflation is around 4%. But I think that when you look back at why Democrats lost in this election, there are two hypotheses that emerge. One is that people just don't like higher prices, even if their incomes rise fast enough, even if their wealth explodes fast enough to pay for those higher prices, they really don't like it. And even though inflation has been coming down for the past couple of years and has really now been tamed, the memory of that higher inflation from 2021 and 2022 still remains. The second hypothesis is just that there's a lot of misinformation out there. And so if you ask Americans to characterize the overall macroeconomy, if you say, are we in the middle of a recession right now? We are definitely not, but the majority of Americans will say we are. When you ask them to characterize unemployment, they say it's much higher than it is. When you ask them to characterize inflation, they say it is higher than it actually is. And so I think part of that is the fact that Americans are getting their news and their characterizations of the economy not from sources like Bloomberg and the Wall Street Journal and reputable sources, but possibly from social media where they're getting a distorted view.
I'm curious, as Donald Trump promises to repeal the Inflation Reduction Act, Speaker Mike Johnson seems to be with him on that. Our analysis at Bloomberg Intelligence points to more of a piecemeal approach, maybe cranking back certain portions of it. If we eliminated that bill and the incentives that come with it, what would it mean for the economy?
Yeah, so one of the bright spots about the economy that we don't talk about very much is that we've had this investment boom, and CEOs, whether they're affiliated with the Democratic Party, the Republican Party, or unaffiliated, will tell you behind closed doors that they're very optimistic about the future of the American economy, and they have been for several years. So we have seen this big investment boom. A lot of that is driven by the IRA, not all of it, but a lot of it is driven by the incentives in the IRA, which is paying companies to change the way they're producing energy. And so, if that changes, if that reverses, I think, I have concerns about what that means for energy security. I would disagree with the senator's comments where he basically inferred that more drilling means more security. Janet Yellen had this great saying when I worked for her, which was Putin doesn't control the wind and the sun, which is to say true energy security comes when we don't surrender that to foreign leaders who can control our oil prices. But the big boom in investment that was driven in part by the IRA, if that gets driven back, I really worry about what that means about the future growth of the U.S. economy and also the credibility of a Congress, which would grant tax credits for companies to come in and invest and then have no problem with kind of ripping the carpet out at the last minute.
Well, if you've looked at solar stocks lately, that's exactly what a lot of investors are betting on. Ben Harris, it's good to see you. Thank you for joining us. Vice President and Director in Economic Studies at the Brookings Institution, former Chief Economist for the U.S. Treasury. Thanks for being with us. Kaylee, we're looking at a lot of different areas of potential impact that a Trump 2.0 could have from finances here. We'll look to geopolitics next.
Well, yeah, and Ben was just alluding to that. The idea that oil prices play a factor in here, general geopolitical stability obviously can lead to economic confidence or the lack thereof, rather. These things are very much intersected, which is why we need to look at the foreign policy proposals, not just the economic proposals, as we look ahead to this second Trump administration.
Yeah. There's a lot of crossover here. Coming up, we'll look at the impact of Donald Trump's re-election on foreign policy with James Jeffrey, the former ambassador to Iraq and Turkey. It's coming up next, an important conversation on balance of power on Bloomberg TV and radio.
Russia and Ukraine. We've got China threatening Taiwan. We've got the Middle East exploding. We've got the problem with dealing with Iran and its threats. We have North Korea and the fact that they've developed a nuclear stockpile and don't seem hesitant to try to use it. And we're dealing with terrorism. So there are an awful lot of hotspots in the world that I don't think the new president is going to be able to hide from.
The state of affairs globally, according to Leon Panetta, the former Secretary of Defense, talking with us around this time yesterday on Balance of Power. As we turn now for a closer look at how Donald Trump's win will impact foreign policy and maybe how it will impact Donald Trump. James Jeffrey, former U.S. ambassador to Iraq and Turkey, chair of the Middle East program at the Wilson Center, joins now. Mr. Ambassador, it's great to see you again. We'd like to ask you about all of the situations that Leon Panetta just mentioned, Ukraine, the Middle East, and China. But broadly, as you sit here a couple of days after this election, how do you see a Trump 2.0 when it comes to foreign policy and geopolitics? Will it make the world safer or more dangerous?
Well, first of all, thanks for having me on. Secondly, no one can predict how any president is going to act in the future. That's simply the reality. We can draw on, in the case of Donald Trump, his performance in the first Trump administration, where I served for almost 3 years, and I can give you a few points on that. But let me go back to Panetta's point. He's absolutely correct, but to put it in another way, these various threats are ever more integrated and coalescing to form a basic global threat to the international order based on peace, prosperity, and the promotion of democratic and individual values that we have been leading since the 1940s. That is the most important thing. And we didn't have this same problem, at least to this degree, during the first Trump administration. The first thing that President Trump will have to get his mind around is that this is a real threat. It's a coordinated threat. You can't separate out Russia, the good guy that my personal relationships will help us do better with the bad guy, Xi. In fact, in this confrontation so far, Xi has been the restraining force and Putin the more aggressive force. And the administration, the Trump administration, will have to figure out a way to deal with this, beginning with the fact that it is bad for the stock market, for the safety of Americans, for everything that we are doing in the world and frankly at home, to have a disorderly world with tens of thousands of nuclear weapons. Be afraid if we don't play the role we've been playing for the last 70 plus years.
Well, Ambassador, we've heard a lot about this notion of peace through strength from Donald Trump and those close to him. I guess I just have a question about relative strength, because it's one thing if the U.S. is also projecting strength, but if the way to achieve peace is also giving some more relative strength to others, like, say, Vladimir Putin, if he's allowed to actually take over what is sovereign Ukrainian territory in some kind of negotiated agreement, if others are also becoming stronger, does that not somehow kind of make us weaker?
Well, first of all, I wouldn't predict what Trump is going to do on Ukraine or any place else. He had very unusual outside the box negotiating with Kim Jong-un of North Korea. But in the end, it was to achieve longstanding American goals to denuclearize North Korea. When Kim Jong-un wouldn't play along, the negotiations broke off. So we will have to see. I wouldn't predict anything. Military strength remains the core. It is surrounded by several other things. One is economic strength, and frankly, the United States is in very good shape compared to Russia, compared to China, compared to even our partners in Europe or in East Asia. Thirdly, it is the unity of the country. For the moment, we certainly have that with the election results of the other day. And fourthly, it's the alliance and partnership system that we have. We don't have to do everything if we have people on the ground, be it the Japanese and Koreans in East Asia, be it the Israelis in the Middle East or the Saudis, or our NATO friends in Ukraine, containing Russia in Europe.
Take us to the Middle East, Ambassador. What does this election mean for the constant retaliation between Israel and Iran, the back and forth militarily that we've witnessed
First, very quickly, this isn't Austro-Hungary and France in the 18th century vying for control. This is an aggressive attempt to achieve hegemony in the region by Iran by subverting Arab states. They've more or less done state capture of 5, counting Gaza, Lebanon, Iraq, Syria, and Yemen, using as an excuse the need to destroy Israel and push the United States out. Israel is fighting back. We are supporting Israel. That is the basic reality in the Middle East. I think President Trump will continue the policies of Joe Biden to support Israel, try to integrate it through the Abraham Accords within the Arab world, which is the most important part of the Middle East. And thirdly, probably more vigorously contest Iran's presence in the region and apply maximum pressure through actually implementing the mini economic sanctions that are officially on the books against Iran. So it won't be a difference of major strategy, it'll be a difference of degree.
So you don't think, for example, Ambassador, that Donald Trump would be supportive of Israel more directly striking Iran, like Iranian nuclear facilities, for example, or energy infrastructure, things the Biden administration had been warning against?
The Biden administration made that point to Israel, and Israel listened to it. But the Biden administration the other day did something. Iran, okay, this duel is no restraint on what America tells Israel. There were another Iranian strike, the Israelis wouldn't listen to us. More importantly, we are moving offensive. I want to underline offensive systems such as F-15 fighters into the region along with B-52s. They're not there to shoot down missiles from Iran. They're there to blow up targets in Iran. That is a very strong message, not only that Israel may strike, but we may be out there with them. That's very aggressive. I don't think Donald Trump could add much to that.
We've only got about a minute left, Ambassador. I don't mean to open a whole new topic here, but when it comes to China, can we assume that Taiwan will be safe for the next 4 years?
We can, partially because people are a little bit afraid of Donald Trump. I'm a little bit afraid of him, having worked in his administration. Secondly, Xi is showing some real signs of restraint, particularly vis-a-vis North Korea and its aggressive support of Russia, but even of Russia itself. It doesn't send any weapons. It's clear that it thinks this confrontation has gone too far, and it notices that Team America, be it in Ukraine or in the Middle East, is winning or at least not losing, and it doesn't want to be on the losing side.
All right, James Jeffrey, former U.S. ambassador to Iraq and Turkey and chair of the Middle East program at the Wilson Center. Thank you so much. Coming up, we'll take a look at the transition plans for the president-elect Trump, who might be on his short list for key cabinet roles. Our signature political panel weighs in next on Balance of Power on Bloomberg TV and radio.
tremendous group of senators in the United States Senate. I think that you couldn't look at any one person and say that that would be a significant loss, because any senator would be replaced hopefully by the governor of their state, a very competent person. I think that would be a consideration to be undertaken. Again, I'm not going to speculate on that type of activity because I don't know that it ever even involved me.
Republican Senator Bill Hagerty of Tennessee earlier this hour on speculation over who might serve in a Trump cabinet as his transition gets underway. And we do have breaking news this hour when it comes to those who will be close to Donald Trump as he begins his second administration. Donald Trump announcing that Susie Wiles will be his White House chief of staff. This is coming from a statement from the president-elect. Susie Wiles, of course, Joe, one of the architects behind the successful campaign that just propelled him to another go at the presidency. Again, Susie Wiles about to make some history as she will be the first ever female White House chief of staff.
Yeah, that's pretty remarkable. You might actually, if you don't know the name Susie Wiles, you saw her on stage with Donald Trump on Tuesday night when he delivered, or I guess Wednesday morning to be more specific, his victory speech in West Palm Beach. He brought her to the podium. And in fact, she didn't want to speak. So she turned to her colleague, Chris LaCivita, and had him say a couple of words. But she's going to be in the public eye on a daily basis now, Kaylee. Now that we've got this, it's a pretty remarkable moment for her.
Yeah, this is a big piece of breaking news, and we want to get the reaction from our signature political panel, Rick Davis, Stonecourt Capital partner, and Jeannie Shanzano, political science professor at Iona University and senior democracy fellow at the Center for the Study of the Presidency and Congress. So Susie Wiles, White House chief of staff. Rick, this is the first big pick of this administration for Donald Trump. Remembering he went through quite a few chiefs of staff in his first administration. What do you make of the choice?
Yeah, I think it reflects stability. It's somebody who's been working with him now for quite some time. She's part of the duo of Chris LaCivita herself, who ran the campaign. A lot of really nice comments about how well and run and professional that campaign was, and how they were able to build confidence with Donald Trump not to meddle in the affairs of the campaign. It didn't keep him from going off script on the teleprompter, but at least the campaign, ran like a machine. And so I think she'll be a model of a behind-the-scenes chief of staff. She doesn't like the limelight. In fact, on election night, as Joe said, when he asked her to say a few words, she demurred, walked in the background. She's not looking for Sunday showtime.
Yeah, he said it was the first time she's ever been without words. Of course, they just won a massive election and a bit of a red wave, so maybe we couldn't blame her. But this is a public-facing role in many ways, to the extent that the chief of staff wants it to be. But, as I think Kaylee is referring to, there's some tumult in the Trump White House from time to time. What will this job be like for her?
I think it is a good pick for Donald Trump. It fits his number one criteria, which is loyalty. Yeah. He has been very, very clear about that. We can't forget this is his second time doing this. The first time he came with little Washington, D.C. knowledge and even fewer contacts. And he has said and been very open about the fact he learned a lot from that experience. And, he famously will say things like, worst mistake he ever made, or one of them was somebody like Jeff Sessions, is not going to repeat that again. So Susie Wiles has been, loyal from start to finish. She's not somebody, as Rick was just talking about, who's looking for the limelight. Yeah. She is incredibly good at her job. So I think it is a sound pick for him. But in a White House that can get tumultuous, to Kaylee's point, he went through an awful lot of chief of staffs and other positions. Yeah. People don't seem to last long, at least the first time around. But maybe since these folks are so loyal, they're going to last longer.
Okay.
Well, in part of Trump's statement announcing this, he describes her as someone who just helped him achieve one of the greatest political victories in American history, goes on to call her tough, smart, innovative, and universally admired and respected. But given the prominent role she will have, the ear of the president of the United States and vice versa, it is also a question of who she respects and who she admires, because she's going to have an influence now on assembling the Trump cabinet, right, Rick?
Absolutely. And by the way, it's worth repeating. The first woman cabinet or first woman chief of staff to the president of the United States in our nation's history. There aren't many roles like that have not had a woman in the command position. And this is the first time it's happened inside the White House. So kudos to the administration to make their first real formal announcement, a glass ceiling breaking announcement. But look, she has been managing his relationships with virtually anybody who'd be under consideration for the cabinet. So she's going to have her thumb on the scale, as others will, as he assembles, his most entrusted advisors. And I would think a lot of them are going to be familiar names that you saw on the campaign trail, as advocates for Trump. Because as Jeannie said, over almost anything. And at the end of the day, the arbiter of who's the most loyal.
Interesting name game that we're playing right now. We check one box here, but Jeannie, there are a lot of positions to fill. And I wonder your thoughts on some of the names we're hearing. Bill Hagerty was just with us.
Yep.
The senator is being floated, at least according to wide reports, for Treasury Secretary,
Or
as
state.
well as State. Scott Bessent and John Paulson for Treasury. Marco Rubio is well in the mix for State. Doug Burgum and Vivek Ramaswamy somewhere on the cabinet. Is this like a fever dream for a Democrat to imagine this cast of stars, or will the nation be in good hands?
I get a little jealous when you guys say these names, and then could be state, could be something treasury, and that's not a bad gig. No, I think, the Democrats rather are very, very concerned about these appointments, and we're off talking rightly so about the cabinet. I think one of the most important positions he wants to fill early is AG. That is critically important to him because he has made it his, mission to get rid of several people, to get rid of these suits that are filed against him, get rid of Jack Smith. So the AG is critical. He wants that under the umbrella of the executive branch in a way it never has been in American history. And Democrats are watching all of this because they've read Project 2025. They see where this is headed. And while we focus on the top, we have to pay very close attention to what happens with civil servants in this country. Schedule F was one of the last things he did before he left office, and he has promised to change the way we run civil service in this country, and that would be an astonishing transition if it occurs. It's going to be hard given the rule that Biden put in, but he does have the authority to make these changes.
Well, so as we consider the cast of characters here, obviously Joe just read off a list of names that have become very familiar to Washington, but there's also some people here who are very familiar to Wall Street. Rick, Howard Lutnick is running this transition, at least in part. Elon Musk, now very close to the president-elect, it seems. What role will they play?
Well, we know that in just the comments that the president-elect has made, that Elon Musk is going to have direct access to the White House, probably wouldn't want a day job, but the czar of government efficiency. He's already announced he's going to cut $2 trillion out of the government. And the reality is we already see reports where Elon Musk is looking to organize a group of his SpaceX into the Pentagon. So I think you're going to see that within the federal government. And I would think of these.
They're not actually working for anybody, but they're effective.
Well, there are special government positions all the time, right? There are plenty of those. And yet some of these may be presidential appointments. Some of these may be special government consultants. And some of them could be volunteers. And so, I don't think you think linearly. We tend to look at this administration like we did maybe in 2016. Donald Trump has learned a lot about government, having been served as president for 4 years. And I don't think he wants to do it that way. I think he's going to do it a new way. But I would say Linda McMahon doesn't get enough attention. She is the co-chair of the transition, and she is handling all the policy activity, and different from Howard Lutnick, who's doing the personnel. And I wouldn't be surprised to see her in the cabinet. She ran the Small Business Administration very ably in his first administration, and I would say, Secretary of Commerce, right down her alley if we're talking about people who have the trust of the president and a willingness to serve in government.
The name game continues with our panel. Coming up, we'll take a look at President Biden's legacy as we enter his last few months in office. We did hear from the president today. We'll have more with Rick and Jeannie next on Balance of Power, Bloomberg TV and Radio.
don't need that. They say hard dog. I go for that. Okay, wait, yes, then let me look at that one. If that was okay, I want it. If it's not okay, I will not like
We're leaving behind the strongest economy in the world. I know people are still hurting, but things are changing rapidly. Together, we've changed America for the better. Now we have 74 days to finish the term, our term. Let's make every day count.
President Biden speaking earlier today in the Rose Garden of the White House. Back with us now, our signature panel, Rick Davis and Jeannie Sheehan Zaino, who of course helped us cover the Biden administration from its first day. I wonder both of your thoughts on what we heard today from the president. This is a tough time for him. He's being blamed widely for Kamala Harris losing the election and Democrats at large being condemned by the electorate. Does he deserve it?
No, there's a lot of blame and a lot of finger pointing going on now. Democrats are reeling from what happened the other night. He is the president. He is the leader of the party. He understands that. But, the blame is widely shared. So should he have gotten out earlier? Absolutely. Could he have done things differently? Absolutely. But this is a man who, when we were sitting here 4 years ago, we said, given the way Congress was set up, could not pass even one big piece of legislation. Yeah. And he got through multiple. And he is right today when he says a lot of the work he did is going to pay off later. And so I think we have to remember that. And his remarks today were on point. And, the president-elect didn't do something similar when he lost. Yeah. And it is a lesson for, Donald Trump. And I hope he was listening.
I want to get Rick in here too. We have just 2 minutes left. But Jeannie, he promised to be 4 years ago a transition candidate. And turns out all he was transitioning to was another Trump administration. How will history remember him for that?
History is going to be written by historians years from now. And, we look back now, people look much more fondly at, say, George W. Bush today than they did when he left the office and people said never again, even Democrats. So I think it's going to be, a little rough go for a while, but I think they will look back. He had some challenges and we can't forget
Say that one more time.
All he transitioned to was the second Trump administration, Rick. I mean, those are the facts. So what does it mean for the Biden legacy?
Yeah, look, without Donald Trump, there would have never been a President Biden. Yeah. And without a President Biden, there probably would have never been a Donald Trump. So they actually have this weird symmetry in history that without each other, they might not have ever accomplished what they have done. So the reality is, as Jeannie says, we're a long way from sort of history. I think there's a lot of blame to go around the Democratic Party as to why they are in the position they are in. But look, let's not kid ourselves. The Republican Party is now the majority party in the United States. They won the popular vote and they won an overwhelming advantage in the electoral vote. They swept Congress. I think we'll ultimately, by the end of the week, maybe even be able to say that the House will be consistently staying Republican. Wow. And the Democrats are going to have to look inward, not just blaming, President Biden, but look at and say, how in the world did we become the minority party in America after having, all these presidential leaders and all the money in the world to play with? How did we squander $1 billion in 3 months?
We have to leave it on that note. Rick Davis and Jeannie Sheehan Zaino, thank you so much. As Rick talks about the sweep, we still don't know the House will be in Republican control. The Senate will be, though, with an addition to the majority. Dave McCormick called for the Pennsylvania Senate race.
We'll see if we hear about a recount at some point from the KC camp. Much more to follow. We'll see you back here tomorrow on Balance of Power on Bloomberg TV Radio.
has not been a great time for genius. The people who claim to have it do not seem to qualify for it. The people who diagnose it, others, seem to have a very, very narrow definition in mind. And the people we can all agree are stone cold geniuses always seem to have a dark side. I read in Bloomberg Businessweek about the biggest crypto genius of them all, Sam Bankman-Fried. At his peak, he was worth like $26 billion. And that was before he was accused of running one of the biggest frauds in American history. His defense is that he is not a criminal, essentially, just inept. What does it mean to have genius in work, in the marketplace, in life? And who is even to say? To make anything simple takes actual genius, and we're going to try to live up to that name together tonight. It's the Business Week Show. Hello, I am Max Abelson, and I'm not a genius, just a regular, slightly above average journalist who has spent about the last decade and a half here at Bloomberg News and sometimes our magazine, Bloomberg Businessweek, writing about Wall Street's money and power. And what that means is I write about ambition and ownership and imagination and survival and risk and second acts and, of course, genius. Tonight, and in the weeks to come, we are going to be talking about those things at this table with people whose lives and careers and ideas are big or interesting or just really fun. So, welcome. This is the Business Week Show, and it's starting right now. If you consider yourself a master of Wall Street, a connoisseur of investing, a soothsaying financial genius, a brilliant portfolio manager, our guest has very bad news for you. Burt Malkiel's book, A Random Walk Down Wall Street, 50 years ago, had a clear and vivid message, which was that Wall Street genius is really just an illusion, and that professionals in pinstripe suits at the end of the day are no better than naked animals. Forget them and just boring, basic, low-cost index. He's here to tell us about it. Burt Malkiel, welcome to the show.
Thank you very much. Glad to be here.
Your book is actually, it's pretty funny. It's a little saucy sometimes, your book. I mean, you say no one in finance can really forecast the future, or at least they can't do it successfully, consistently. You know, I think you use the word genius in quotation marks, and you give it to Ponzi schemers. And right now, are there any actual individual geniuses on Wall Street? You know, real human geniuses. Maybe AI is a genius we've been all waiting for. Can you identify any current geniuses on Wall Street right now?
Well, as you know, I put genius in quotes because I'm not sure there are geniuses in the market. And I've always said I would much rather be lucky than smart. Are there some hedge fund people who have, in fact, made a lot of money? George Soros bet against the British pound and made a lot of money. There were people who sold short in 2000 and made a lot of money. But I am not willing to say that they were geniuses. I want to say that they were lucky, because for every one of them, there was a hedge fund that in fact lost money. No, I don't think there are geniuses. I think there are a lot of very smart people on Wall Street, but it is not possible to predict the future. And, you know, it's kind of very interesting how you talk about AI. I recently had to give a presentation on the economic outlook. And I thought, you know, just for kicks, I will go to ChatGPT and I will ask, can you give me an outline of what I should say? And actually, ChatGPT gave me a wonderful answer. It was a one-sentence answer. I cannot predict the future.
It might not necessarily qualify as genius, but you're able to write about Wall Street with clarity, which is really unusual because Wall Street, and I suffer from this myself, you speak to Wall Street executives and they absolutely fetishize complexity. Why does Wall Street like to make things sound so complicated? Is there something sinister or something that has to do with the ego?
Whether it's sinister, paid profession. Who says, listen, don't listen to anybody. Index fund and keep on investing period after period. If I'm charging you 2% a year to manage your money, I want you to think you can't do it yourself. So sure, you've got a vested interest. This is a very highly paid profession. And these guys do very, very well. Is that sinister? I don't, you call it sinister, anything you want, but is there an incentive to make it seem like it's very complicated, that ordinary people can't do it themselves? I think that's absolutely right.
The honest truth is, it's not necessarily that I think that the aura of complexity in Wall Street is coming from a sinister place. It more like it makes me feel bad or makes me feel dumb. And that I appreciate that your book is sort of written so that I can understand it. But it does make me think about exclusion in a small way, because so many stocks are owned by so few people in this country, because the very wealthiest people in America have such giant portfolios, that when the stock market goes up, inequality goes up too. Is there anything that can be done to change that in the future?
One of the things that's impressed me throughout my life is really how capable so many people are. And I think to the extent that we can eliminate discrimination, I mean, for example, opening up our jobs, our economic opportunities to women has been a very good thing, and I think has been generally helpful for women. I think it's the same sort of thing in terms of racial discrimination. I am absolutely convinced that rather than there being just a small coterie of geniuses, that intelligence is very widely distributed in our population. And so my own sense would be the more we can do with education, the better.
Why is it that we need geniuses, or really just the concept of genius? Is it like the way we need heroes and heroism, to help just explain the world and justify?
I think we need innovators, and I'm not saying that innovation isn't good. We absolutely do, but I'm not going to call them geniuses. And Jack Bogle would certainly have never have called himself a genius. But I think we do need innovators. There will undoubtedly be financial products that are actually good for one. I'm not a fan of Bitcoin. I don't think, I don't recommend that any investor buy it, but will there be improvements in the payment system in the future? And will there be digital currencies in the future that are stable and that are useful, as opposed to something that goes up $1,000 or down $1,000 in a day? Absolutely. And there's room for much more innovation in finance. So I think there will be innovation. There should be innovation. I just wouldn't call it genius.
That was great. Bert Macchio, thank you so much.
Thank you so much. I really enjoyed our conversation.
Stay tuned, because next we have a very far out genius. There is no one way to be a genius. You could be dreamy and far out. You could be scrupulous and scientific. You could work within the institutional establishment, or you could honor indigenous wisdom. All of those descriptions apply to this guest. Moraba Jah is a space environmentalist, an astrodynamicist, a spacecraft navigator, and the first African-American professor of aerospace engineering at the University of Texas. Last year, the MacArthur Foundation gave him a fellowship that is informally known as a Genius Grant. So if you want, you could call him a genius, you could call him Professor Jah, but you'd rather you call him Moraba. So, Moraba, welcome.
Great to be here, my brother. Thank you so much.
Really glad to have you. I really love the phrase, a stroke of genius. You were in Alaska with your family in a hotel one morning. I think you were taking a shower.
Yeah.
And you had this feeling and this vision that kind of struck you. And you know, whether or not it has anything at all to do with genius. Tell us about that moment.
You know, I'm in the shower and I felt a presence. And in my mind's eye, I saw flashes of scenes from like history and how in the beginning, whatever that means, it seems like there was this intergenerational contract of stewardship with the planet, but that humanity over time has mostly abandoned that intergenerational contract of stewardship and has forgotten about how interconnected things are.
Did that moment change the life you led and the work that you do?
Absolutely. So one of the people that I really look up to is Jane Goodall. I watched something about Jane where she said that she went to a meeting as a scientist and she left that meeting an activist. In very similar ways, I went to Anchorage kind of just this scientist, and I came back both a scientist and now this space environmentalist activist to really try to, I guess, really showcase how we need to protect orbital space.
If there's a kind of genius that means something to you, something that you would want to live up to, or something you'd want to recognize in yourself, what would that kind of genius like actually look like?
To me, the best kind of genius is simply allowing myself to let the universe go through me and I guess use me as some sort of vehicle for the work that I'm trying to do. And if I can keep myself kind of in the moment and in a place of compassion and empathy, then I think genius is just what comes through when you allow that to happen.
There's more garbage orbiting the Earth than there are working satellites. You now work not just to make sure that all that stuff is properly tracked, but to be an evangelist for expanding the way we think about environmental protection so that it includes all that stuff. What can those of us who are not scientists, what can we do to help you?
Every day, the technologies that we have are more and more reliant on these robots in the space that we call satellites. And we're tracking about 50,000 things ranging in size from a cell phone to the space station. 5,000 are working and everything else is garbage. So that's like 90% of the stuff is trash. The thing that most people just don't realize is that these satellites that are providing these critical services and capabilities, position, navigation, timing, communications, internet with the Starlink satellites, right? Any of these things can get schwacked, that's the technical term, get schwacked by a piece of junk, and that's game over. And then you lose that capability. So I think more and more people just need to be aware that, oh, well, that space, that's somebody else's problem. No, it's our problem because our way of life, our technology is now going through this infrastructure.
There's a real stereotypical idea of genius that I'm thinking of a kind of solitary genius working by herself or himself off in a fun cabin, you know? What does it mean? What would it mean to be a genius collaborator?
Back in the times of like the Renaissance, people looked at folks like, Da Vinci, Michelangelo, and they said, okay, these are geniuses in their own right? And people say, well, how can anybody be like another one of those? Science has developed so much beyond those days that there's no way for somebody to be able to be, quote unquote, this Renaissance person that knows very deeply things in all these different fields. Like those days are gone. Okay. But to me, the real genius is recognizing where you bring in smart people from other fields that complement and augment your own to solve wicked problems.
Yeah, connectedness, connections with one another. But my understanding, though, from a little bit of your writing, is that you were, I think in your childhood, you felt really isolated.
My mom was born in Haiti, and a citizen. My father, Sierra Leone, naturalized citizen. They got divorced when I was very young, and my father was just abusive. So at the age of 7, he kidnapped me, and 9 days later, they found me in some apartment in the Bay Area, put me back on a plane to my mom. And my mom had, we had a cousin that lived in Caracas, and so we fled the country because my mom's like, I don't want your father to ever find you again. He never did physically again. But growing up in Venezuela, I felt very isolated. I felt very alone. I came into contact in this void with what seemed to feel like an ocean of infinite love and compassion. And then I realized, I have a choice here. I can choose to meet my experiences with equal anger, or I can choose to act from a place of love and compassion and heal from my pain and make my healing be of service to others. And that's what I've chosen to do.
When the MacArthur Foundation, when they named you a fellow, they said it was because, they used a beautiful phrase, it's because you envision transparent and collaborative solutions for the Earth's orbital spheres. What are those solutions? And maybe when are they coming?
My inspiration for this comes from indigenous people, from traditional ecological knowledge, TEK, I call it ancient tech. And so for me, Western science and traditional ecological knowledge relate each other, but actually harmonize then that could be the way of the future, so that humanity does recognize interconnectedness, empathy, and stewardship.
Thank you so much for being here and sharing your story, sharing yourself.
Thank you, brother.
Truly enjoyed it.
Thank you.
Coming up next, a genius I would like to be when I grow up. Getting older is not easy, but the good news is time brings opportunities to become a more practiced, a more seasoned, a more you version of you. The guest who's sitting with me at this table is one of the most accomplished people I've ever met, and she is 17 years old. In 2021, Saila Avantgarde won the Scripps National Spelling Bee, but She considers herself not so much a speller as a basketball player, and she has multiple Guinness World Records in juggling. A few weeks ago, this young genius started the 11th grade. Zaila, so glad you're here.
Thanks for having me.
Truth is, we're all super different. We all have our own gifts. We all have our own limitations. When and how did you come to realize how special you are?
So that's a complicated question, I would say, because I didn't so much realize, I realized I was special, but I became special through a process of like training and stuff. If you look back on it, like I wouldn't say I popped out the womb like a genius or something like that. It's like when people would start to stop and look at me while I was dribbling or practicing at a court, people like would stop and look because, hey, look at this cute little girl. I was very small when I was that age. So this cute little girl dribbling 2 balls and doing all this between the legs, step backs into shots and stuff. So pretty early on, I realized that, yeah, I might be a little bit different than the average kid.
You won this like completely beloved national competition, but it's something that I think you no longer consider your main passion, or maybe you didn't even consider it your main passion then. What does basketball make you feel that spelling doesn't?
I would say basketball gives me even more of like the competitive rush. Like I just really love to compete and stuff. So like, and like spelling is more like, yes, it's not really like person to person competition. It's more like person versus dictionary, which is something you hear a lot from spelling bee people. It's like it's me versus the dictionary because that's where the words are coming from. Whereas with basketball, it's more like physical competition. Like, oh, I made it between the legs, and there's this girl on me, and I have to shield her off. And it's like more tangible competition as opposed to more philosophical.
A very different kind of genius. There's this.
Of course.
Widely considered to be the world before he was then charged with fraud. How should the rest of us look at people who get called geniuses, but maybe they still have shortcomings, just like everybody else?
Sometimes I feel nowadays it's so loaded. Like it's like, oh, it doesn't just mean, oh, look at her, she's a genius, like she's so smart or whatever. But like then like if you're living with that like your whole life, that kind of like puts a pressure on you. Like maybe once upon a time, like I listened to a podcast about Sam Bankman-Fried, but I don't know him personally, so I can't speak for him. But hypothetically, like his parents are like, oh my God, you're so smart. He goes to accelerated programs in school, and that's just putting pressure from a very early age. Like I'm a genius. I have to be a genius. I have to always be a genius. So I always feel like people like some of the scammers and stuff should get maybe just a little bit of sympathy, just a little bit, because they are like causing all sorts of trouble because like they've been considered geniuses their whole life, and they had a nice business plan or something, but then it didn't work out. And so what are they supposed to do? Go to all these people who say, oh, you're a genius. That just puts a little pressure on you to like give you that extra push you needed to try to maybe go into the murky waters of life.
The murky waters of life. I want to ask you one final question about pressure. I think that there is sometimes pressure in the United States, maybe everywhere, pressure on really smart people, genius or otherwise, to use their intelligence to like make a lot of money, to be successful. And like, I guess I'm thinking specifically about the finance industry and mathematicians, but you know, it's true of the business world. You know, you're smart, go make money in business. Do you have a favorite company or an industry or like a job that appeals to you?
I mean, I'm not like super like make millions of dollars, make millions of dollars. I mean, if anybody who's watching or listening wants to give me millions of dollars, please hit me up. However, like I'm interested in going to neuroscience or maybe working for NASA or maybe being an NBA head coach. Like, but I just realized I've never thought how much money would I get for this, because that's not really something like I think of, because you can make a lot of money, not to sound trite, but you can also be really miserable making a lot of money. So that's not even something I actually consider, like how much money will I make? I'll cross that bridge when it comes.
Zaila, you're going to cross the bridge. You're going to have a great time. I have had a great time talking to you. I'm thrilled you're here.
Thanks for having me.
When you ask geniuses, as I just did, what a genius is, or if we need geniuses, or if they're a genius, the answer you'll get will be genius. It turns out that there is not one way to be a genius of finance or of art or of language, just as there is not one way to think about genius itself. What matters is not what you call unusually high levels of intelligence or talent. What matters is what you do with it. Thank you so much for watching the first episode of the Business Week Show. We'll see you again for another one soon.
I am a completely virtuous person. I have no missing virtues, but I do wish I could think.
People clearly tend to be impatient where they should be patient.
I waste the most money on champagne. I love champagne every day. Every day I have 2 glasses of champagne. That's my thing. 2 glasses of champagne every day.
Risk is everywhere. It is to get out of bed, take a sip of coffee, step into the street, shake someone's hand, eat a tuna melt. Trust, risk, betrayal. Authenticity, rejection. And if you want to play it safe, doing nothing risks missing out on everything. We associate risk with what you might lose, but there is no winning in the marketplace without it. If anyone ever comes up to you and offers you something that is completely risk-free, buyer beware. Nothing ventured, nothing gained. I read this thing in Bloomberg Business Week about Silicon Valley Bank, which bought billions of dollars of bonds, a risk, and the value of those bonds fell, depositors went running out the door. The impact of that risk was one of the biggest bank failures in the history of this country. What does it feel like to take risk in business and in life? We're going to try to find out from actual risk takers. It's a risk. We're going to take it together, and we're going to take it tonight. It's the Business Week Show. Welcome to the Business Week Show. Tonight, risk. The very idea of who gets to take financial risk in global markets and how they go about taking that risk, and then how they talk about that risk, changed thanks to tonight's first guest. In 2012, Jamie Rogozinski logged onto Reddit, he started a new page, and he called it Wall Street Bets. In the years that followed, it got millions of users. It sparked real frenzies in stocks like GameStop and AMC, and at one point, it got its own Super Bowl ad. But as you may imagine, things did not work out all that well for everyone. And Jamie is here tonight to tell us all about it. Jamie, thanks for being here.
Thanks a lot for having me.
Risk is a funny thing because it freaks some people out, me included. But there's also something about it that is so attractive and so tantalizing. Why have you been so drawn to it?
Risk is a funny thing because when people say risk, especially when you frame it that way, the implication is either there's an element of randomness, right, or that's the outcome. It can be very, very costly because it's either unlikely to pay out or the actual, chance of losing might be really costly. But the way that I see risk is really, if you're able to actually quantify those elements, it's really a price that you pay for an opportunity. The way that I look at risk in that sense, it's not that I'm attracted to these thrill seeks. It's, I think this is worth it, right? I think I can identify these are the probabilities or possibilities, and sometimes I can't, but at least I can map them out. And this is what the possible outcome is. And I'm like, let's do this.
Okay, let's do this. Let's really talk about that. Because what you're saying is you're really talking about what it means for something to be risky. When you started Wall Street Bets, the way you've talked about it is that you said you wanted a place where people could talk about risky ideas and they could talk about it kind of proudly, risky trade ideas. You were enabling other people to take risks. So can you tell us, like, what worries did you have at the time that things potentially could go wrong for them?
My definition, my understanding and my position on risk has evolved, right? It's become clear as the years gone by. And early on, I justified this by saying, well, look, they're all adults. You have to be 18 in order to open a brokerage. Same thing if you go to a casino, everyone can go through. And when I said I wanted to be able to discuss high risk, I wanted to discuss high risk, high return, right? It wasn't just high risk is throwing your money out the window and having it go away with 100% certainty. This was high risk with the possibility of making money. And those two obviously go hand in hand. There are some that are irresponsible with it, but I can't make myself responsible in much the same way that there's gambling addicts, right? But outside of that, what I start seeing is a learning process, much like the one that I personally went through. I lost tons of money, but I walked away with so much knowledge and understanding and hands-on experience that a textbook can never explain to you.
I want to ask you about someone who sort of counts as your really, really complete opposite, Jack Bogle. He was the founder of Vanguard. He helped popularize the very vanilla, very boring idea that if you're an investor, you can diversify your bets. He ended up popularizing the index fund. How did it feel that you, in some ways, were kind of singularly responsible for changing the way that just millions of people think about investing? What did that feel like?
It was humbling for sure. It was unexpected to see the enthusiasm. If I were to have predicted the outcome of it, it would have been people looking down at this particular type of activity. Secretly, it was almost a goal of mine. But the beauty of it is what conservative investors do, Bogle, Buffett, whatever it might be, is no different than what gamblers that literally go to sit at a roulette table do. The changes in the vision that Wall Street Bets were, it demystified the idea of finance to people that might otherwise think it's just Excel sheets and discounted cash flows.
You also took a different kind of risk and you sued Reddit and you lost. Will you tell us a little bit about what that felt like?
Terrible. Yeah, that was probably in the top 5 riskiest things, if not 3. I get kicked out, and the stubbornness behind Reddit, they never answered. I tried pleading and sorries and threats and back channels and lawyers. They would just be like, no, you're done here. They got to a point where they said, no, we're done trying to negotiate. We want to take you to court with this. And I said, all right, well, I guess now I have to actually go to court. And so this is when I decided to countersue them.
So it didn't feel like a risk. It felt like just something you had to do.
I needed to do it for closure. I still had a chip on my shoulder and I couldn't fully commit to anything. I'd still kind of look at every time I'd see Wall Street Bets on the news or people talking about it, it would stiw have that kind of sour feeling. And so, and I needed to get past that. And I'm like, look, if I lose, I lose. And then it is what it is. And it would have been the fight of the century for me or my lifetime for me. But but then I can be at peace, right?
Is that how you feel now? Are you at peace?
Unfortunately not, because it's not over yet. I would have liked I would have liked for the judge to have been like, no, dude, you lose and it's over. You know, I don't want to cover too much on the legal side of things, but the judge, let's just say they left plenty of room for maneuvering. So unfortunately, it's not over.
I was told, I really don't know what it is. I was told you brought an object, I think, that maybe encapsulates risk. I think Natasha, my colleague, is gonna pass it to us, I do believe. What is this? Okay. All right. Tell us about this guy.
You're familiar with this?
Yeah. Remind me.
So this is from a meme, right? It says this is fine. It's a little dog, and this encapsulates so much of both my life and my ability to handle emotions, especially with the volatility of markets, but also life in general. It gives you so many ups and downs and so many ways to go through it. Oftentimes, when faced with adversity, my composure resembles this. It's like, yeah, don't worry about it.
Can I see him?
Yeah, absolutely.
All right. Well, this is mine now. Jamie, thank you so much for being here. Love having you.
Not a problem. Thank you very much for having me.
We have more risk coming up next. When executives across corporate America want to take a little risk or manage it, they often turn to Wall Street. And there is no entity on Wall Street with a more interesting relationship to risk, including Wall Street bets, than the company Goldman Sachs. And when I think about Goldman, which I do often because I'm a Wall Street reporter, my mind often turns to Maeve Duvally. Maeve is a longtime media executive and until recently was a managing director at Goldman. The truth of the matter is we have a cordial relationship, but a kind of antagonistic one because it's my job to report on Wall Street's money and power, and it's her job to push back. Recently, I finished her wonderful memoir, Maeve Rising, which is an account of her journey from being a lonely and angry person to the woman who is sitting at this table with me right now. Maeve Duvally, welcome.
Max, thanks for having me. You know, I would say we don't have a antagonistic relationship. I would say that we've locked horns through the years.
Okay,
is that a better characterization?
I think that's a better characterization, but I'm going to ask you in just a couple of minutes about all kinds of risks that you have taken,
okay,
personally and professionally. But I feel like we should start first things first.
Yep.
Why is risk, which is really I mean, it's just a fancy way of saying basically the things that can go wrong. Why is risk so important to the work that happens on Wall Street?
Well, from a market perspective, obviously managing market risk, managing operational risk that somebody pushes a button they're not supposed to, and the trade that happens is bigger than it was supposed to be. Those are obvious risks. And, you know, there's also kind of macro risk, right? That a central bank does something that people weren't expecting. But the kind of risk that I manage, and incidentally, everybody at Goldman Sachs is taught they have to manage, is reputational risk.
Okay, so I want to talk about 2018. I think my favorite page of the book. You put on makeup at the office for the first time. What I really want to ask about is, like, tell me about the day. Like, what do you remember in full about that day in 2018?
Well, it was the day of the Knight Badger Fellowship dinner, which you've probably been to. Knight Badger Fellowship is a fellowship for mid-career financial journalists at Columbia University. I'm a alumni of that program and also on the board of Knight Badger Fellowship. It's really a nice gathering. I usually look forward to the dinner, but sometime early that afternoon, I literally had this overwhelming feeling and desire that I needed to wear makeup to the event that evening. And once I had that thought, I couldn't get it out of my mind. And I bolted out the door and walked a third of a mile to the closest Sephora and bought a bunch of makeup, which I put on at the end of the day. And I went to that dinner with some makeup on for the first time.
You put on the makeup, you end up kind of negotiating with yourself. And you say to yourself that you basically have this barrel of femininity, and you think, like, should I just keep the lid on? You know, should I just keep the lid on? What would you have risked if you had done that?
I think that would have been impossible, but if I did that, I would have been miserable.
I was wondering when I read your book, how it felt to kind of risk your male privilege. You were risking your male privilege in a male-dominated industry.
I'm certain I had male privilege, and I'm certain through the years I exercised male privilege, but I wasn't really consciously aware of it. And to be perfectly honest, it's not something that really matters to me.
When it's time for you to choose a name, you pick one that means she who intoxicates.
Yep.
Which blew me away when I read it, because months before, you stopped drinking. Stopped drinking. Why did you quit?
Well, I had a series of progressively bad bottoms. My last bottom, which was in January of 2018, I holed myself up in an apartment. I only left to get alcohol. I drank around the clock, and I made an attempt on my life. So if I continued drinking, I'm convinced that I would have killed myself. After that episode, I made a decision that I wanted to live. And I knew if I wanted to live, I had to stop drinking.
Look, I mean, we have a professional relationship, so part of me feels like it's hard to say this, but it's also hard not to say it. You know, I'm glad you made that decision. A lot of people who are miserable, they don't get out of their misery.
Yeah.
You know, they stay there.
So the reality is there are a lot of drug addicts and alcoholics in the world, and the vast majority of them do not get sober and do not get clean, and they die alcoholic and addict deaths. That's the reality. So those of us who have made it to recovery, don't take it for granted, number one, and two, realize that it was a gift. And it's a gift that has to be nourished all the time, because if you take it for granted, you're going to wind up right back on the street.
When you came out,
yes,
you got, I think, literal bouquets from traders at Goldman. I think you got like these very warm notes from people. I think you got phone calls.
Yeah.
Those were from traders, and they were not from investment bankers. And you write in the book, clarity, investment bankers were quiet. I was so surprised by that. What can you explain that? Why did that happen?
I think probably some of my relationships with investment bankers were shallower than I thought. And I think investment bankers are very good at having really expansive relationships kind of across a wide group of people. But, you know, maybe some of those relationships aren't as deep as they would appear.
I love that you're accusing investment bankers writ large of a certain kind of interpersonal shallowness.
I'm not sure I said it exactly that
exactly
way.
as you said. No. I'm hoping that
You're
you'll.
not going to put words in my mouth, are
Well, I'm the engineer now.
you? Yeah.
I asked you earlier about male privilege. Coming out as trans in the milieu of, first of all, New York City, where we are, but also a corporation, which I'm sure, as I'm also keenly aware, has a lot of pressures too. Can you talk, if you want to at all, about, I don't know, maybe the kind of privileges that come with having a really good career as you do?
Sure. So I certainly have white privilege. I have the privilege of having worked at Goldman Sachs. I'm relatively well off. I live in the Chelsea section of New York, which is arguably the best place to be an out transgender person in the world. And even before I left Goldman Sachs, I began to, and I've continued to be, an advocate or activist for the LGBTQ community more broadly, because, not everybody is in a position to speak out. Not everybody wants to speak out, but I'm in a position to, and I want to speak out, so I'm going to.
Thank you so much for being here. I really enjoyed this.
Thanks for having me, Max.
If the names RZA, and Old Dirty Bastard mean anything to you, or if you've ever been moved by the music of Rap Called Quest or D'Angelo, then you owe a debt of thanks to Sophia Chang. As an artist manager and as a music label executive, she helped shape the landscape of a golden age of New York City rap in the 1990s in a way that would be totally under-celebrated if it weren't for her own book, which is called The Baddest Bitch in the Room. It's a book about the music business, but it's also a book about taking risks, some that work out and some that don't. We've talked tonight about personal risks. We've talked about professional risks. We've talked about financial risks. Sophia's story is a story about what happens when those things come together. Sophia Chang, welcome to the show.
I am so excited to be here. Thank you, thank you, thank you.
You manage Old Dirty Bastard without